can't bank crypto operating companies, employees of crypto companies, et cetera. We are allowed to do, we bank everybody, but the operating company, they said that's a high-risk activity, ask us for authority, and guess what? You would have never gotten the authority. So that came up as an issue. So at the end of the day, it's about getting these regulations right.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We're looking at gains, although slight, on futures. And we actually closed in the green yesterday, so we could be on track for 5 days in a row. One of the best weeks this year. NASDAQ futures also up. By the way, if the S&P 500 in cash closes at 59.79, we'll be back in a bull market. That'll be a 20% gain since the lows of April. You hear the opening bell of the New York Stock Exchange, ALS United, a charity organization, ringing the bell there. But down at the NASDAQ, you've got Galaxy. There's Mike Novogratz in an awesome shirt, and he's very happy because his stock is up more than 2,000% over the past 5 years. Katie, which stocks are you watching?
I'm watching Novo Nordisk ADRs like a hawk because Novo Nordisk has ousted CEOs Lars Froggaard Jørgensen due to struggles with growing competition for its obesity drug Wegovy, which has led to quite a decline in the share price, about 53% since mid-2024. That was specifically called out in the press release, which was stunning to me. You can see ADRs down another 3% right now at the U.S. market open, down about 21% or so year to date, Matt.
All right, Charter is going to buy Cox Communications. We've been telling you this morning, in a nearly $35 billion deal that unites two of the biggest U.S. cable providers, and Charter shares are higher, 1%. Not always the kind of thing you see when there's a big deal, certainly not for the acquirer. We're back with Alpine Saxon Woods Chief Market Strategist Sarah Hunt, and another day, another deal. Is M&A really starting to pick up here?
I think it is. I mean, that's one of the things that we were looking forward to collectively as investors this year, was that you were going to have a better M&A environment because you were going to have a potentially less regulatory environment. It's interesting that this is going on, but if you think about all the different pieces that these players and all the different pipes into the consumer that they've had, it's not surprising that those are all changing now because we get all that information in different ways. So, I mean, the market seems to be looking at this fairly positively, but pre-market it's been a little bit up and down. So we'll see how that reaction goes.
You've seen a few deals this week. You've also seen a few CEO shakeups. United Health earlier this week, Novo Nordisk today. It was interesting to see Novo Nordisk specifically call out the share price, that mid-2024, the decline since then, down about 53%. But there's plenty of companies who have fallen by similar magnitudes since that time. What do you make of that?
I think it's an interesting question as to what else was going on behind the scenes, because if it's just a share price issue, go back a couple of years and all of a sudden that share price looks like it's been much appreciated, as opposed to just looking at the period of time from when they almost had a monopoly on the substance to now. And I think that there are other things possibly from a strategic standpoint, like maybe they weren't developing an oral version of this. Maybe there are other things that are going on. But it seems a lot to call out just a stock price move for this, especially such a short time frame for that.
Especially when you consider that Lars Froggaard Jørgensen has been CEO since 2017. He's not new. In that time, looking at its peer group, Moderna down 80%. And then you have Biogen down by about 47% or so. So they're not alone in seeing these types of declines.
Yeah, not alone in companies that saved the world seeing these kind of declines, right? In terms of, Katie was going through stocks this morning that have halved in value in the past, year to date or the past year. There are a lot of them. You like any of those losers? Has anything been thrown out here after Liberation Day that hasn't recovered?
Well, I think that there are some things that have already started to recover, but that were part of this sort of picks and shovels of the AI pipeline. And you had a lot of stocks that were riding up on the idea that we needed to build a lot more energy infrastructure and a lot more data centers. And I think you've seen some of those come down to more reasonable levels. I think some of the main big seven have already had pretty big move up in price, but there are some issues individually with some of them as well, like the Google antitrust issue and some of the other things that are going on. So I think that there are places where it's still interesting to look, but I think you have to be very mindful now of valuation and cash flow because the equity market indices have come back so high, and a lot of those valuations have come right back as well.
I want to talk a little bit about where we go from here. We were talking about the other day how there's still a bunch of recession calls out there, not for an outright recession, but basically you can't take it off the table that it's a coin flip at this point. I mean, where do you stand on that? Because you take a look at the economic data, it's pretty much held up. You've had inflation come down a little bit. It seems like activity hasn't slowed too much, but it's the future that we're all scared about.
And I think that it's the fact that we don't know what kind of lags have gone on in the system because of this. Investors are very quick to look at data and want an immediate reaction. The real world doesn't move that fast. The ships don't come in that fast. So stuff that was canceled, stuff that hasn't been ordered, what ordering looks like in May, all of these things are going to matter a lot in September and October and November and into the holiday season. We don't know yet what that looks like. It could be much more problematic than we think it is right now. It's not fair to say that there's no inflation because of this, because we haven't really had time to see it. And you see companies like Walmart pointing that out right now and saying we're going to be raising prices.
What do you do, though, if we muddle through this? A lot of people would have said, this tariff announcement is an absolute disaster, just like Brexit was an absolute disaster. But then you don't see the British economy tanking, right? It's just kind of ground on.
And I think that that's one of the lessons that we continue to learn, which is that even when you have adverse circumstances, people still do the things. They live their lives, they go to work, they do a lot of stuff. If they pull back on the margin, you get an economic slowdown. We may have a shallow slowdown. It may be worse if you end up with critical component shortages. We don't know that yet, and I think that's part of the issue, and it may be why there's change in tone in terms of we're going to put some numbers on the board for people in the next 2 to 3 weeks, because the uncertainty is what hurts markets more. And right now we're back to thinking we can look through whatever this happens because it's not going to be that bad, while we still don't quite know what it's going to look like yet.
Sarah, great to have you on the program today. Thanks so much for joining us here on set. Sarah Hunt there from Alpine Saxon Woods.
Here I go. It's time,
Go.
Time for my walk and talk. Let's break down this market right now. You have the S&P 500 higher about 0.1%. All it needs to do is finish green for a 5th straight days of gains, which would make this one of the best weeks of 2025. If you look at breadth right now, you have 200 names in the green. You have slightly more to the downside, but it's some of the most important companies that are climbing right now. Alphabet, NVIDIA, Tesla. When you take a look at the points basis here, what's contributing to the upside, those are your big guys. On the downside, though, you have a pretty big weight in Microsoft, in Broadcom, in Meta, and Applied Materials in earnings story today. So a real tug and pull when it comes to the tech sector. And on that note, let's take a look at the sector level right now. What's gaining, what isn't? Right up at the top, you have communication services. A lot of that is coming from Alphabet, though Charter helping out a little bit as well. You go down the list, pretty much an even split, slightly more green, but at the bottom, you do have tech, that tug and pull that I was talking about, down only 0.1%, but at the bottom, materials off by about 0.4%, Matt.
All right, we're going to talk when we come back to D.A. Davidson's Gil Luria. He is calling for a complete breakup of Alphabet. He joins us next to explain his call. This is Bloomberg Open Interest.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Mellody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Welcome back to Open Interest. A quick check on stocks here because that 5-day rally is fading a little bit. The S&P 500 still higher by about 0.1%. We were looking at more robust gains pre-market, but fading across the board right now. The Nasdaq 100 up by a similar magnitude, and you can see the small caps have given up their lead, now neck and neck with everyone else. We'll see how that develops. But it's time now for our top calls. Some of the analyst action in focus this morning, and first up, HSBC is upgrading Carnival on strong booking trends. The firm says that the company has made solid progress on its profit recovery. Next up, we have Foot Locker getting a downgrade over at Barclays. Remember, earlier this week, we learned that Foot Locker is being bought by Dick's Sporting Goods for $2.4 billion. And finally, we have Caterpillar getting upgraded over at UBS thanks to de-escalation when it comes to tariffs, some progress being made with China. That's worth an upgrade, but you can see shares down about 0.4%, Matt.
All right, a big earth mover to watch there. Let's get to another top call from earlier this week. D.A. Davidson's analyst Gil Luria says one of the biggest tech companies in the world would be more valuable if it was broken up. Luria writes, the only way forward for Alphabet is a complete breakup that would allow investors to own the business they actually want. And I'm pleased to say Gil joins us now. So, Gil, it's already worth quite a bit. How much do you think it would be valued at in pieces?
If Google was to break up into all its pieces into each individual business, we think the stock could be worth $300 a share. We think that right now, everything is trading at a 15 times earnings multiple. That's a very low multiple for businesses like Waymo, Cloud, YouTube, and potentially the TPU business. Those businesses would be trading at 50 times our earnings or more if they were independent. And Google is really holding them back by keeping them with search, which is now a tainted business, a controversial business that investors are really not willing to put a lot of value on.
Well, it's interesting to read this call in and of itself, but also when you put it against the regulatory backdrop right now, because you do have regulators attempting to break up this company, and you're saying, actually, this would be a good idea. Is this something that you see as actually likely to happen?
This is a catalyst. It's a potential catalyst. The Department of Justice telling Google, break up your monopoly is a potential catalyst, and the company should be leaning into that. Instead of dragging this out and dragging it out in court and having it influence all its decisions, instead Google could just say, okay, we'll spit off the ad network. That would be great, because then that business would trade like the Trade Desk, which again is much higher. and then they could spin off YouTube. Then that would trade like Netflix, which is much higher. Unfortunately, that's not what the management team is doing right now. Right now, they're just dragging their feet. They're going to fight it in court. They're going to try to keep the company intact, which again is not in the best interest of shareholders.
So why? I mean, Sundar Pichai, Ruth Porat, Ken Walker, these are smart people. Are they disincentivized to make a move like that as executives?
They are too focused on profits, on short-term profits. They know that if they spun off all these businesses into individual pieces, they lose some of the synergy of having them in one place. So let's say that instead of earning $11 a share this year, if all the individual pieces were broken up, they'd maybe only own $10 a share. But again, we argue that you're getting paid 15 times the $11. If you were able to get paid 50 times on some pieces of the $10, shareholders would own a much bigger business. So management team is focused on profits in the short term instead of focusing on shareholder value, which is their job.
And Gil, I will note that you're not alone in calling for this. You also have Needham analyst Laura Martin written that the company is worth more in pieces than together, echoing your call here. When you take a look at all the different components, basically all the parts of this business, what do you think the weakest link is?
The search business. While there was some argument whether the search business could continue to be a monopoly and grow at these rates, that really ended when the head of services at Apple pointed out that Google search is now declining on the iPhone. That tells us we've hit that watershed moment where people are ChatGPTing things instead of Googling things. So that business, even if you believe that Google can maintain some of its monopoly here, clearly that's going to be controversial. Investors don't want to invest in a business that could be a melting ice cube, but they do want all those other pieces.
I've noticed that, did you realize the kids are calling ChatGPT Geppetto?
No. What kids? Who?
I've heard so many younger people say, which for me, that's a lot of people, right? But Geppetto. I feel like AI just cancels the need in some way for using Google search the way we used to, Gil, right? I mean, it's the first point of entry, and then you click on the results that you get from ChatGPT or Grok or Gemini, whatever you're using. So that seems to be, like Cox Cable, like it's done.
It does, because all Google gives us, right, is 10 blue links and a lot of sponsors around that, and we have to find the answer. The chats are giving us the answer we are seeking, and while right now that's all types of questions and some of them are not commercial, increasingly the chats are going to be commercial. What vacuum cleaner should I buy? Which toothpaste should I buy? What is the recommended medication and how to take that? What insurance is the best in this particular situation? The chats are going to give that answer. Once they start doing that, you better believe they'll start selling ads. And that's the point where advertisers, instead of putting all of their digital advertising budget into Google and Meta, are going to start having other choices. First and foremost, that's going to be these chat engines like ChatGPT or Grok, XAI. They're going to start allocating some of those digital advertising dollars. The reason that hasn't happened yet is that there's no ads on ChatGPT yet.
Right.
They haven't turned that on. Clearly, they will. We're getting closer. The most recent hire they brought in
yesterday and the day before.
At selling ads. It's clear that that's where this is headed.
Yeah, it certainly seems that AI is an existential threat for the search business. Really appreciate your time on this Friday morning, Gil. That is Gil Luria. He is head of technology research over at D.A. Davidson. And Matt, one of the reasons why this caught my eye, this call that Alphabet should be broken up into pieces, is because spinoffs are so hot right now. Bloomberg actually has an index of spinoffs. The ticker there is BN Spin. And if you take a look over a long-term basis, we hit a record high earlier this year. We're going to pull up the chart. We're come back a little bit down, but
that's
back
10
again.
years.
That's 10 years. So you can see that, especially in the past just couple years. They've become even more popular. GE Vernova is a great example. It's up 30% year to date.
So it's true. And when you pointed that out, I looked it up on the comp screen. I always use comp.
It's my favorite
defaults
tool.
to 5 years. And the spin-off index has crushed the S&P and the NASDAQ 100 over the past 5 years.
Yeah.
But if you look at it over 10 years, then the NASDAQ 100 actually does quite a bit better. So
yeah, well, there's been more
It's a
spin-offs
recent-
in recent
it's a
years,
recent
so
thing.
that has helped performance a bit. Something we'll continue to watch on this show. But you know what else we're watching?
what else are we watching?
We're watching Novo Nordisk.
Yes.
It's lower. Eli Lilly is up right now on news that the Danish drug maker has ousted its CEO. We'll discuss next. This is Open Interest.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne Marie Hodern in Buenos Aires, Argentina, and this is Bloomberg.
The Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. We are 57 points away from a bull market. Check it out. The S&P 500 right now trading at 59.23, so 56 points away from 59.79. That's where we need to be to climb 20% from the low in April. The NASDAQ 100 already there, gaining 0.1%, as is the S&P. Take a look at what's going on with some of the individual stocks. AMAT down on earnings, off 6%. Charter Communications, even though it's making an acquisition of Cox, it's gaining 2.7%. UNH gaining back a little bit of what it's lost, but it's gotten absolutely crushed over the last few days and really down 50% this year. Coinbase is rising after concerns yesterday of a hack and a potential DOJ probe. Eli Lilly up, and this is actually Eli Lilly, Novo Nordisk, Katie. Interesting, because this is the market, I think, saying, oh, Lars Fruergaard is out, let's sell that stock and let's buy Lilly instead. It's really the market, I think, making a judgment on Novo's move.
Yeah, it's really interesting to see. It's basically like a mirror stock reaction there in those two companies. So let's discuss it more now with Sam Fazeli. He is Director of Research for Global Industries and Senior Pharma Analyst for Bloomberg Intelligence. Of course, we're talking about the news that Novo is ousting Lars Fruergaard Jorgensen as its CEO. Their reasoning there was in part because the stock has declined so meaningfully since mid-2024. And Sam, I'm curious what this will fix, because you think about where Novo stands right now. They've lost market share in the U.S. market to Eli Lilly. They had underwhelming results for CagriSema. It seems like, you know, it's going to be an uphill climb here.
Yeah, I mean, Katie, in the pharmaceutical industry, magic wands don't really exist. It takes several years to fix a pipeline or to change the direction a company is going. I'm wondering how much of just a rant this was by the shareholders saying, look, we've just had enough, let's move on. The company has done the sorts of deals that perhaps it should have done 5 years ago, looking for new assets, looking for actual orals, not oral versions of its drugs that are injected. And so it lost some of that, but it will take another 4 or 5 years for those things to come fruition. It's already done those deals now. So, but maybe this is just a way of saying, look, we realize that we lost some of that initiative. And if I may, I want to just highlight quickly, this is the company that was leading Lilly on everything. They were at least neck and neck on insulin. They were the first people to bring these GLP-1s to market for diabetes. They were the first to develop a really successful long-acting insulin. Here, they lost the initiative when Lilly developed Zepbound. That's when it all started happening.
Sam, I always think of the business matrix, with the rising stars, the cash cows, the dogs, the question marks that you learned about in college. I guess Wegovy and Ozempic, are they not rising stars anymore? Are they just cash cows now? And does Novo Nordisk have any rising stars in the pipeline?
Yeah, so Matt, this is a really good question. It's more about rising star, but whose star is rising most? And Lilly's star is definitely rising most. They've done all the right things. They took a gamble on this drug, tirzepatide, that became Zepbound. People didn't expect this to work like this. The biology was confusing at the time, and this is going back 7 or 8 years. So they took a gamble, not an expensive gamble, and it really paid off. Then they've got a real oral drug. Now they've gone for triple action. They're covering the bases, and of course they have other business, cancer, Alzheimer's, etc. It's just a matter of relative rise, right? This market's growing. Wegovy will continue to grow, but I'll tell you who's going to get the most of the lion's share is going to be Zepbound for the foreseeable future. It's a better drug.
All right, Sam, really appreciate your analysis here on this big corporate news. That is Sam Fazeli. He is Director of Research for Global Industries and Senior Pharmaceuticals Analyst over at Bloomberg Intelligence. I also want to point out Viking Therapeutics. Of course, we're talking about the Eli Lilly rise on the heels of this news. Viking is working on an oral obesity drug as well, and shares are shooting higher this morning.
I always think about this. They seem to be in a race, which one can make you lose more weight? But not everybody wants to lose 180 pounds, right?
For some, it's the quality of that weight loss.
If there's an oral drug where you only lose like 20,
yeah,
that would be pretty good.
Are you talking for yourself?
No. Coming up in the next hour, University of Michigan's Joanne Shu on the latest consumer sentiment print. This is Bloomberg.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turned a profit.
Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure, and there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything. Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Welcome to Bloomberg Intelligence. This is Paul Sweeney. He's run off for a few minutes, but he will be back. I'm Isabel Lee, and I'm filling in for Alex Steele. We're going to have an exciting Friday ahead of us, but first, let's check in with markets. We have John Tucker.
And we have data, because we are data dependent, Isabel. University of Michigan, the one-year inflation expectations, 7.3%. And that's kind of a wow statistic. The expectation from Bloomberg's economists surveyed by Bloomberg for 6.5%. The 5 to 10-year inflation expectation coming in at 4.6%. Again, the expectation there was for 4.4%. Right now, out of the gate, the S&P 500, 3 points higher at 5920. The Dow Jones Industrial Average 6 points higher at 42,331, and the Nasdaq 100 right now 4 points higher. Of course, the big deal news of the morning. Charter Communications combining with Cox Communications, and the proposed transaction values Cox at an enterprise value of about $34.5 billion. A bit of a shocker this morning. Novo Nordisk replacing the chief executive officer Lars Jorgensen. This follows a 53% decline in its share price over the past 12 months. I'm John Tucker. That's your market update. Isabel and Paul.
All right, John Tucker, thank you so much. We appreciate that. Isabel Lee sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio. Let's go to Governor Murphy. He's in Aberdeen, New Jersey. Been there. Nice place to be. He's talking about this rail strike that is in its first day. Let's take a listen right now.
Into New Jersey's first rail strike in decades.
guys
And I want to make sure we get one thing straight up front. It did not have to come to this. Here with me this morning, as he was last night, is the outstanding president and CEO of NJ Transit, Chris Calori. He and his team, many of whom are here with us this morning, along with our entire administration, again, many of them represented this morning, have been working around the clock, frankly, for months to avoid the strike. And now they are continuing to work around the clock to rearrange our state's entire transportation system so it can, to the best of our abilities, meet the needs of New Jerseyans. And I will ask Chris to elaborate on those details in just a few minutes. At this moment, our single highest priority, in addition to making the system work, just as it has been for the past several months, is reaching a fair and affordable deal as soon as humanly possible. A deal that provides NJ Transit's employees, including our locomotive engineers, the wages and benefits they deserve, without being forced to raise costs on riders, commuters, and taxpayers. As I said last night, here in New Jersey, we are proud to be the quintessential organized labor state. As Chris will attest to, 14 of the 15 unions with which NJ Transit engages are in complete harmony. NJ Transit's employees are the backbone of our public transit system. But the workers who depend on NJ Transit are the backbone of our entire economy. They deserve a public transit system that is reliable and affordable, period. So in our efforts to balance fairness on the one hand with affordability on the other, back in March, Chris and the BLETS representatives shook hands on a contract that would pay engineers roughly the same hourly wage, literally give or take 10 cents per hour, as engineers with the Long Island Railroad. In other words, it would have given their members almost exactly what they have asked for, being paid the same wage as engineers at other transit systems in our region. And crucially, that contract would have provided our engineers their hard-earned raises without blowing up NJ Transit's budget. At the time, BLET's General Chairman Thomas Haas called the contract that was agreed upon, and I quote him, fair and fiscally responsible, end of quote. But now, just a couple of months later, a small handful of locomotive engineers have walked off the job and shut down our entire transit system. I think Chris will correct me if I've got the math wrong. We're talking just under 400 engineers in a total workforce of about 12,000. It is frankly a mess of their own making, and it is a slap in the face of every commuter and worker who relies on NJ Transit. But we're not here this morning to point fingers. We are here to demonstrate that our administration remains ready to get NJ Transit back to full speed and to provide the BLETS members their hard-earned raises. Of course, no deal under these circumstances, or probably any other, is ever going to be perfect. The fact is, mass transit systems across the country face a sobering fiscal reality, in part due to threats to federal funding, and those threats and those realities cannot be ignored. I mentioned last night SEPTA across the Delaware River threatening to cut services by 45% and at the same time increase fares by 20%. That will not ever be the case here in New Jersey. And putting NJ Transit on stable fiscal footing, as we have worked relentlessly to do for the past now 7.5 years, requires tough calls and compromises from all of us, lawmakers, workers, employers, businesses, and especially our commuters and taxpayers. Witness last year's painful corporate transit fee, and I might add, that is in sharp contrast. We dealt within the four walls of New Jersey with a very challenging fiscal reality that, again, is not unique to New Jersey, but we're also not immune, as in contrast to the MTA's answer, which is to rip off New Jersey commuters going into Manhattan. We chose to solve that challenge within our four walls, and we will this one as well. But I, for one, refuse to pass the buck or increase taxes on hard-working New Jerseyans for the same or even more likely reduced service. That's not going to happen. That is untenable. And the truth is, we can deliver a fair contract to every New Jersey Transit employee without abandoning our hardworking neighbors. And let me be clear, this is also about reaching a solution that sets the next administration up for success. The contract being negotiated at this moment is about the long-term future of NJ Transit, well after I leave office. Literally a tiny fraction of any deal that we reach will impact our remaining 8 months. And the easy play for Chris and for me is to just cave, fold, and kick this thing down the road. And we're not doing that. So we're holding the line for the next governor and the next administration so they do not inherit a NJ Transit that is on the brink of fiscal collapse, but is in fact in a strong state of health. That is what it means to fix NJ Transit, leaving the agency in better shape in every respect, but especially in fiscal terms, than when we entered office. I was asked last night if I still stuck by my statement, we'll fix NJ Transit if it kills me. And the fact of the matter is, I apologize, facts matter here. That's exactly what we've been doing for the past 7+ years, and especially over the past 5 or 6 months since Chris has been at the helm. The stance that we're taking to get a fair deal for our workers and not blow up NJ Transit's finances is exactly a central tenet in fixing NJ Transit. If you look at our on-time performance, I should have put an asterisk on my commitment, but for the fact of what Amtrak is up to. If you look at on-time performance over the past 16 months, especially on the recent months on the non-Amtrak lines, it's mid to high 90%. Even on the Amtrak lines, it is regularly in the mid to upper 80%. We mentioned last night, I think the board approved 250 new double-level, two-level rail cars this week. That brings the total to 400. We'll have an entirely new fleet when all of that comes into fruition. We'll have a new locomotive fleet. I think you guys approved the board 12 this week, 12 new locomotives. We've got new train stations in Lyndhurst, Elizabeth. The Portal North Bridge is nearing completion. Many other stations. The facts, I apologize, let's not let the facts get in the way. We've had bumps in the road. Last summer, particularly last June, was unacceptable. This is a bump in the road. Chris will walk you through how we're dealing with it. But the trajectory is undeniable. And again, I wish Amtrak could punch at their weight, and the trajectory would be even more compelling. So back to today, what the people of New Jersey need right now is for the members of the BLET to step up and meet their obligations to the public. Let's end this strike, as we just said to a couple of their good members a few minutes ago. Our doors are open. We are ready to restart negotiations literally this second. But we need the BLET to come back to the negotiating table in good faith. Our doors are open. They will remain open. I thank you for coming out on short notice. And with that, please help me welcome the President and CEO of NJ Transit, Chris Calore. Chris?
All right, that was New Jersey Governor Phil Murphy at the Abergene, New Jersey train station talking about this day one of the strike between the New Jersey Transit Engineers Union and the railroad, which is displacing a lot of folks here today, including myself, trying to figure out how to get back and forth to work every day. But let's get right to some reporting on the ground. Monica Ricks joins us here. She's a Bloomberg News reporter. She's at Penn Station. Monica, what's the latest news coming out of this? We just heard the governor here saying we need to get back to the negotiating table. What are you hearing there?
Well, the governor says that they're ready to negotiate, but according to the union, they're waiting for a call from NJ Transit. So I think that they're ready to negotiate as well and get these contract talks underway again. 95% of the contract issues that they had have been hammered out, but they just are stuck on pay. And what these workers are saying is that they just want fair pay, because a lot of their competitors, Amtrak, PATH, they're making at least $10 more an hour. And the union president told me that if any of these carriers were hiring today or tomorrow, a lot of these workers would be going to them because they pay more.
How long do you see this playing out? Like, can they walk out for weeks or a couple of days?
Yeah, I mean, time will tell. This can go on, as long as these talks take to really iron out a deal. The last strike that happened was in 1983. That was more than 40 years ago, and that strike lasted about 34 days. There was an impending strike that could have happened in 2016, but that was averted. They hammered out a deal the night before, so it never happened. But, this could play out for weeks. They're hoping it doesn't come to that because these guys want to get back to work, and all of these commuters want to be able to take the train and not have to deal with any alternatives.
Is there any sense that there will be some mediator, whether it's, I don't know, the President Trump or some other federal government official that may come in and try to push this forward?
There were negotiators from the Biden administration that tried to fix these contract negotiations twice last year. There were federal mediators that both sides met with earlier this week, and still nothing was really ironed out. So I don't know what it's going to take at this point, but they are on strike right now, and all rail service is down. So maybe that'll push them to actually make a deal, because there's going to be a lot of commuters. They're going to have trouble getting to work, not just today, but Monday, and however long this takes to hammer out.
Monica, thank you so much for your reporting. Really appreciate it. Monica Ricks, Bloomberg News reporter. She is stationed at Penn Station in Midtown Manhattan. I'm sure there's a lot of frustrated commuters there. On the economic front, we got some University of Michigan sentiment data today, just coming out at 10 a.m. Wall Street time. Not good. University of Michigan sentiment came out at 50.8. Consensus was 53.4. Last period, it was 52.2. This is the second lowest rating or measurement on record. Joanne Shu joins us here, Surveys of Consumers Director at the University of Michigan. Joanne, put into context the numbers you guys reported today.
Essentially, we should think of this as very little change from April. Over the course of this year, we've seen consecutive months of very, very strong declines. This most recent one was a very small decline and essentially flat. But as you pointed out, this is a very, very low reading. Consumers continue to feel very dour about the economy. They're worried about the impact of tariffs on inflation and also the impact on unemployment. They're really worried about multiple dimensions of the economy. That was what they saw last month, and they continue to see dark times ahead.
And nearly 3/4 of the respondents spontaneously mentioned tariffs, and that topic crossed partisan lines. Can you tell us what you thought of that?
We've been seeing a rising share of consumers spontaneously mentioning tariffs. A few months ago, it was really a fairly small number of people, and now it's almost 3/4. It's cutting across partisan lines. It's really on everyone's minds. And at this point, consumers are really waiting for the other shoe to drop in terms of its impact on inflation. And it's not just the fact that tariff policies have come in pretty high, but it's also the uncertainty and instability of it. So following this most recent pause on some China tariffs, we saw a little bit of improvement, but it really wasn't enough to reverse the sour readings that we've been seeing for the last few months.
University of Michigan one-year inflation outlook. The consensus was 6.5%, which is an elevated number. It came in even higher than that at 7.3%. What's driving that?
Again, it's the uncertainty and instability of tariff policy. Consumers are aware that inflation right now isn't necessarily reflecting those tariffs yet, but they're waiting. They're really bracing for the impact. And interestingly, the increases in both short and long run inflation expectations were very much being driven by increases among Republicans. So even those who might broadly be in agreement with the president's economic policies are quite worried that the outlook for inflation has worsened recently.
Joanne, thank you so much for that. Joanne Shu, Surveys of Consumers Director at the University of Michigan. Again, some significantly weaker than expected outlook from the UMich survey. So we'll stay on top of that, of course. Market Drivers today is brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. Isabel Lee sitting in for Alex Steele. I'm Paul Sweeney here. We're going to have more coming up for you. Anne-Marie Horder, Bloomberg Surveillance co-host on Trump's Mideast trip. And Marky Patel, Senior Portfolio Manager at Allspring Global Investments. We'll get her call on this market. S&P is up 9 points. The Dow's up 29. The Nasdaq's up 43 points. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. This is being brought to you by Oracle. Attention growing businesses, Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. Right now, the major averages, they are slightly higher. The S&P 500, 10 points higher. Right now, 59.26 on the index. The Dow Jones Industrial Average is 39 points higher right now. That's up about 0.1%. And the tech-heavy NASDAQ 100, 22 points higher. That is up 0.1%. Consumer sentiment falling to the second lowest level on record. And in addition to that, from the University of Michigan, the figures that we got at the top of the hour, the inflation expectations, that was a bit of an eye-popper too, climbing to multi-decade highs. And you can blame a concern about the tariffs. And of course, the big deal of the morning, Charter Communications combining with Cox Communications. Shares of Charter right now, they are up 1.6%. Novo Nordisk replacing its CEO. It follows a 53% decline in the share price over the past 12 months. Also, we did have other deal news. Vistra buying the national natural gas assets from Lotus. The price tag there, $1.9 billion. This is trying to help fuel the demand for data centers. And I don't know if you saw this one. Sports news. San Francisco 49ers striking a deal to sell about 6% of the team. So values the team at a record-breaking $8 billion. Wow. It actually speaks volumes about the current state of sports investing as you have private equity money and tech wealth increasingly trying to elbow their way into the luxury suites.
Yep, it's a big trend, private equity coming into owning sports. There have been some rule changes, so that allows these folks to come in, which is a whole nother group of potential buyers.
That is a pretty rich valuation. Yep. Anyway, we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Isabel and Paul.
All right, John Tucker, thank you very much. We appreciate that. Isabel Lee, she's sitting in for Alex Steele, who's on assignment today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. Again, we've got this market. If you look at the S&P 500, almost gaining back, well, year to date, it's flat, and we've gained back almost all we've lost from the peak there. So quite the round trip there. Margie Patel joins us. She's a senior portfolio manager at Allspring Global Investments. Hey, Margie, what do you make of this bounce back in the stock market here? It seems like, I don't know, a little premature, a little overdone, because we still have a lot of uncertainty out there as it relates to tariffs and impacts on the economy. Again, we got the weak University of Michigan data today. What do you make of it?
Well, I think it shows really the earnings powers of companies. The early numbers for the first quarter looked like the GDP was basically flat or a little negative. And in spite of this, earnings this quarter looked like they were about 10% up. So it shows that companies can still increase their profits, even with the backdrop of very flattish GDP. And I think it says with the market about sort of unchanged year to date, even though we had this earnings increase of about 10%, it shows there's been a little bit of deflation in price earnings ratio, making stocks a little bit more attractive today than say they were at the beginning of the quarter. So I think more of the same. I think the market's going to continue to surprise on the upside over the rest of the year.
That's interesting because we've round trip back to January market levels, but EPS is lower by around 6%. And we have a lot of Wall Street strategists really sounding more and more pessimistic. What gives you the optimism that we will see more upside?
Well, I think the most important thing is there was a lot of sentiment, especially last year, up till, say, a month ago, about the likelihood of a recession. People have backed off that. But really, when you look at what causes recessions, all our recessions basically have been caused by the Fed, where they slam on the brakes, pull out liquidity, raise short-term rates. We just completed the upcycle of that. And when you look at the Fed now, the last thing they're going to be doing is starting on a multi-month upswing in interest rates and tightening credit. So as long as the Fed is neutral, where they're looking at maybe cutting rates a quarter point or raising rates or more or less doing nothing, that's a very positive backdrop for stocks I think that's the most important thing why we won't have a recession is the Fed isn't squeezing liquidity to precipitate a recession. So I think corporate profits are going to chug along, maybe more modestly than last year, but still pretty good and better than risk-free alternatives for sure.
What do you feel about tech stocks here, Margie? I mean, for a market to move one way or the other with any conviction, it seems like technology needs to be the leader. Do you think tech can lead this market higher?
Yeah, I think it will be simply because there's more organic growth potential in the tech sector than really any other sector. And a number of those names that are very high growers actually have that PE compression that I mentioned. So the stocks are actually priced a little more cheaply for their growth rate. And I think what you're seeing so far this year is maybe a little bit of striation between those companies in the tech space that have a more sure path of higher profitability and those that may have a roadblock or may have a deceleration. So I think it'll be a little harder to make tech profits over the rest of the year than it was last year when basically everything went up, but still a good sector.
Which sectors are you steering clear from?
Well, I think tech is going to be a very good sector. Again, maybe not as good as last year. And I think many of the industrial companies are going to surprise on the upside. I think many people still aren't convinced that industrial companies can have above average earnings growth, but I think we'll see that, especially those connected to increasing and improving the reliability of the electrical grid. Also, I think we will see the benefit of more capital expenditures here in this country, and also the data centers. That's been a pretty frothy area, but I still think that'll be a source of a lot of growth for industrial companies. So we think those two sectors will do particularly well. And we think energy sector, although it's a volatile sector, we think those names related to gas will continue to have secular growth, either through LNG, liquefied natural gas exports, or through the need for basic load electrical power fired by gas. So we think those are going to be above average sectors this year.
Margie, thank you so much for joining us. Always appreciate getting a few minutes of your time. Margie Patel, she's a senior portfolio manager, Allspring Global Investments, joining us from Boston via Zoom. Let's go over to the Middle East. Anne-Marie Hordern is there. She's been reporting with the president all week through his Mideast trip, and she is there as well. So, Anne-Marie, quite the trip for the president and his team in terms of economic development. Lots of newsworthy items in terms of economic deals were announced this week. What's the hindsight from you as it relates to his trip in the Middle East?
Yeah, a ton of deals, and every single stop the president had on this Middle East tour, from Riyadh to Doha to Abu Dhabi. And we should just talk about the last 24 hours, the latest of those deals. This all started in March. I reported about Sheikh Khaldun coming to Washington, having this meeting with the president in the Oval Office, talking about how they would like to invest $1.4 trillion over the next decade, especially when it comes to AI, advanced semiconductors, chips. They want to get their hands on in order to build out data centers here in the UAE. And we saw that yesterday, really this remarkable photo, if you will. Jensen Huang, the NVIDIA CEO, has been on every single stop of the president's trip. And what we saw yesterday was him standing in the middle of President Trump and Sheikh Mohammed bin Zayed as the Commerce Secretary, Howard Lutnick, signed this AI partnership between Abu Dhabi and the United States. It calls for the biggest data center outside of the United States to be built here in Abu Dhabi. And of course, to do that, they need access to those advanced chips. There's been a lot of talk about the national security concerns about that, especially behind the scenes. We have reporting that even administration officials in the Trump world, senior officials, are concerned about the guardrails to set this up. So for me, I think leaving this trip, what I'm going to be looking out for after this is what is the mechanism they do put in place to make sure that technology, that advanced high-tech technology from the United States, does not get into the hands of Beijing. And how it's been described to me is that those data centers will either be in, say, one in Abu Dhabi, there's going to be one likely as well in Riyadh, and they will control the access, but the U.S. will basically have veto power on who gets that control, because for the United States, it is paramount that they make sure that China does not have any access at all to advanced technology.
We also saw the first direct talks between Russia and Ukraine in over 3 years. Talk to us about the takeaways from there, and how was that received by world leaders?
Well, the president, according to Volodymyr Zelensky, had a call with European leaders like Emmanuel Macron, Friedrich Merz, the Polish president as well, about their meeting with Zelensky and European leaders. And all of this, of course, is about whether or not we are going to see some sort of meeting between President Putin and President Trump. Throughout this entire trip, Trump continued to leave the door open to potentially adding another leg of the trip and going to Istanbul, only really willing to do that if he was going to see President Putin. He most recently saw President Zelensky at the Vatican, if you remember that remarkable photo of the two sitting in the Vatican face to face. The president, before he left, said he may have a call with Putin, so I think that would be the next step between this relationship and whether or not they are able to sit down and find some sort of agreement, at least for the near future, to have a cessation of hostilities, to have a ceasefire between those two countries. So from the U.S. perspective, they were willing to have this meeting. The president seemed very clear about that, even last night, saying destination unknown, but likely going back to Washington, D.C. at this point. And he obviously left Abu Dhabi, and he's heading back to Washington. And as you guys know, in Washington, a lot of headaches await him as he tries to get his big, beautiful bill through Congress.
Anne-Marie, Iran, always in the background there. Do we learn anything about how the president may want to approach Iran going forward?
Well, the president told reporters on Air Force One that there has been a proposal delivered to the Iranians. This would have been delivered via Steve Witkoff, his envoy, who already had 4 rounds of meetings with the Iranians brokered by the Omanis. Of course, the issue is we don't exactly know what was in that proposal. The president has made very clear on this trip, speaking about Iran, that Iran cannot have a nuclear weapon. Where it's going to get challenging for Iran and the administration is whether or not Iran can have low-grade enrichment of uranium to have a civil program. Now, there was an NBC News report, and the president said you might have saw an NBC News report where Iran basically outlined their proposal. This report is exactly what the president, almost to the day 7 years ago, withdrew the United States from, and that's the JCPOA. So what this top advisor to the Ayatollah told NBC News that what Iran is willing to do is say we're not going to have access, we will not may have a nuclear weapon, but we will keep the enrichment of uranium from a civil perspective, to have a civil program. And that is something that I think would be very challenging for this administration to accept, given the fact that Trump has went out of his way to bash the JCPOA and also pull the United States out of that agreement.
Anne-Marie, thank you so much for joining us. Appreciate your reporting, as always. Anne-Marie Horton, she's she's a co-anchor of Bloomberg Surveillance, joining us from Abu Dhabi. Hopefully she'll be making her way back home soon, because she's been all over the Middle East with the president as he's made this trip. And again, as Anne-Marie was just reporting, a flurry of economic announcements and investment opportunities. So we'll see how that plays out going forward, but certainly a beneficial trip for many companies that want to do business in that part of the world. S&P 500 pretty much unchanged on the day. The Dow's up about 7 points and the Nasdaq's down 7 points. So that's about as quiet as you can get at the index level. And we see that in the VIX. The VIX is below 18 after being much higher recently. 10-year Treasury yield comes in about a basis point. We're at 4.42%. Coming up, we're going to talk about Novo Nordisk. The CEO stepped down. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, and I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Right now, the major stock averages mixed to little change, and we're also looking at the volumes that are about 13% below the average for this time of day for the S&P 500. Measure of consumer confidence in America's economy tanking this month, so that's kind of weighing on sentiment. This is the University of Michigan reporting the nationwide consumer sentiment index dropping to the second lowest in record as tariffs rattle the economy. Also, part of that report, the inflation expectations rising to multi-decade highs. Right now, the S&P 500 unchanged at 5915. The Dow Jones Industrial. Right now, the part of that report, the inflation expectations rising to multi-decade highs. Right now, the S&P 500 unchanged at 5915. The Dow Jones Industrial Average just 8 points higher. The Nasdaq 100 right now 46 points lower. That is down 0.2%. And of course, the big deal news of the day: Charter Communications combining with Cox Communications, cash and stock deal, uniting two of the biggest U.S. cable providers. Right now, you have shares of Charter Communications up 1.6%. Cash and stocks of the debt is at just 800 inflation expected as tariffs rattle the economy to the second lowest in record as tariffs round index dropping to the second lowest in reporting the nationwide consumer sentiment index dropping to the second lowest in record as tariffs rattle the economy. Also, part of that report, the inflation expectations rising to multi-decade high day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Have a great weekend.
You too, John. Absolutely enjoy the weekend. I got my 6% mortgage. I felt like a total putz. Now I'm like, I don't think we've been back to 6% since then. So I don't know.
I don't know how the kids are going to do it.
You're talking to a renter, so hopeless is how I feel.
Exactly. All right. John Tucker, thank you so much. We appreciate that. Isabel Lee sitting in for Alex Steele. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Some news coming out of the pharmaceutical space. Novo Nordisk is replacing its CEO amid increased competitions for its Wegovy obesity shots and a 53% decline in the share price over the past 12 months. Boy, these stocks are having a tough time. They did so well during the pandemic, and everybody's trying to adjust post-pandemic, it seems like. I'm thinking about United Healthcare as well. Mikey Shaw joins us. He's a senior pharma and biotech analyst for Bloomberg Intelligence. He's in London. He's one of our really, really good analysts over there in London, one of the best in the city covering this space. He learned from an old guy, but he's the young guy. All right, Mikey Shaw, tell us what's going on at Novo. Is it the CEO's problem, or do they have a bigger issue?
Yeah, I mean, they announced the decision today. Certainly unexpected by us. Seems a bit, abrupt in nature. Novo tends to be very steady in their approach, but they also take, a long-term approach to things. So maybe they think, Jorgensen can't kind of steer the ship in light of the challenges that they're facing and that they're due to face as well. Sema, and then you also, we also had kind of reservations around Novo's oral obesity strategy. So that was heavily focused on peptides. They've done a series of deals recently which are now focused on oral small molecules. So that suggests that, perhaps not investing sooner in that space was perhaps an oversight. And I think, the move today or the decision today, really reaffirms kind of perceptions that, while Novo had the first mover advantage in obesity, they certainly have lost ground to Eli Lilly now, which looks like it has a stronger obesity offering out of the two players.
What's interesting to me is how he will continue as CEO for a period to support a smooth transition to a new leadership. Quote, I mean, Novo has only had 3 CEOs. How will this affect sentiment? I mean, are people more optimistic and reinvigorated that, yes, maybe we can finally have a turning point? Or are they, you think, feeling a little bit more pessimistic because it sounds like they really have a good culture?
Yeah, I mean, that's the thing, right? Yeah, I said that the timing seemed a bit odd. Novo is obviously, you're expecting an uptick in GLP-1 in the second half of the year as you see easing headwinds from compounding. So, I think the timing's a bit weird. The last time they changed their CEO, they announced a successor at the same time. That was Jorgensen, so the switch between Sorensen and Jorgensen. Today, they're basically just saying that they're reviewing internal and external candidates, but the strategy remains unchanged. The fact that they say the strategy remains unchanged makes us believe that it's clearly an execution issue, and that the board and the major shareholder, which is Novo Foundation through Novo Holdings, have clearly kind of lost confidence in Jorgensen.
So talk to us about the just kind of what we're seeing in that weight loss drug market generally. Where are we in its development? And how's it kind of shaking out in terms of leaders in that marketplace?
Yeah, so I think Lilly now is the clear leader. It's got the better portfolio. It's got the more effective drug out there. What's going to be key going forward now is there's going to be a lot of focus on oral GLP-1s. So these fall into 2 categories. One, peptide, which is a large molecule, and then you've got the small molecule such as orforglipron. We think that orforglipron, which is Lilly's asset, that's clearly got the better profile when comparing that to Novo Nordisk oral semaglutide. That's in part because, one, it's probably easier to scale because of the type of molecule that it is, and 2, you don't have these kind of strict dosing criteria where you have to take it on an empty stomach, etc., which we think is a drawback to convenience. Now, we've seen kind of the difficulties in kind of scaling up injectable GLP-1s. We don't envisage the same issue with oral small molecule GLP-1s. So that would essentially allow kind of greater penetration of the obesity market.
The competition has definitely intensified, and Novo stock has more than halved in the past year. What about Trump's pharma tariffs? That looms over the company as well.
Yeah, I think it looms over Novo, and I think it looms over drug companies as a whole. Clearly negative, but also a source of volatility. There's no real detail on it, so it's difficult to kind of comment on the potential impact that these tariffs could have and when they're going to come in. And that's kind of commentary that we kind of heard over large pharma's 1Q results too.
All right, Mikey, thank you so much for joining us. Mikey Shah, he covers all the pharmaceutical companies for Bloomberg Intelligence over in London. We hired Mikey when he was a young associate. He did really well there. We promoted him to analyst. Did really well there. Got promoted to senior analyst. Now he's one of the senior folks in the city of London covering these big pharma companies. And it's just a great success story. And that's what Bloomberg Intelligence has had a lot of success with, which is identifying and nurturing young talent. And Mikey Shaw is certainly one of those there. And that's a great thing to see. Red headline crossing the terminal. Boeing near deal to avoid prosecution in crashes case. That's according to Reuters. So that's another piece of good news for Reuters and for a company that couldn't find a break for the longest time, the last several years, in terms of all the various safety issues they had and the government investigations. They've now had a pretty good week. The stock's off 1% today, but it's up 15% year to date. And when we call earlier in the week, they got the biggest deal ever.
Yes, that was good news for them.
Coming out of the Middle East with a huge plane order. So again, maybe things are turning around for our good friends at Boeing. So we'll have continued reporting on that story. Boeing near a deal to avoid prosecution in crashes case. That's again quoting to Reuters. Stocks at $204, down 1% today, but up 15% year to date. S&P 500 unched. Dow same. Nasdaq it's off 0.1%. So a pretty calm day in terms of the index level movements there. Bitcoin calling it out for Tom on the Upper East Side at $103,000 per token. That's a nice move higher. This is Bloomberg.
You're listening to Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
All right, Isabel Lee sitting in for Alex Steele today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, and we are streaming live on YouTube. I wonder if you can remember, Isabel, a time before tariff discussions, all this market wanted to talk about was AI. Who are the winners and losers? How much money are you going to spend on AI? Is it going to be revolutionary? And what's going to mean for the technology space? And every other company was talking about AI and how it's going to impact their business. And that includes Microsoft. They invested $13.75 billion in OpenAI. It committed to spending $80 billion on AI data centers in this year alone. But then DeepSeek came along, kind of changed the game. So let's get an update there. Austin Carr is he joins us here from Bloomberg News. He's the author of the Big Take story in Bloomberg Business Week. Microsoft CEO on how AI will make every company, including his own. Austin, you're looking at AI through the lens of Microsoft, and that's a good place to start because they've been one of the leaders here. What did you learn?
Well, the big thing that we learned is that Microsoft is not as dependent on OpenAI as everyone seems to think. That is actually just one of the many bets that Satya Nadella, the CEO of Microsoft, has laid down on the AI industry. And what we are sort of depicting in the story is how, you know, it's not just that they make money through ChatGPT and renting out OpenAI models, but they rent out a lot of AI models for a number of different companies, whether that's Meta or more recently DeepSeek. And it just shows that they are sort of diversifying their dependence on OpenAI to make as much money as possible through cloud computing, through their own ChatGPT competitor called Copilot as well.
How does Copilot indeed stack up with OpenAI's ChatGPT? In your chart, it ranks under Perplexity in terms of global market share. Is there some sort of conflict of interest, so to speak?
Well, actually, what they're doing is they're sort of putting Copilot into every one of their products. So GitHub, for example, has GitHub Copilot, which is a wildly popular AI coding assistant. You also have Copilot for Windows, for Microsoft Word, Excel, for SharePoint, for Teams. So they're sort of leading on their enterprise reach to really build up Copilot and make it a popular sort of embedded version of ChatGPT within their own apps. But at the same time, although Copilot relies on OpenAI's model, they're also increasingly depending on third-party models as well as their own internal ones. This is something they're testing out using an invisible model picker. So anytime you input a query to Copilot, it might use OpenAI's models, it might use Microsoft's models, and it's just sort of diversifying that approach to go whichever one is the most efficient model. Now, is it a conflict of interest? I wouldn't say so. I mean, this is actually just smart strategic thinking by Satya Nadella to not, again, be so dependent on ChatGPT, on OpenAI. And they're just trying to show the world that they're going to make money again on revenue share with ChatGPT, on renting access to the OpenAI models, but also through their own internal models as well. And if ChatGPT wants to compete, that's only going to increase the equity value that Microsoft has in OpenAI.
Austin, what does Microsoft think about, and what did they think about, and what are they thinking about DeepSeek these days? Friend, foe, huge threat? What do you say?
I mean, I think it does land in and really highlight that frenemy relationship with OpenAI. We have this scene that opens the story when Satya Nadella is in Davos. He first learns about DeepSeek, and he told us his initial reaction was, "Holy moly, this is really one of the most efficient models that we've seen out there. It can do a lot of the same computing as OpenAI's GPT-4 can, but at a fraction of the cost. And now it's not as intelligent. Maybe there's some other risks involved with relying on a Chinese model." But what you did see is Satya Nadella over that weekend telling his team to get it out on our cloud, using this sort of AI marketplace that they have where you can rent access to OpenAI's model, Meta's models, and DeepSeek's. And so what they're looking to do is actually head more in a DeepSeek-like direction. We want to go from a time when it costs hundreds of millions of dollars to train models to making them a lot cheaper, not just to train, but also for consumers to use. And that's the big thing that Microsoft is focusing on now. It's called the Pareto Frontier. It's taking the most advanced, cutting-edge mechanisms for AI now and then redoing them in a way that's very cost efficient. That's his main focus right now. Cost efficiency, making these things super productive without breaking the bank.
Talk to us more about Satya Nadella's favorite economic theories, Jevons paradox, which I think everyone started to talk about a few months ago. How does he believe that this will be similar to the AI phenomenon?
You know, I didn't think we'd be talking about 1860s coal production in 2025, but that's really what he's been talking a lot like a macroeconomist these days, and perhaps that's a necessity when your company is worth $3 trillion. But Jevons paradox is this idea that back in the day when the steam engine came along, suddenly it took a lot less coal to make the steam engine work. And you would think, oh, well, if we need less coal, that would actually mean coal spending goes down. But it actually led to an explosion of coal consumption. And it happened more recently with plane travel. You know, planes used to be super expensive, then operational efficiencies brought down the costs. You'd think that would be bad for airlines, but it actually led to an explosion of consumption because people could fly more. There was new airline routes. And so that's what Satya is hoping happens with AI, where you see costs of AI go down. He thinks that'll lead to an explosion of AI consumption through a lot more use cases for AI, a lot more companies adopting these tools because they will be far less expensive. And because Microsoft is essentially one of the largest coal miners out there, he hopes to make a lot of money from that coal production.
Austin Carr, thank you so much. We appreciate that. Austin Carr is technology reporter for Bloomberg News up there in Boston, Massachusetts. You can read more of this story on the Bloomberg and at Bloomberg.com/bigtake. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. Next hour of Bloomberg Intelligence starts right now. S&P 500 up 2, the Dow's up 22. The NASDAQ is down 11. The VIX below 18. We'll have more coming up. Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we'll check in once again with Anne-Marie Hordern. She is over in Abu Dhabi. She's been with the president all week. Got the latest reporting from the president's trip to the Middle East. Big M&A trade in the cable TV business today. Geetha Ranganathan, Bloomberg's media analyst, Bloomberg Intelligence media analyst, will join us to break down that deal. It's Friday, so we do a couple of things on Fridays. Talk municipal bonds today with Eric Kazaski from Bloomberg Intelligence. And also on Friday, we check in with Barry Ritholtz, founder of Ritholtz Wealth Management, see what he's thinking about these markets today. Always an interesting conversation with Barry. Right now, let's kick off this hour. We could do that with Charlie Pellet.
Hi, thank you very much, Paul Sweeney, and here's what's going on. We've got the Dow, the S&P, NASDAQ all higher for now. Following a 4-day advance, though, the S&P 500 index has been fluctuating. Investors certainly not getting much encouragement from this morning's economic data. Right now, the S&P higher by 4. That is a gain of just about 0.1%. The Dow up 38, higher by 0.1%. NASDAQ in the red now, swinging between gains and losses here. Right now, we've got NASDAQ, we'll call it unchanged on the day. The NASDAQ 100 index down by under 0.1%. Your 10-year 4.43%, 4.43 to be clear on the 10-year. The 2-year 3.97%. Gold down 2%, 31.74 the ounce, and West Texas Intermediate crude up 1%, 62.20 for a barrel of WTI. Consumer sentiment fell to the second lowest level on record, with the preliminary May sentiment, as measured by the University of Michigan, declining to 50.8 from 52.2 a month earlier. Joanne Chu is Director of Surveys at the University of Michigan. She was a guest right here on Bloomberg Intelligence.
This is a very, very low reading. Consumers continue to feel very dour about the economy. They're worried about the impact of tariffs on inflation and also the impact on unemployment. They're really worried about multiple dimensions of the economy. That was what they saw last month, and they continue to see dark times ahead.
And just how bad was it? The May reading was lower than all but one estimate in a Bloomberg survey of economists. A massive corporate deal involving two of the biggest names in cable. Charter Communications has agreed to combine with closely held Cox Communications in a cash and stock deal that would unite two of the biggest American cable providers. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Isabel Lee, she's sitting in for Alex Steele. I'm Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. As Charlie was just reporting, not a lot of big movement at all in the index level. But let's take a look at some stocks on the move today. I'm Paul Sweeney along with Isabel Lee, and we're joined by Bloomberg's Christine Aquino. Christine, what are you looking at today?
Well, Paul, I'm taking a look at some of the interesting 13F filing moves that we've seen. Of course, it's 13F filing season. So we're taking a look at what hedge funds have done in the first quarter. So catching some attention, actually, is NVIDIA, of course, because we did see in those filings that Michael Burry Scion Asset Management bought puts on NVIDIA ahead of Liberation Day. So that was in the first quarter. A little backward looking, but very interesting that that was what he was anticipating. And we are seeing NVIDIA down a little bit today, down 0.2%, down for a second straight day. Though more recently, though, we have been getting a slightly brighter outlook for that company and AI in general. NVIDIA on track for its best month in a year. And that's after President Donald Trump's trip to the Middle East, unlocking a bunch of deals. Remember that they're going to be reporting in the first week of June. So far, a lot of their biggest customers, first week of June. Yeah, it's coming up.
Their counts are slow.
but we're all going to be waiting
Yes,
for
we
it,
are.
right?
Yes, we
yeah,
are.
yeah, yeah. We're all going to be tuning in. They did get some good indications for earnings of some of their biggest customers, and just indicating that there's still a lot of interest in spending on AI infrastructure, which of course NVIDIA benefits from.
What about the world of makeup and skincare, Estee Lauder?
Oh, yes. That is another company that's catching some attention in light of these 13F filings. Again, Michael Burry Sign Asset Management doing the opposite for Estee Lauder and actually doubled its position in the company in the first quarter. So we're seeing those shares up now just slightly more than 1%. Year to date, though, that stock has dipped 15%, in its earnings report earlier this month implied a weaker than anticipated fourth quarter outlook, and the company forecasting it will return to sales growth only in 2026. Some bright spots ahead, though. Bloomberg Intelligence's Deborah Aitken did say that third quarter showed some patches of promise, led by share recovery in the U.S., China, and Japan.
Well, Alex Steele always tells me that you have to invest it in your face.
Yes, you do, Paul. Yes, you do.
I missed
Have you
that
heard
memo.
of Advanced Night Repair? Estee
that a
Lauder,
thing?
that's the thing.
You do love that.
That is their blockbuster product, Estee Lauder. So yeah, look, I'll send you a link.
All right,
after the
John
show,
Tucker and I,
okay?
we missed that memo. All right, how about Boeing? Yet another big news day for Boeing.
Big news day for Boeing. Indeed, we are getting a Reuters report saying that Boeing has reached a tentative non-prosecution agreement with the U.S. Justice Department. This pertains to their fraud case stemming from 2 fatal 737 MAX plane crashes. So essentially, that means that Boeing is no longer agreeing to plead guilty in this case. The DOJ officials are still considering whether they plan to proceed with the agreement or take Boeing to trial, but no final decision has been made, according to Reuters, and no comment from both the DOJ and Boeing.
I mean, that would be big news if that's in fact the case. I'm surprised the stock's not higher.
Yeah.
But the stock's been up 15% year to date, so maybe we've already priced in some good news. But they also had a good week in terms of the revenue line, getting that big order coming out of the Mideast that was announced earlier this week. I think the biggest order ever. So it feels like after 3 years or so of negative news, headwinds, that maybe things have turned for Boeing. And now you just got to get the production levels up. That's the big deal. Christina Aquino, thank you so much. We appreciate that. Christina Aquino, managing editor for Markets Live, joining us here in our Bloomberg studio. Anne-Marie Hordern's been doing yeoman's duty all week from the Middle East. She's still there. Anne-Marie Hordern, she is the Bloomberg Surveillance co-host. She is in Abu Dhabi. Anne-Marie, I mean, I would argue an extremely successful week for the president and his team in terms of drumming up business and making headlines. What's the feeling on the ground there?
I mean, the feeling on the ground in the Middle East is just one of giddiness. They're so excited about the president's trip. They enjoyed having him here. They rolled out the red carpet quite literally for the president. There's sword dances. You had camels. You had tons of fanfare for him, tours of palaces and mosques. And I really think one of the images that really shows how much the Gulf countries tried to make the president feel at home in the region was when Mohammed bin Salman, the crown prince of Saudi Arabia, drove him around in a golf cart, no less, to dinner on their final evening together. So they've really done everything they could to try to make the president feel at home, and they really owe the president for the fact that he is living up to the expectation they were hoping from this White House. It was a transformational speech if you consider some of the foreign policy initiatives the president set forward. And on top of that, he is really making it easier for these Gulf states, capitals, flush with capital, to do business with America.
We have Bloomberg reporting saying that some Trump officials are already weighing how to pause the deals over concerns of some security breaches. On headline level, these are all impressive, but what is your read on them and the feasibility that they will actually happen or see fruition?
Well, the devil's, of course, in the detail, especially when it comes to these security concerns when it comes to China. The reporting I have, whether or not it's a data center in Saudi Arabia or in the UAE, which the U.S. and the UAE signed on to this partnership to build the biggest data center outside of the United States right here in the UAE in Abu Dhabi, is that there is concern amongst senior officials about the guardrails that will be set up to make sure that this technology does not get into the hands of China. How I understand it is that this will be set forth where the data centers will be here, Yet, and these individuals will control on the ground who has access to it, but the U.S. also has a say, and they have control as well over who has access to it, almost like a veto. And that is really critical in order for these countries to get the amount of advanced chips that they want in order to build out these AI data centers. They would need to make sure they are following the guardrails set forth by the U.S. Of course, these are top-line deals right now. So the next few weeks, months, and even years, this is going to be an ongoing discussions between Riyadh, Abu Dhabi, and Washington, because it's not just senior officials within the Trump administration, but there's bipartisan support within Washington to make sure that any technology that's leaving the shores of the United States does not get into the hands of Beijing.
Anne-Marie, the president is jetting back to D.C. Arguably, he's got a lot to do here. He's got a tax bill to get through and work with Congress. He's got to, I guess, provide much more clarity on his tariff policy. What do you think the to-do list is when he does get back?
Well, the president is already truthing, if you will, from Air Force One, and he told Republicans to stop talking and get to work. He wants to see his agenda pass. The issue is, of course, is that he has such a slim majority in the House of Representatives and in the Senate, and the factions of infighting is quite large at this moment. There's individuals who want to see parts of Joe Biden's IRA stick because some of those grants are helping their districts. There's individuals who want to make sure, and their red line is that Medicare is not cut. Then you have Republicans from New York State, California, high tax states that want to make sure there is a very high cap when it comes to the state and local tax deduction. Getting all of these individuals to sign up on one bill at the same time, making sure it's not too big where it doesn't start to bring into concerns of the bond market when it comes to the U.S. deficit, is going to be incredibly challenging for this president. So that is going to be one headache that meets him when he lands in Washington, D.C. He talked a little bit about trade today. He said at some point we're not going to be able to negotiate all of these deals, so they're just going to set a new rate and let those countries know. So in the next few weeks, given the fact we're in this 90-day reprieve from April 2nd, when you had those very high rates from what they would call Liberation Day, we're going to potentially see new rates set for a number of countries. So a lot of headaches for the president when he gets back after this really fanfare, being treated like a king in the region. We should note one piece of joy for the president. He talks about with reporters the fact that he wants to get home because he has a new grandson waiting to meet him.
Good for him. Anne-Marie, thank you so much for all of your reporting this week. We really appreciate it. Excellent work. Hopefully you'll be coming home soon here. Anne-Marie Horder, folks, she is our co-anchor of Bloomberg Surveillance, and she joins us from Abu Dhabi. Great reporting. Big trade in the world of media and telecommunications. Charter Communications, that's a publicly traded company, buying Cox Communications, which is a privately held cable company. $34.5 billion is the value on Cox. This is a huge deal, folks, and we want to get the latest. So we turn to Geetha Ranganathan, Bloomberg Intelligence Senior Media Analyst. Geetha, big deal. What does this do for Charter here? What's the rationale for Charter laying out this big trade here?
Yeah, absolutely, Paul. I mean, yes, we were expecting something to happen in the cable space. Remember, Charter right now, before this deal, is the second largest U.S. broadband provider with about 30 million subscribers. With this deal, what happens is they really kind of they catapult to #1 position, edging past Comcast, and having almost 36 million broadband subscribers. And really the rationale for the deal, Paul, is that cable has been under intense pressure. So just a few years ago, cable completely dominated the broadband landscape with about a 67% market share. They have been losing share to the telecom players, the Verizons, the T-Mobiles, and the AT&Ts of the world, because those players have come out with a much cheaper broadband solution with what is known as 5G home internet or fixed wireless access, which is priced about 20 to 30% lower than a cable broadband product. They've also been ramping up their fiber rollout. So cable kind of really facing it on both ends of the spectrum in terms of competition. And this is really just about them kind of gaining scales and better efficiencies and operations.
So they've had talks about this more than a decade ago. And to many people's point, this really isn't a surprise. What changed in that horizon? Like, why was it not pushed through before, and why are we seeing it happen right now?
I mean, there have been multiple things. Regulatory concerns have obviously been, one of the foremost issues for the cable space. Remember, I think just less than 10 years ago in 2016, Comcast tried to buy Time Warner Cable, failed in that transaction, and then Charter went ahead and then acquired, Time Warner Cable. So regulatory issues have certainly been, front and center. And I think, right now, the stimulus for this was really the fact that the cable industry is kind of facing all of these challenges from the telecoms, intense competitive challenges, and I think Cox really saw this as a really good strategy for them to exit.
All right, so this begs the question, and you mentioned it earlier. What does Comcast do here? Is there a response here from Comcast? Is there a strategic response here?
So Comcast actually already has a deal kind of in the works in terms of their spinoff of their cable network. So that's on the media side of the business. That's not on the cable side of the business, but they are spinning off their cable networks. That should happen sometime a little bit later this year. And the expectation, Paul, has been that once that deal happens, once they spin off that cable networks division into its own entity, that will become a roll-up for many other networks, most notably, the Warner Brothers Discovery networks, maybe even, a smaller AMC networks. So really, there's been a lot more chatter for Comcast on the media side rather than the cable side, but we'll have to wait and watch.
When it comes to antitrust, do you think that it helps that Charter-Cox deal isn't a big tech company? Because we know that competition officials, even Vice President J.D. Vance, have really closely looked at that space.
Yeah, I think that definitely helps. Also, remember, this is, there is absolutely no overlap in terms of their footprint. Cable is a very regional business. So again, this does not in any way hamper competition. It's actually good for consumers. And the one thing that, the Charter executives kept mentioning on the call was, they are basically going to create more jobs in America. So this is, good overall. And so definitely just kind of given the size and scope of the transaction, we don't really expect any big regulatory pushback.
All right, Geetha Ranganathan, thank you so much. We appreciate that. Geetha Ranganathan, she covers all the media companies for Bloomberg Intelligence. She's based in Princeton, New Jersey. Again, a big deal. Charter Communications, CHTR is the ticker, buying privately held Cox Communications for $21.9 billion equity value. There's also a lot of debt in there, so the enterprise value is much higher. Big transaction that the folks down in Atlanta, the Cox family, have been a long-time family company owning a wide variety of media assets, newspapers like the Atlanta Constitution, radio stations, TV stations, cable, amongst other things. So this is a big transaction for them. They are getting out of the cable television business, and they're considered very smart operators. So that tells you how tough that business is, and when they're saying they cannot compete with their scale. So big transaction in that space. Stocks, not much happening out there. S&P 500 up 5 points. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow higher, NASDAQ trading lower, S&P right in the middle, little change fluctuating. And this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Following a 4-day advance, the S&P 500 index is fluctuating higher right now, though. Little changed, up 3 points, up under 0.1%. The Dow up 4, also little changed on the day. NASDAQ down 12, a drop there of just under 0.1%. The 10-year at 4.43% with the 2-year 3.96%. Spot gold is trading lower, little right now down 1.9%, down $61 the ounce. West Texas Intermediate crude up 0.8%, $62.13 a barrel on WTI. There is that massive corporate deal involving two of the biggest names in cable, Charter Communications combining with closely held Cox Communications. Geetha Raghunathan is following the deal for Bloomberg. She was a guest moments ago right here on Bloomberg Intelligence.
With this deal, what happens is they really kind of they catapult to #1 position, edging past Comcast and having almost 36 million broadband subscribers.
Right now, we've got Charter Communications up by 1.6%. The other name, Cox, by the way, closely held. The other name, Comcast, it is down now. Little change, down under 0.1%. Earnings last night, Applied Materials down now by 6.7%. Take-Two also reported last night down by 1.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, today's Munis on Focus is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. Let's check in with Eric Kazaski, Senior Municipal Strategist for Bloomberg Intelligence. He's safely ensconced down there in Princeton, New Jersey. Eric, I feel like I can't start any discussion of municipal bonds without asking, can I still have my tax exemption, or is President Trump in this maybe new budget, will that be going away? What's the status there?
Yeah, if you asked the market 2 months ago, it probably would have been decidedly on the fear side of the equation that the exemption was going away. I think at this point, given what the House is proposing, we could sort of safely say that the exemption is going to be around, and you and I are going to be talking about munis for some time to come.
How will the adjustments to the SALT deduction cap really affect taxpayers in high states? I mean, I'm just thinking about the potential economic impacts, and it seems to be a huge windfall.
Yeah, I mean, when they lowered the cap to an unlimited basis to 10,000, right? What that did is it forced some buyers who were on the margin into munis because they were just looking for more ways to shield taxable income, especially in those states like California, New York, New Jersey, with high in-state income taxes rates. Raising it to 30,000, on the margin, we think it's going to have negligible impact to our space. I think, what really could be a game changer is if they go back to sort of an unlimited basis with a phase out in income, because there have been a lot of people in the lower brackets who've gotten into munis via separately managed account platforms. So it could affect the demand we're seeing there. All
right. Eric, I mean, I love some of these rates that I see in your notes. Tax equivalent yields in California are 6.86% for 10 years. While New York at 6.44. Boy, as a salesman, I can sell that. I mean, are people rushing into the muni bond space?
Not as much as you would think. And look, it gets even better. If we look at the tax equivalent yield for, let's say, a single A revenue bond far out the curve, which has been performing the worst by far this year, right? The long end of the yield curve, you're approaching 9.5%. That's an easy sale for someone who has a high taxable income and wants to shield that from income taxes, right? Like you said, it's an easy call to make. And we're surprised that we're not seeing as much demand as you would think, given where taxable equivalent yields are. We think that's going to change over the next several months as we head into the more technically strong period of the year, May, June, July, where we have a lot of cash coming back to investors. And I think that most likely all of that's going to get back into munis.
Talk to us about the supply front. You said in your note that we're heading into the most technically strong start of the period this year. Why is that so?
Well, I mean, where supply is up right now about 20% year over year. There's about 16 billion on the forward calendar, right? Just looking at the next 30 days. With all of that cash coming back to investors, and we're talking, upwards of $40 billion a month over the next 3 months, all of those monies coming back are going to need supply to sort of absorb that. So, we think given the forward supply of 16 billion, given what we're seeing on the prospective calendar, we think that there is going to be a push for a lot of these bankers to go out and talk to their clients and sort of tell them now is the time. The tax exemption fear has sort of been set aside. Rates are sort of in this favorable channel. Let's get to market and see what the market's going to give us.
All right. So talk to us about credit quality out there. It has not been a problem, even during the pandemic, because there's so much stimulus out there. But how's credit quality these days? Because there's a lot of economic uncertainty out there when you see companies pulling their guidance and so on.
Yeah, I mean, there's a ton, right? And look, at the end of the day, munis are an uncorrelated asset class, right? So if we, head into an economic downturn or stocks perform very poorly, munis are going to sort of be insulated from that. But what we are seeing through our tea leaves and more importantly, the data we have on Terminal is really that negative sentiment, via headlines on these local levels has really sort of ramped up. And we're talking about from late 2023 till now, our negative tracking really hasn't sort of returned to historical norms. To us, that means that we're probably going to see some spread widening over the next 12 to 18 months and really not reflective in current spreads that we're seeing in the market. Like anything in munis, we're very supply demand driven. And so, with all that cash coming back to investors, we just might be kicking some problems down the road because they're willing to sort of finance at lower rates and, tighter spreads over the next several months.
Talk to us about higher ed. So we've seen a lot of bonds come from Harvard and some other universities. A, how are they being received by the market? And B, how are they trading?
They're trading decently. There has been a little bit of spread widening if we're looking especially on the ones that have corporate CUSIPs, when we sort of look at them plotted to, other AAA corporates or even AA corporates, since that's a larger universe. But there has been more and more IBs looking to come to market, especially given the sort of, house approach that they might be looking to raise the tax on their endowments. By the back of the envelope math, it's going to go from costing Harvard about $35 million a year to almost $500 million a year. So it's a real cost to these universities to have the the taxation rate on their endowments increased. And I think that they're concerned that the market will be a little jittery at that point. Look, at the end of the day, these are 100-year institutions. They're not going anywhere. So I think that they're just trying to sort of get ahead of any potential, headline risk.
What about for issuers? How do they navigate increased borrowing costs and potential changes to tax exemptions? We have all this market volatility. I mean, you have to maintain investor confidence.
Yeah, I mean, they've done a really good job of, continuing to put supply into the marketplace, and the bankers, to their credit, have really sort of gone out in the last year and used that sort of taxation loss, or tax exemption loss fear talking point to get more supply into the market ahead of any potential tax changes. Now, look, as it turns out, that really wasn't the case, right? Which is good for the market. But at the end of the day, a lot of these issuers, they have to issue regardless of what the prevailing rate market is. And the good thing about the muni market is that, bonds are sold with a call option. And while you can't advance refund bonds anymore, bankers have creative ways to sort of get around things with derivatives and synthetics. But there is a 10-year call option, right? So if you issue bonds now and rates go down over the next 10 years, they have the option of refinancing. So that's always a good thing.
What's the next fun deal to look at?
You know what? I looked at the forward calendar. There's nothing super fun and exciting out there. But what's interesting is that there's so many deals that are coming in just sort of like, what we consider the blocking and tackling portion of our market, water and sewer, public utilities. Those are the things that, are not very sexy to talk about, but, they haven't performed very well this year. But, from a revenue and a cash flow basis, we like them from a credit perspective much more than, general obligation bonds right now.
All right, Eric, thank you so much. We appreciate that. Eric Gazasky, Senior Municipal Bond Strategist for Bloomberg Intelligence, joining us from Princeton. So municipal bond business, I mean, it's a fascinating business simply because if you live in a high-tax location like the greater New York City metro area, which has very high state and local taxes, in addition to what you pay federally, you can get these yields and they're taxed. Again, interest is tax exempt. So you take something that might have a coupon of 4%, but in the case of California and New York State, they have tax equivalent yields of about 6.86% because that income, that 4% dividend interest payment is not taxed.
I actually do think it's a very interesting space. When I read the stories of our reporters here at Bloomberg, it seems so relatable because you can relate to where you live and all of these fun deals. To your point, I love that question, as opposed to something like esoteric, like derivatives or options.
Exactly. So, and they're everywhere, and they fund all sorts of local, and you know, you can go buy like, you know, I buy New Jersey municipal bonds, so you know, like Elizabethtown, New Jersey public gas utility. Sure, I'll buy that.
Wow.
Thing. So you know, and you got a whole lot of those. So anyway, interesting to talk about the munis, and again, in interest rate environments like this, and in tax environments like this, for a lot of people, they are very attractive. So we're looking at the markets here, and just a little bit, not much happening here overall in the markets. I wonder if it's even worth going to Charlie Pellet for a Bloomberg Business Flash.
Stocks higher right now. That is a reversal from our last update when we told you NASDAQ was lower. But right now, holding on to a gain up by 13, up by just about 0.1%. But as Paul correctly says, really kind of a sleepy Friday here with the Dow, the S&P, NASDAQ all higher. Not a lot of conviction, though, with the S&P right now up by 0.2%, higher by 9. We've got the Dow up 29, up by about 0.1%. NASDAQ Composite Index up 17. That is a gain of 0.1%. Mag 7 Index. The Bloomberg Mag 7 Index up just under 0.1%. 10-year 4.43%. The 2-year 3.97%. Gold down $60 the ounce. That is a drop of 1.9%, 31.79. And West Texas Intermediate crude right now higher by 1%, 62.24 a barrel on WTI. We are looking for an up week for the S&P 500 Index on the week right now. Big move higher this week with the S&P up by about 4.5% again. The weekly number. Briefly, Verizon Communications abandoning its workforce diversity goals and a range of diversity, equity, and inclusion practices in response to a request from the FCC. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Isabel Lee, she's sitting in for Alex Steele. I'm Paul Sweeney live here in the Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Coming up, we are awaiting Airbnb CEO Brian Chesky. He's going to be speaking with Bloomberg TV anchors Ed Ludlow and Caroline Hyde. That should be coming up in moments. When it does, we will bring that discussion to you. I'll tell you, it's been a good week for Boeing. First, you got a whole slew of orders, including their biggest order ever coming out of the Mid-East. So a good revenue potential backlog for Boeing. And then today there's reporting, and we're staying on top of it, a couple of sources. Reuters says that Boeing is in a tentative deal to avoid U.S. prosecution, and the Wall Street Journal reporting that the Justice Department wants to spare Boeing from a guilty plea over 737 MAX charges. So again, a potential really good piece of news for Boeing. Stock's unchanged on the day, but it is up 15% year to date at a 52-week high. George Ferguson joins us. He covers the airlines, the aerospace companies, including Boeing. Hey, George, this seems like a big deal to me. How do you read it?
Yeah, so I do think it's a good situation when Boeing can avoid a felony conviction, which I think ultimately was going to happen here before the Justice Department, I guess, sort of stood down or didn't care as much. And so, you know, there was a lot of questions, I guess, about whether or not a company that had been convicted of a felony could be a government contractor. I mean, my personal opinion was that Boeing was just too important to the defense industrial complex to not be allowed to be a defense contractor. And so they would have found, the Defense Department would have found a way around it. And maybe that's, you know, one of the reasons for a little bit of indifference in the marketplace right now over it. But I think in the long run, it is a really, I think, good thing for the company to avoid having to be considered a felon.
You made a good point that if you're a felon, you can't really have government contracts. Critics would say that maybe the current administration probably had an influence on this. What would you respond to that? And it's probably hard to ignore, given that, for instance, President Donald Trump said that Boeing had some headaches, but it makes one of the best planes, quote, in his remarks when he was at the UAE.
Yeah, I mean, it does feel that way to me. And again, I think the challenge here is, look, Boeing did have some problems, clearly, you know, with the 737. And, you know, they were supposed to put in place an overseer that was going to help fix those problems. I think there's a lot of focus on the company right now, and I do think it's probably in the country's best interest not to impede its ability to be a contractor, again, to DOD and to other parts of the government. And so, look, in the long run, I don't think we need the felony conviction in order to make sure the right thing happens at Boeing. And so, you know, George, I wouldn't throw too many stones on this one.
With a little bit of a hindsight here, put into context Boeing's week in terms of orders. How big was it?
Yeah, no, it was a nice week. So we expect more of this to come. You know, I really think as the administration goes out and focuses on trade with the world and balance of payments, that countries around the world are going to look for ways to equalize that. And Boeing is one of the most important exporters for the U.S. And look, and we have a report on the Bloomberg Terminal about this, right? Their sales recently have definitely lagged, right? I think as customers have watched the problems at Boeing, watched the quality problems, watched the problems ramping up production. And so there probably is already a natural spring back for a pretty decent order year this year. Because again, I think some of those core customers, they haven't moved on. They're not going to buy Airbus. Their fleets, a lot of their fleets are primarily Boeing. So they want to buy Boeing. It's in their best interest to buy Boeing, but they just didn't want to get in the order book right now because it was such a mess last year. So I think that spring back, coupled with an administration that's going to go around the world and say, hey, what are you doing to balance payments with us? And you know, and when countries go, I don't know, I guess we're off sides, the administration shows them, I guess, chips and Boeing airplanes, and they go, okay, we'll take a bunch of Boeing airplanes anyways. I think, you know, you're going to see again more of this. So it was a good week, but I think there's more to come, and there's a spring back as well involved here.
30 seconds, George. What's the run rate today on 737 deliveries, and where does it need to be?
In April, we think mid-20s going through the factory. I think that's pretty good. We'd like to be seeing mid-30s by mid-year, and we think they ought to be able to break 38 by end of the year for 737.
George, excellent. Appreciate you coming on short notice. George Ferguson covers airlines and the aerospace companies for Bloomberg Intelligence. In just a moment, we're going to bring you a discussion with Airbnb CEO Brian Chesky, speaking with Bloomberg's anchors Edla Lowe and Caroline Hyde. Are you an Airbnb person, Isabel?
I used to be, but because the fees add up so much, I've resorted to just hotels. Because you think you're getting something cheap, but then there's cleaner, and then there's taxes and everything. And when you check out, you have to do your own laundry and throw the trash. So it almost takes away the meaning of vacation.
Ah, interesting. But now, who is using it then, do you think?
I think if you're on a budget, you definitely can find a budget that lines up with you. And this week, he wants to Airbnb everything. Not only rooms, but also experience. If you want to Airbnb a chef, you want to Airbnb this and that. So he's really trying to revolutionize. By he, I mean Brian Chesky, the CEO and founder.
Well, I use my ski gang, we use Vrbo when we go out west skiing because we need the condo, ski in, ski out, and that's the best solution for us. So that works out well. Airbnb CEO going to be coming up in just a moment. It's a big company. It's got a market cap of $69 billion, which is just, $86 billion, which is just extraordinary. So it has become a big, big business, and Airbnb is one of the leaders for sure. Looking at the marketplace real quickly here, S&P 500 up 10 points, Dow up 35 points, NASDAQ up 17 points. Looking at Bitcoin, it's up 500 points, just under $104,000 per token. Alex Steele toiling away at a refinery somewhere down in the oil patch. WTI crude oil, $62 per barrel. On the yield space, the 10-year Treasury yield, steady, 4.43%. All right, let's head off and we'll listen to Airbnb CEO Brian Chesky speaking with Bloomberg Technologies anchors Edla Lowe, Caroline Hyde, talking about being the Airbnb for everything. Let's take a listen.
We welcome to our radio and TV audiences worldwide now, Airbnb, out with a redesigned app that puts a greater emphasis on services, on one-of-a-kind experiences. But this is as, of course, anxiety remains about consumer sentiment, about our desire to travel abroad right now. Let's get through all of that with Airbnb's plans. We're joined by CEO Brian Chesky. Brian, welcome. And Airbnb more than a home. You want to be sort of an Airbnb for the world.
Yeah.
And for services, tell us the revenue drivers here. Why is more experiences, more services going to lead to a bigger business and investable opportunity?
Well, I mean, as big as Airbnb is, and we do around $90 billion a year in bookings, there's so much greater opportunity for people to monetize the biggest asset in their life. And it's not their home, it's their time. And so what if all the people's skills, all the people's passion, their expertise could be monetized? A huge percent of the jobs in the United States and around the world are becoming, essentially services jobs. And there is no Amazon for services, People say Amazon's the everything store. It's kind of the everything in a cardboard box store. But there's this whole other world. It requires trust. It requires two people to have an exchange between one another. I think that's where Airbnb's core competency is. What we built is an extensible platform that's not limited to homes.
What's interesting is the chefs, the massages, the other key services that you're offering do have to be vetted.
Yes.
That's when you get the scale.
Yes.
How are you going to scale that if you're doing this on a person-to-person basis? How much does ML then take over?
Yeah, I mean, a lot of what we do, and I think a lot of what everyone in technology does, is you start things by hand, you learn the rules, and you train the technology, and the technology takes over, either does it or augments the people. And that's exactly what it was like here. We start very much by hand, and then we build tools to automate the tasks that people are doing.
Brian, I started using Airbnb in the UK around 2010-11 when I went to college, right? And that was before Uber even launched in the UK. And when I think about the development of platforms and app technologies like yours, the one point of difference that an Airbnb has versus an Uber is that you don't yet have advertising. Whereas you look at Uber's ad growth, now for them on the investor side, it's a really big thing. How do you think about that?
I think it's a huge opportunity. One of the frameworks I really like around how to invest is you want to invest in the most perishable opportunities first. And so we think a really perishable opportunity is, launching services and experiences. The timing is right. We think advertising is a huge opportunity for us. It's an inevitable opportunity for us, but we don't think it's the most perishable opportunity. So it hasn't been something we've prioritized in our near-term roadmap. I also think it's really good to first extend our platform from homes to services, experiences, and beyond. So when we build things, we can build them as a horizontal platform.
Inevitable. That's really interesting. You got a lot of credit this week for the relaunch of the app and its ability to give you some long-term growth. I'd just be grateful to hear how you think it will drive long-term growth. I think from the street's perspective, that's more about revenue growth and profit, but maybe scale of the platform as well.
I think there's three things. Number one, there's a whole bunch of people who don't book Airbnbs because they don't come with services. They go to hotels. So what if you could offer all the services of a hotel and more in an Airbnb? So that's one way we actually could grow, is to get a lot more customers. The second way we can grow is a lot of people use Airbnb, but they only book one thing on the reservation, a home. So we can essentially get a greater share of wallet on the trip. And the third and the longest term opportunity is local demand. We think a lot of these services and experiences that we're initially building out for travel consumers are eventually going to be things you're going to want to book in your own city. And that is an even significantly greater market. So there's really these three types of horizons.
Cosplaying with Megan Thee Stallion, learning volleyball with an Olympian in Rio. How did you get these one-off experiences? I mean, is this making some phone calls?
Yeah, I mean, a year ago we launched Icons, which are these extraordinary experiences hosted by the biggest names in culture. We had, we made the Up House float in the sky, and we did all these really cool experiences. And then we started thinking to ourselves, how do we bring that magic to experiences? And we built this network of really interesting celebrities and global icons. And one of the things that we found is a lot of them heard about what we're doing, they reached out to us. I think a lot of these global celebrities want to connect directly with their fans. They don't just want to have a parasocial relationship on social media. And I think the more we talk about AI, the more we start to realize that we are accelerating our life living in a digital realm. We're spending more and more time on devices. And we want to be the kind of company that are getting people off devices into the real world, just as a balance. And I think that could be a very exciting proposition for the future.
As you can imagine, this show's been talking about AI relentlessly for the last 3 years. But we took a pause and started talking about tariffs and the economy relentlessly. You said now is the perfect moment to be launching these services and experiences. Why, in this environment where you saw consumer sentiment today is woefully low?
I mean, Well, number one, we reported really, really good growth within travel. So I think people are still traveling. And I think when consumer sentiment is unsteady, they still want to travel, but they often want to find more affordable options. Airbnb is a great way to do that. But beyond that, like, this is a very long-term bet that we're making over the next 5 years, and I think this will endure across any kind of economy. It's just good to remind people, Airbnb started during the Great Recession of 2008, and so I think a lot of the great businesses are starting during, like kind of a weakened economy.
Brian, you're pivoting to founder mode, right?
Yeah.
How's that going to help Airbnb navigate the world that it's in right now?
I think founder mode basically just means like running a large company with a hands-on approach where you're in the details, you're leaders in the details, and everyone's rowing in the same direction like a startup. I think those principles are more important now than ever with this new technological revolution that's in front of us. You need people that are able to basically have their hands on the steering wheel and not be, in essentially like a self-driving car, which is, how more professional managers typically run things. So I think this is the perfect time to lean into the future, to put the pedal to the metal, put your hand on the steering wheel, and really drive transformation. And I think a lot of the great companies in history have been led that way.
With that in mind, Airbnb, the technology company, what's its core competency? What are your people really good at that other companies are not?
I think a few things. Probably a few, but I'll highlight just two on the right now.
Please.
The first is our application. I think we have one of the most beautifully well-designed and built apps in the world. We're able to show it's incredibly intuitive. I believe we have one of the best design teams in the world. So we have really great applications. And so take AI, there's a lot of development on the large language model layer, but the applications haven't seen a lot of development. If you pick up your phone, almost every app looks exactly like it did before generative AI came on the scene. So that's the first thing. The second is probably even more important, the offline world. We're really good at building apps, but I think we're even better at designing this system of trust between two strangers to live together. I mean, nearly 4 million people a day live together in Airbnb in nearly every country in the world. Think about all the ways you need to keep people safe, handle their issues, match supply and demand, facilitate money, make sure they're having great experiences. There's so much more. The offline world, the Airbnb, when people see Airbnb, they see an app, and the app is just to scratch the surface of our community.
I love that you're talking online and offline. Briefly, when you're thinking about Klarna having to decide that actually all the AI focus has to be unwound a little bit, customer service is not working as they wanted, bring people back. You're bringing AI to customer service. How's that going, and how much do you have to rely on people still?
We still have to rely a lot on people. I think it's going incredibly well. We launched a customer service agent in the United States to all English-speaking users, where now if you need help, you can reach out to an AI customer service agent. It's a front line. It's been trained on, hundreds of millions of customer trips to be able to be 24/7 and be an escalation point to humans or be able to answer the question themselves. But I think the key lesson here is you don't want to rush into a trend. I think that people got really, really excited about AI. They inevitably thought it's the future. It's going to do all these tasks in the future. All that's true, but you can't skip steps. And people want things to work. And so, we didn't want it to be an AI lab. We wanted it to be something people could trust. And so we've been very, very careful about focusing on solving real problems responsibly with a model that doesn't hallucinate. And I think that's what we're doing.
Airbnb CEO and co-founder Brian Chesky. It's great to have you back on Bloomberg Technology. Thank you very much. Now, coming up, thank you.
All right, that was Airbnb CEO Brian Chesky speaking with Bloomberg Technologies anchors Ed Ludlow and Caroline Hyde. Mr. Chesky in our New York studio there. So that's a good thing, talking about Airbnb and the growth of Airbnb, and is still keeping an optimistic outlook despite some of the economic uncertainties here. All right, it's Friday. We need to talk to one B. Ritholtz. Barry Ritholtz joins us. He's the founder of Ritholtz Wealth Management. That's his day job, but he's also equally famous as host of Masters in Business podcast. I think I'm going to call it the most popular one we have here on the Bloomberg platform. Hey, Barry, quite a turnaround for this market. I think I'm still living in a world with much higher tariffs than we started the year. But I got a stock market's kind of right back to where it was at the beginning of the year. Does this make sense to you? Well, we had Barry.
Here I am. Sorry.
There he is.
I'm muted when I'm listening, and I don't want any of my noise to get in your way. Yeah, it makes perfect sense because, I got a lot of pushback to remember the discussion back in March, tune out the noise. Eventually the stock and bond market, if the policies are too damaging to the economy, future corporate revenues and profits, they will let whoever's in the White House know in no uncertain terms. And so we've seen this happen in the past. Look, when Trump was reelected and he had done tariffs in his first term and he had talked about tariffs during the entire campaign, I think the consensus was we'll get like a 10% tariff here or there. Hey, we all know China's a bad actor. Maybe he'll bring them to the negotiating table. What ended up happening is 100% tariffs on 182 countries and 130 or 40% on China. The market turned around and said, oh, our expectations for forward revenue and profits are way too high. We have to adjust downwards because tariffs are inflationary. People have a finite amount of money. Consumers are going to spend more when you put in this global giant VAT tax, because that's effectively what it is. Even if some companies, retailers, manufacturers eat some of the tariffs, they're not going to eat all of it. And so, hey, make up a number, 10, 20% too high in revenue. And of course, profits always fall faster than revenue. So we're 20, 30% too high in profits. Doesn't take long, down 5, down 5, down 5, 3 days in a row for the market to say, okay, we're now adjusting to this new policy. But, ultimately, Scott Bessent triumphed over Peter Navarro and convinced the president, hey, this is really disruptive. Let's just, put a pin in this for 90 days. And the market said, that's fantastic.
In the UMich survey, one of the things that really caught my eye was consumer views of their current personal finances dropping to the lowest since 2009 and financial expectations sliding to fresh record lows. What are you hearing from your clients? Do you also sense the same gloom, or are they more pessimistic that things will be okay? Optimistic that things will be okay?
None of the above. I'm going to let you in on a little secret. The vast majority of sentiment surveys are complete total wastes of time. It's not hard data. It's soft data. It's always lagging. It's always backwards looking. It always tells you what happens over the past 6 months. I've been writing about this since, 2012. And the thing that really cracks me up is just look at the Federal Reserve's survey of inflation expectations. It was at its lowest point. Sometime, I want to say that's like April or May 2020, just before inflation, CPI and PCE skyrocketed from 2% to 9% and change. You want to guess when it peaked? It peaked sometime around June 2022, around the same time as inflation peaking. And remember, these are 1 in 5 year forward inflation expectations. So right before the biggest spike in 40 years, it was at multi-year lows. And right before the biggest crash in CPI and PCE, or whatever your favorite inflation measure was, forward expectations, they actually didn't peak in June, they peaked in July. And then, but inflation more or less peaked in June 2022. So if you're looking at them for any sort of future expectation as to what's going to happen in inflation, man, you're looking in the wrong place. Nobody knows what's going to happen with inflation. And 5 years out, LOL, stop.
So given that, Barry, what are you going to be on the lookout for in the coming days and weeks and maybe even months as you continue to evolve your investment outlook? What's most important to you?
You're going to hate this answer, but it's the God's honest truth. Tell me the last person who whispers into President Trump's ear before he makes a decision, and I'll make it easy for you.
Yep.
Is it Scott Bessent or is it Peter Navarro? And it's never going to be 100% all in one. But if it's 90% Scott Bessent and 10% Peter Navarro, hey, that's fantastic. The economy will do well. The markets will do well. He's a Wall Street guy. He's the one who did the 90-day pause. I bet he was behind the New Deal with China. If it's Peter Navarro, well, then be sure to have your air sicknick bags handy, because everybody is going to be unhappy with the volatility and really, let's be blunt, an irrational retread of the 1930s Smoot-Hawley legislation. I think we all have to follow what many Trump supporters said about him last term as president. Take him seriously, but not literally. So my best case scenario is this is all a negotiating tactic. We all know China can be a bad actor out there. If he manages to bring them to the table, maybe put some protections in for U.S. IP, stop hacking American companies, and treat our investors and companies more fairly in China, that's a big win. All right, it was a lot of Sturm and Drang and a lot of noise to get there. But if Scott Bessent is dominant and Peter Navarro is waning, we'll get through this just fine.
All right, it's getting warm out there, Barry. What are you driving these days?
Well, it's kind of drizzly today, so I have errands later. I'll take the truck out. But this time of year, when it's 70-something, this is open air cabrio driving, and whether I don't care if you drive. I just had this conversation with people. You don't have to go spend $1 million on a Lamborghini Spider. You could buy an inexpensive Mazda Miata, 3 years old, 5 years old. It'll cost you $22,000. What is more fun when the sun is out, the sky is blue, the wind is in your hair? That is peak automobile. And in May and June, nothing beats a convertible.
There you go. All right, Barry Ritholtz, folks, auto aficionado. He has a podcast, Masters in Business, wildly popular, great guest. I highly recommend it. And then he's got a day job at Ritholtz Wealth Management, managing some money. So we appreciate getting a few minutes of Barry's time. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by ShipStation. Stay with us. Your top stories in global business headlines are coming up in just a moment. All right, here's my commute. I am a New Jersey Transit train rider. So here's my revised commute home. I will take the 6 train from our offices down to 33rd Street. I will then walk east all the way to the East River. When I hit the East River, I'll stop. And there's a pier where they have ferry service to New Jersey. I'll hop on the 105 ferry. It's 1 hour. It takes me to Highlands, New Jersey, where John Tucker resides. I will then call an Uber to drive me the remaining 30 minutes to my Jersey Shore compound. And that's how we're going to deal with it today. Come Monday, we'll see. So hopefully all the New Jersey Transit riders are doing well today and coping. And hopefully these folks are coming back. We'll have more coming up. This is Bloomberg. Thank you.
Thank you. Oh my gosh, good luck. Go.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. President Trump's wrapped up his Middle East trip by putting Iran on notice. CBS's Natalie Brand.
His administration has handed Iran a proposal for a new nuclear deal. And he also went on to say that Iran knows they have to move quickly or something bad is going to happen.
Russian and Ukrainian delegations met today in Turkey for about 2 hours. CBS's Elizabeth Palmer.
The biggest achievement is that they have agreed to swap 1,000 prisoners each, although there have been prisoner swaps going on all the time, so that isn't as great as it sounds. One Ukrainian source told the Reuters news agency that Moscow's demands at the table were non-starters.
The man convicted in the near-fatal stabbing attack on novelist Salman Rushdie was sentenced this morning to the maximum 25 years in prison. It's a bad scene in Juneau, Wisconsin, about 60 miles northwest of Milwaukee. The mayor says a tornado did widespread damage.
The worst that I've seen is this stretch we're sitting in. It must have ripped right through here. There's an adult home. Roof was tore completely off.
350,000 commuters affected by the engineers' strike that hits New Jersey transit trains. Union official James Lewis says they submitted a late proposal.
The national mediator that was there asked them to try to give us a counter. We still had a couple hours left before strike deadline, but they decided to leave the room.
New Jersey Governor Phil Murphy.
Our single highest priority, in addition to making the system work, just as it has been for the past several months, is reaching a fair and affordable deal as soon as humanly possible.
Families who lost 346 loved ones in 2 Boeing crashes of 737 MAX planes 6 years ago overseas say they've learned the Justice Department intends to back down from any criminal prosecution against Boeing. On the Health Watch, new ways to check blood pressure may not be the best way.
The most reliable way to measure your blood pressure is with the traditional cuff. Instead of smartwatches, phone apps, and other devices, Dr. Eugene Yang is among researchers who wrote in JAMA Cardiology.
They haven't really been tested appropriately.
He says doctors need to agree on how to test the new technology, which relies on artificial intelligence, and that AI needs much more data to help it learn how to properly interpret signals from the body. Heather Bosch, CBS News, Seattle.
Verizon says it's ending DEI programs. It wants federal approval to buy Frontier Communications. This is CBS News. Tom Cruise has made another grand entrance.
Cruise climbed on top of a couple of small planes at the London premiere of Mission Impossible: The Final Reckoning. The aircraft, same type Cruise hangs onto in the movie, were part of a backdrop for the red carpet event. The actor dazzled the crowds at the Cannes Film Festival on the French Riviera the night before, where Final Reckoning got a 5-minute standing ovation. The film opens in theaters a week from today. Deborah Rodriguez, CBS News.
The New York Times reports the Trump administration yesterday fired nearly 600 employees at Voice of America, the federally funded news outlet providing reporting to countries with limited press freedoms. Layoffs targeted contractors, most of them journalists. The Washington building that houses VOA is for sale. Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
President Trump says Republicans must unite behind one big, beautiful bill, but they're not. Welcome to the Friday edition as House Republicans on the Budget Committee sink the bill with spending cuts, tax cuts, and a higher SALT cap. We're going to get into the fine print coming up with Maya McGuinness at the Committee for a Responsible Federal Budget. The president wrapping his trip today in the Middle East. We're going to talk about some of the deals struck and new investments in high tech and specifically AI. When we're joined by former Congressman Denver Riggleman live from Dubai a bit later this hour with analysis from our panel today. Democratic strategist Roger Fisk is with us alongside Republican strategist Lisa Cammuso-Miller as we try to get to the bottom of what just happened on Capitol Hill. First, of course, though, the markets and the Friday trade with our good friend Charlie Pellet at World Headquarters in New York. Hey, Charlie.
Well, hello there, Joe Matthew. You are too kind. We have got the Dow, the S&P, NASDAQ all advancing just about the best level of the day right now on the S&P 500 index. Stocks pushing higher, on track for a big week for the U.S. equity market. For the week, the S&P is up roughly 4.5%. Today's numbers with the S&P right now up 13. That is a gain of 0.2%. Right now we're at 59.30. The Dow higher by 53, up 0.1%. NASDAQ up 31, gain there of 0.2%. Stocks did spend much of the morning fluctuating between gains and losses. 10-year at 4.43%. The 2-year currently yielding 3.96%. Spot gold down 1.7%, 31.83 the ounce. And West Texas Intermediate crude up 1.5%, 62.56 a barrel on WTI. Stocks and investors focusing on trade rather than the day's economic data. Consumer sentiment fell to the second lowest on record. This according to the University of Michigan. Joanne Shu is director of surveys at the university, and she says there was one big topic on consumers' minds.
We've been seeing a rising share of consumers spontaneously mentioning tariffs. A few months ago, it was really a fairly small number of people, and now it's almost 3/4. It's cutting across partisan lines. It's really on everyone's minds. And at this point, consumers are really waiting for the other shoe to drop in terms of its impact on inflation.
Joanne Shu, the University of Michigan. A massive corporate deal involving two of the biggest names in cable. Charter Communications has agreed to combine with closely held Cox Communications in a cash and stock deal. Right now, we have got shares of Charter advancing by 1.1%. Rival Comcast, little changed on the day, down less than 0.1%. Recapping, stocks higher. Best level of the day on the S&P, up 0.2. Balance of power continues right now. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you so much. The voice of Wall Street and the New York subway leading our way every day on Balance of Power. Thanks for being with us on the Friday edition. You made it to the threshold of the weekend. Balance of Power every day on Bloomberg Radio, on Satellite Radio Channel 121, and on YouTube. Find us right now by searching Bloomberg Business News Live, because we've got news, high noon in Washington, and it didn't even get out of committee. That's where we stand now with the one big beautiful bill, as Donald Trump calls it, that we have talked so much about. It failed to pass the Budget Committee. This was supposed to be a key moment. After all the wrangling, the 11 bills come together, assembled into one big beautiful bill by the Budget Committee, so Rules could then accept it next week and it would go to the floor for one big beautiful vote. Apparently, this is not happening. The line coming out of the Budget Committee chair. From members, I do not anticipate us coming back today. Jody Arrington speaking there. The final tally, 21-16. So who's getting a phone call from Donald Trump tonight? He's on his way back from Abu Dhabi. He's got time. He's sitting on the jet with the phone. A lot of people in the other ear. Here's the list. You don't have to look further than the terminal. Republican representatives, you can recite it for me. Chip Roy, Ralph Norman, Josh Brecheen, Lloyd Smucker, and Andrew Clyde. Voting with Democrats. If you're not too familiar with the process, it is incredibly rare for something like this to not even get out of committee. What is the speaker going to do now? It's where we start our conversation with Maya McGinnis, watching this all happen from her perch as president of the Committee for a Responsible Federal Budget. Maya, it's great to see you. We've got breaking news here, and I've got a lot of questions for you as always. But based on what we just saw and heard on Capitol Hill, is there a chance that one big beautiful bill never passes at all?
Well, first off, what timing is this, right? I'm just still processing everything that just happened after watching the whole hearing. I don't think that's the way this story ends. I think that this proceeds after there are some negotiations and some changes to accommodate the fiscal hawks who voted against it. I think it goes out of the House. I think then you have another massive, massive showdown with the Senate, which is unwilling to even do some of the reforms that the House has included. Ultimately, and I've been saying this for a while, I think it could pass as a massive budget buster as it is currently, or it could end up being just temporary extensions and limping along to continue to figure it out. But those fiscal hawks are not comfortable with the borrowing that is in the bill, and I sympathize with them. It's huge.
Well, let's talk about busting the budget here, Maya, because as always, the committee has done quite a bit of work looking at least what we believe, what we have now in terms of legislation and what it might mean for the deficit and debt moving forward. The Developing House Reconciliation Bill, as you write, is shaping up to add roughly $3.3 trillion to the debt through fiscal year 34, setting the stage for more than $5.2 trillion of additional debt if policymakers ultimately extend temporary provisions. And that might be right where we are, Maya, because Speaker Johnson needs to sweeten the pot for SALT Republicans, and he needs to cut even more to make the Freedom Caucus happy. So are these numbers going to be even worse?
Yeah, there's a couple of points. One, a big part of this bill is just temporary tax cuts. Remember, we're in this situation right now because there are a bunch of temporary tax cuts expiring. And you've got the Senate saying, oh, we shouldn't have to pay for them because we always meant for them to be permanent. They made them temporary, so the bill would be smaller when they first passed them in 2017. And now they're saying they shouldn't have to pay for them. And yet, in the very same breath, they're also, so far in the House and the Senate, I assume will do the same thing, putting in new tax cuts on a temporary basis. So it's really arguing, I mean, baselines, people are sick of baselines, I'm sure, but multiple baselines at one time. Don't charge us for extending things. Don't charge us for the full cost if they're temporary. So there is a very strong chance that these tax cuts, if they're put in place, will be extended because it always plays out that way. So the price tag will be much larger there. And then two, to your point, they're not done negotiating. The SALT folks don't think that a $30,000 cap is enough. They want to up it. This is a very expensive bill, and the fiscal hawks would not be comfortable doing that in a way where it's just deficit finance. They'd want more offsets.
We talked to Nicole Malliotakis about that around this time yesterday. The Republican from New York has this incredible scenario in which she has to straddle her sitting on the Ways and Means Committee with her membership in the SALT caucus. So they got to $30,000, raised the cap to 30, up from 10. Here's what she told us yesterday about what that means for her district.
SALT right now is roughly, it's about $215 billion. We want to stay within that piece. Now, that may mean we need to adjust the dials. The tripling of the deduction to $30,000 covers 98% of my district. Now, would I have liked a higher number? Sure. But it's not what you want, it's what you need.
Well, here's the problem, Maya. She wasn't even allowed in a meeting with SALT Republicans the other day because of her role on the Ways and Means Committee. This is how chippy it's gotten on Capitol Hill. Does the issue of SALT as a singular issue here threaten this bill the most?
It's interesting. I saw that interview and I thought, I wonder how people will respond to that, because the SALT group is diehard on this issue. Is it the biggest threat? I don't think it's the biggest threat. I think the biggest threat is the fiscal conservatives. I think it's the debt levels. I think it is the more that bill hangs out there and people understand that you are talking about adding $3 to $5 trillion from this version. And like I said, I think it gets worse, not better. I think the real threat is that there are just enough Republicans who've been talking about the need for fiscal responsibility and spending cuts. They cannot stomach, no matter what the talking points are, they cannot stomach a bill that would add to deficits and debt. That's where I see it could break down. The SALT folks should be very happy with 30. They're still negotiating. They'll negotiate to the last minute. It's incredibly expensive. And
did you hear that from Maya McGinnis? They're listening to us right now, Maya. You're going to get the emails just like I am.
Yeah, I sure am. And I know this is the only group that's scarier is the seniors when you say something about not adding new benefits. But, there's a strong and interesting case, and people don't appreciate this, but why would states that are low tax states be subsidizing high tax states when those high tax states are getting something in return? They are getting benefits. They are getting programs. These are the decisions the states make. So it's difficult to say, well, you have fewer benefits, so you should subsidize ours, which is really what it is. Okay, I'm getting
to the heart of the matter. Yeah, I'm in big trouble. I'm going to go home after this.
Sorry
is
to
over.
bring you down.
Spending time with Maya McGinnis here. As if you're just joining us, the bill failed in the Budget Committee. The lead off to the big, beautiful week that was going to end with a floor vote next week. Maya, you've been through this a couple of times. What do you think happens next? It looks like they're not coming back today. Could Speaker Johnson still pull off a floor vote next week?
I think he could. I'm not saying that it's certain at all, but I certainly think it could. First, I've been amazed because every time I look at where they are, I'm like, I don't see how you get to the next step, and they have. And I think Chair Arrington has done a great job kind of making everybody feel heard through this. I think there are some trades that could happen. It seems to me that some of the holdouts might say, in return for, or we want you to have, we are very, very uncomfortable with how these tax cuts expire. And then the savers don't phase in until after President Trump leaves office. They wait 4 or 5 years, right? So they're like, this is all backloaded in the savings. It never happens when it's structured that way. I could see them insisting that the savings is moved up, and that becomes something that would entice them to vote this out of committee. And then there might be some space for SALT there. Again, I don't think there should be, and it's so expensive, it's hard to do it. But I think that's what it is. It's moving up some of the savers that might get some folks to buy in.
So you're saying there's a chance.
There's certainly, I think it depends on what the president has to say as well. I'm sure they will be hearing from him. And,
right. Well, that's exactly right. We've seen him turn Ralph Norman around before. I don't know if Chip Roy's taking that phone call today, Maya. This is going to be a really interesting 12-hour period to track. Maya McGinnis in the clutch. How about that at high noon here on Bloomberg? Where else are you going to hear that? With the president of the Committee for a Responsible Federal Budget. I see you, Matt Miller. If you want to email me, you can. I'm trying to ask the right questions here as we find our way to a deal on SALT. It'll happen eventually, according to Maya McGinnis. And maybe we will see a vote next week. Of course, if it happens, we'll experience it all together here on Bloomberg. We're going to have a special conversation coming up next with the former congressman from Virginia, Denver Riggleman. He's in Dubai, investing in AI. His view on the president's trip next, right here on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. Big week for the U.S. equity market, on track for a gain of about 4.5%. Stocks are pushing higher, and right now we're holding close to session highs, with the S&P advancing by 17 points, up 0.3%. We've got the Dow up 90 now, up 0.2%. Nasdaq up 35. That is a gain of 0.2%.
Travels. Godspeed and safe travels. Saying later, dryly, for members, I do not anticipate us coming back today. The final tally, 21-16, as you heard it. Chip Roy, Ralph Norman, and company voting with Democrats to sink the bill. This coming just an hour or two after President Trump went on social media, Truth Social, calling on Republicans to unite behind one big, beautiful bill. He said, stop talking and do it. Well, guess what? Chip Roy is still talking. And at the moment, there is no way forward here. It was supposed to clear budget today, rules on Monday, to the floor in time for a big, full smash vote ahead of Memorial Day. That was supposed to be the plan. Now we're picking up the pieces, or back to the drawing board, or whatever cliche you suggest. And somebody who's been through the throes of debates like this, staring down the barrel of a deadline, in this case to a looming debt limit expiration, is Denver Riggleman. Now, we're going to talk to Denver. I thought we were going to be talking about a couple different things here, and we are, because Denver's spent the week, our former Republican congressman from Virginia, who you know from this program, has spent the week overseas, just as President Trump did. Denver now helps to run and has founded an AI company, which is what brought him over there. We're going to get into some of the investments and the important turn toward innovation in the Middle East with Denver, who's joining us right now live from Dubai. I've got to ask you, though, Denver, I guess this is why partly you're not in Congress anymore. What just happened in budget? These are members of the Freedom Caucus who sank the bill that President Trump says needs to pass. Is this thing dead? Can the speaker find a plan B?
It's not dead, but it's on life support. You know, I know all of them, right, Joe? And, you know, I've known Chip, I know Ralph, I know Jody, I know them very well. And, you know, Jody can sometimes be pretty practical, but Ralph and Chip, once they dig in, they're going to dig in. So I think what we're looking at right now is they're going to ask for concessions in order to get that out of committee. And I don't know if everybody's going to be willing to do those concessions. So I think you're going to see a couple days of crazy up there on the Hill. And with Jody coming up and saying, oh, we're not coming back today, yeah, there's going to be a lot of discussions and screaming and yelling tonight. You know, I know. So that's what's happening right now, my friend. That's what's happening right now.
Okay, and the phone calls are going out too, right? President Trump is on Air Force One with nothing to do but talk.
Yeah, I mean, who knows, what he's saying right now. I mean, but I got a feeling that the phones are lighting up all over DC.
Incredible. Whether or not we see a floor vote next week, I don't know if that's important with regard to timing for this speaker, Denver. But is Donald Trump still de facto speaker, or does Mike Johnson have any levers to pull?
Mike Johnson has no levers. No, absolutely none. It's going to be what Donald Trump says to do, and we've known that since the beginning when Mike was elected speaker. And as you know, I know Mike also. But I think what you're seeing right now is Donald Trump tried to push this train of this big, beautiful bill. But there are still certain realities that happen, especially in the Freedom Caucus and how districts vote. And you might say, well, they have to be completely behind Donald Trump. They have to completely do these type of things. But there are still some things they just can't go against. And when you're looking at this massive deficit push and what's happening with our debt and deficit, what happens is they're looking at a midterms. That's a crash and burn. And I think, Joe, that's what you're looking at. They're so worried about crash and burn midterms. And right now, they're more worried about winning their election and supporting Donald Trump. I'm telling you right now, that's what's going on.
Amazing. It's not often I get to talk to you when you're in Dubai, and I want to hear about your week. I want you to help us frame what we just saw on the president's journey, because you're there with a firsthand experience. We should let everyone know that not only does former Congressman Denver Riggleman run a distillery in beautiful Northern Virginia, well, I guess Central Virginia, but he also runs an important security firm, the Rig Security Firm, and now Hoodle AI, a health tech and security firm that has made Denver Riggleman one of the only people I've ever met who knows what it's like to buy a Blackwell chip. Speak to me, Denver, about the tens of billions of dollars that we saw unlocked in the Middle East this week, what this means for countries like the UAE, but also entrepreneurs like yourself.
Well, sometimes you have to separate, how you feel politically when you're doing business, but it's very difficult to here. And some of the things that we saw were disturbing over here, the way that, Trump wanted to make his entrance and things like that. But I will say this. For us, this started over a year ago. This was such a dynamic place to do business anyway, well before Donald Trump came over here. But there is an unlocking of technical and financial transfers going on. And you know what? Bloomberg reported this 6 days ago. You guys did on CFIUS, right? The Committee for Foreign Investments in the United States, and how they're going to actually streamline those actual regulatory issues. And what does that mean for the UAE and for other places here in the Middle East, like Saudi or Qatar? What that means is that you're going to have much quicker, more efficient technology transfer outside of the CFIUS type of regulatory structure that you have to use. And that was something that I did not know was going to happen. I actually read it when you all reported it. And I was on the Financial Services Committee, Joe. So I actually know how CFIUS works. So for me, the unlocking of the potential here, I believe we already had American companies coming here. I think that American companies, specifically by the UAE, have been invited to come in here and do business. And what we've seen is incredible reception, courtesy, and respect as we're here with our AI company. I've never seen anything like it, Joe, to be honest.
Huh, that's incredible. So this is a new frontier, obviously, for high tech. Is it an answer to our decoupling with China?
I think a lot of people talked about that here. I don't like to, there's so much pride and respect that the Emiratis have when they're having discussions with you, especially when they find out you're a former congressman. They actually sometimes push away from politics because they don't want to get that in the way of business. It is such a respectful culture. And that's something that I've tried to respect as we're going on here. But what you're looking at, I think the UAE, what I was told by somebody very high up in one of the Emirates, listen, Joe, I've been from Abu Dhabi to Dubai, all the way up to Ras Al Khaimah. I've met with the highest, some of the highest, I would say, positions in some of these areas. And what they're saying is listen, hey, nobody's ever going to be the United States. But we do believe that we can be the answer, right, for technology and for growing other companies from the United States, but really being that answer to other countries that might be looked at as threat countries. But you have to remember, too, UAE does business everywhere. It's a dynamic, diverse, accepting environment as long as you follow the rules, right? You have respect, right? You go forward in a way that's very, very legal. We've even had discussions with individuals asking us about, can our AI help with compliance? So there's so much going on here. But again, I think the UAE looks at themselves, and also I would say Saudi and Qatar as we're going forward here. I think they look as the linchpin in the global world for dynamic building of companies in tech services and manufacturing. And what we've seen here, I had some stories, Joe, when me and you have a bourbon sometime, the stories here about the growth of American companies is pretty extraordinary.
Well, this is extraordinary. We saw Jensen Huang there with Donald Trump in the Middle East talking about selling millions of chips in the UAE. When we consider the diversion rule from the Biden administration that came in at the last minute and made this impossible for some of the countries that you're visiting this week, Denver, do we look back at the Biden administration as a misstep on the march to innovation in AI? Are they righting the wrong?
It's actually a really great question. I think, though, when you're looking at China specifically, also when I was on the Financial Services Committee, I had to go to South America and talk about the Belt and Road initiatives from China, which is really a threat to us economically. And we can go on that. I was on the China Task Force. So I would say that Joe Biden had a very difficult decision on how you protect actually against Chinese practices and what we do with our chip makers and our dominant technology like with NVIDIA. I think what you're seeing now as we're seeing sort of this change in the worldscape is you're looking at security structures that are being actually talked about over here right now. And I think what you're seeing with the UAE, they're actually pledging that they're going to have those security structures in place, right, to guard against any type of, I would say, illegal IP transfer between China, right, and U.S. companies that are coming over here. Last year when I was here, and this is my second time last year, we were actually talking about NVIDIA chips and working through attestations for the State Department to see if we can do it, and it was really a no-go. So it's very interesting to me that NVIDIA now has a play over here, but I do think there could be some security concerns. But looking at the UAE, they have been trying to address that down the line, and it's something I've been very blunt about. And again, they're very respectful when I talk about things. But Joe, I still got to be me, right? And I still got to actually outline the things that I think need. That's just the way I'm wired. But these are, again, I do believe, and I'm going to say this cautiously, I do believe that you see a new security posture here in the UAE that's saying, listen, you come here and American companies will be protected. And that is some of the assurances we've been getting over here. Now, is that true? We'll see. But right now, from what I've seen with the UAE, with Dubai, with Abu Dhabi, all the way up to the northern province of Ras Al Khaimah, I think that we're having a resurgence and looking at security and them as being allies to us in this region. But again, it's trust but verify, but they also think the same about us in some ways too. So it's very interesting.
Wow. This sounds like a fascinating trip for you, Denver. You got to come see us and let's distill everything that you experienced. I want to hear more about the investments you secured and the rest of it when you get back to town. So come see us here in Washington, of course, and travel safe when you get home. The former congressman from Virginia, Denver Riggleman, with his AI company, his security firm, and life in politics, not to mention his experience in the Air Force in the national security space behind him. Really interesting, and we'll have more to discuss with Denver. Maybe over that bourbon. Can we do that here? I think maybe on the Friday edition, if producer James lets us. We'll assemble our panel next. We have a lot more to talk about following the breaker on Capitol Hill. Yeah, the president's on the way back. He's got some phone calls to make because one big, beautiful bill could not even get through the Budget Committee. Never mind what's in store in the Rules Committee. The Freedom Caucus has its hands firmly on the wheel right now. We'll have more with Roger Fisk and Lisa Camuso Miller as we get to the bottom of what's going on here in the nation's capital, right here on Bloomberg.
It's 1240 on Wall Street. We do check markets all day long here at Bloomberg. We have got the U.S. equity market holding close to session highs. We're on track for a winning week. On the week, we're looking at a gain for the S&P 500 index of 4.9% right now. S&P higher by 19, up by about 0.3%. The Dow up 169, up 0.4. NASDAQ up 31, up 0.2. Again, your key takeaway, we are very close to session highs on the S&P. Stocks are rising as trade hopes offset this morning's sentiment data. 10-year 4.43%. The 2-year is currently yielding 3.97%. Gold down 1.8%. Spot gold now at $31.83 the ounce. West Texas Intermediate crude up 1.6%. 62.63 for a barrel of WTI. Bitcoin up 0.5% right now. 104,025 on Bitcoin. A measure of consumer confidence in America's economy tanked this month. And with that story, here's Bloomberg's Vinny Del Giudice.
The University of Michigan reports its nationwide consumer sentiment index dropped to the second lowest on record as White House tariffs rattle the economy. Inflation expectations rose to multi-decade highs. We're talking the 1980s and early 1990s. A gauge of the overall U.S. economic outlook dropped to an almost 45-year low, and household financial expectations slid to a record low. Vinny Del Giudice, Bloomberg Radio.
The Justice Department is considering an agreement that would allow Boeing to avoid prosecution for its role in 2 fatal 737 MAX crashes, that according to lawyers representing the family members of victims in those accidents. Boeing shares, they're down now by 0.3%. Briefly, after earnings, Applied Materials shares are tumbling 6.2%. Take-Two Entertainment after earnings, trading lower now by 1.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you, sir. Live from New York, Charlie Pellet on the markets. I'm Joe Matthew in Washington, and this is Balance of Power on Bloomberg Radio, satellite radio, channel 121, on YouTube as well. Good time to dial us up. Search Bloomberg Business News Live, because we've got a lot to talk about, whether you're plugged into the Bloomberg Professional app or listening to us on an old-fashioned radio station. News tends to break every day around 12 noon when we come on the air. We're ready for it. That's why we meet here every day. Happen again today, as we're going to discuss with our panel in just a moment. The one big, beautiful bill the president's talked so much about. Couldn't even get through the Budget Committee. And so it is back to the drawing board on Capitol Hill with a bit of a protest by the Freedom Caucus slowing things down. We've also got a breaker on the terminal right now, and it's coming from the Federal Reserve. Don't confuse this with a Doge story because they may not be related. We're just learning this now at Bloomberg as the Fed announces plans, or we're reporting plans, to shrink the Fed's workforce by about 10%. Job cuts are coming to the Fed. It'll happen over the next several years, mainly through attrition. According to people familiar speaking with Bloomberg, the Fed's going to be offering deferred resignations to some workers, according to sources we're talking about. And so the shrinkage continues here in Washington, whether Elon Musk is in town or not. And we assembled our panel here on the Friday edition, and we've got a good one for you. Roger Fisk is back, former special advisor to President Obama, our Democratic strategist. And, of course, the great Republican strategist, Lisa Camuso Miller, former RNC comms director, host of the Friday Reporter podcast, who spent a good chunk of her career working for a Republican Speaker of the House. Not this one, but she's seen this movie before. And, Lisa, I'll start with you on what just took place here. Couldn't even clear committee? What does that tell us about the long-term forecast for this legislation?
Well, Joe, I think it means that there is a long way to go, and we're not going to get to the Rules Committee on Monday. Then that is for certain.
That allows time for a recovery, though, for Speaker Johnson. Is this a bump in the road? Chip Roy just needs to feel better? How do you get around this roadblock?
I'm not certain how they can. And in fact, I think if anything, this is going to be a weekend where they're going to work really hard to try to get this through. But once again, I mean, this goes back to this whole strategy that comes from the White House about a big, beautiful bill, right? And the House said that they didn't think they could get it done. And the Speaker said they didn't think they could get it done. And the Senate didn't think they could get it done. And they were right. And so I think a lot of what's happening here is, you have an up and down vote in the budget. There's no opportunity in budget committee, so there's no opportunity for amendments. You've got 4 members of the Freedom Caucus that are in the budget committee, and those guys are absolutely, they were hardline no before they even went to the committee this morning. So this isn't terribly surprising, but what was supposed to happen is they were supposed to come to agreement. The bill was supposed to get out of committee. It was supposed to come from all the relevant committees. They were supposed to get it all together and get it off to Rules Committee for a Monday vote. Just feels like it's not going to happen. And so that to me tells me exactly what I expected to see happen. It's what people have been saying all along. This is a much, much longer road to go. The speaker is really eager to get this done by Memorial Day. It just doesn't seem like it's going to happen to me.
How many people have come on the air to say, yeah, give them to the end of the year. Meet me in September. Roger, the Freedom Caucus sent a tweet. They know the phone's going to be ringing soon here. Ralph Norman's in for it, right? Remember Donald Trump rolled Ralph Norman in the most recent speaker vote. Took one phone call. It was like 10 minutes later. He went back and voted again. They together sent out a tweet here. These are the objecting representatives led by Chip Roy. We were making progress, it says, before the vote in the Budget Committee, and we'll continue negotiations to further improve the reconciliation package. We're not going anywhere, and we will continue to work through the weekend. Roger Fisk, what will happen this weekend?
A lot of long, detailed, frustrating conversations that, to Lisa's point, probably go nowhere. And thank you for having me, and it's wonderful to be here with Lisa. It's kind of the curse of the 3 Bs, right? It's the Biden administration tried to do Build Back Better. Now this is the big, beautiful bill. And I think every administration would be well served by looking at their predecessor, be they friend or foe, and learning from the mistakes and the successes. And one of the mistakes of the Biden administration was going with the Build Back Better bill that was just too big and too broad and too vague. And the bigger a bill is, the bigger there are kind of definitions of what beautiful are within that. Then you have hardliners like Congressman Roy, like you mentioned, Congressman Norman, Andrew Clyde, who Ralph Norman says is against this, but I guess by now is probably on record as definitely being against it. And that gives license to some of the other members of the GOP House to create some separation. Normally, this should have happened in the first 100 days when the incoming administration has momentum and a lot of goodwill. But this is post-Signalgate, post-Qatari plane, post a couple stumbles where some of those frontline Republicans, when you throw in the SALT issue and some of the other things that we've talked about earlier this week, that they realize maybe there's more value in having a little distance from the president than voting to kick a couple 100,000 people off healthcare in their district. And that's the dynamic they're going to try to align this weekend, and it'll be a steep climb for the speaker.
Noted. We're now living in the post-Qatari plane era of the Trump administration.
There's before the plane and there's after the plane.
That's right. We're in now AP territory. Right. Did you hear what Roger just said? Did you come up with that? Build Back Better, big, beautiful bill.
The curse
Lisa?
of the 3 Bs.
Are there parallels here?
Roger, you're a messaging genius, and I love that you said that. I've been laughing since you did. I mean, really, it just does seem like it's politically tone deaf, and it's a little more of the same. It's just, to me, like, here we go again. And you're absolutely right, Joe. That plane really, I think, took a lot of the political moment out of this trip. So not only, look, this bill may have had. Trump is going to come back. He's going to celebrate. He's going to be pleased with how all the deals that he made while he was there and all the things that have happened. And the only thing that overshadowed all of that was this silly plane that he wanted to take back, right? But the difficulty here, too, is that he had built up a lot of really good momentum that was going into this big, beautiful bill. And then the tariff discussion started to happen. And that, I think, the timing of all of that is really going to make it even harder, right? Because I have heard other folks smarter than me talk about how the carriages are coming, all of the containers are coming from China, and they've arrived. And so it's about to be very difficult for people to be happy with the way the economy is running.
You guys are on a roll. Roger, Chip Roy tweeting himself. This is not the caucus now. This is the individual. We're making progress, he says, but the vote was called and the problems were not resolved. So I voted no. He says, I'm staying in Washington this weekend to deliver. Medicaid work requirements must start now, not 2029, and the Green New Scam, he says, must be fully repealed, as President Trump called for. You would think that this is a message to Democrats having an argument from the other side of the aisle. Are Republicans arguing with Republicans about the Green New Scam?
It's amazing to me that people still refer to the Green New Deal as if it became law at some point, and when in fact it's still essentially kind of like a philosophical construct on behalf of the squad and things like that. The climate and the clean energy elements of what Biden actually did were much more focused on infrastructure jobs and retrofitting buildings and things like that than they were about some fundamental paradigm shift about how the country fuels itself. But you see ads and attacks all the time that refer to the Green New Deal as if it's part of the law of the land, when in fact it's not. And that to me plays into the performative nature that we're seeing on all sides. So you have your Thomas Masseys and these other people that are more than happy to slow these things down. And so I used to say this with Speaker McCarthy, I would imagine Speaker Johnson gets up a couple days and says, why can't I just move back to Louisiana and have a normal life? This has to be incredibly frustrating because they have full control of the government, just as in the first 2 years of the first Trump administration. They couldn't even get their votes aligned to fund the wall. We're seeing that same kind of dysfunction play out now.
You know what, Roger, don't you think
God, life was even better in the radio business. Lisa, please go ahead. What's your response? Because I want to hear your take on what's going to happen this weekend.
Well, what I was going to say was that that's the traditional playbook, and that would be that the president is in the White House and the Republicans in their House and the Senate, but it's the president himself that makes this so much more difficult. I mean, he continues to make news. It used to be that there was sort of this cadence between the White House and the Congress, and that's no longer the case. The president continues to push forward with this slash and burn and all of the things that are happening, and it's making it more and more difficult for people to really enact change. So what would ordinarily be like a trifecta of great things that could happen because Republicans are in power, they're working against each other, really, and that's, I think, what makes it even hard.
Well, bring us behind the scenes this weekend, Lisa. How does this work? Are they going to be in a committee room in the House? They're going to be in an office building somewhere. They're going to be bringing in takeout. Are they wearing shorts and sandals? What happens over Saturday and Sunday that could change the picture by Monday?
I think it's a lot of all of that, Joe. I think everybody has a lot at stake, and they really want to see it happen. And so they're going to bring in every resource that they can. They're going to be having meetings late today into tomorrow. They're going to be having calls. They're going to be working the phones. They're going to be doing everything they can to try to find levers that they can pull in order to get this to the Rules Committee. Because also, too, the Republican House really does want to deliver for the president. They really do want this bill to get done. So I do think that they're going to call out all the stops. The difficulty here is that you've got this SALT group, the group from the Northeast primarily, that are going to fight like heck to make sure that SALT gets done right. And then you've got the Freedom Caucus that are working in the opposite direction. So if you're Mike Johnson, I mean, to the point that maybe running home to Louisiana sounds pretty sweet, it does seem like this is a really, really hard job, but I think he's the right guy for the job. It seems to me like he has the right tone and tenor, and he is got the right people around him that are helping him make good choices. And that is... We've seen two speakers walk away from this job, two Republican speakers walk away from this job, and there's a reason. It's because it's really hard to govern with so many different factions in the party right now, and that's exactly what we're seeing play out in real time.
You wonder if they make another run at him, depending on how this goes here. What's Hakeem Jeffries doing this weekend, Roger? He's watching TV, having a chuckle, watching the speaker do his work?
Popping popcorn, letting it, play out. The president has been the greatest unifying force for the Democrats, but this additional fratricidal tension just makes it that much easier for the Democrats to avoid news cycles and let this play out with as much coverage as possible, because this really forces some of those frontline Republicans that Lisa was just mentioning to potentially take some difficult votes. And so for the Democrats, they largely just want to make sure that they don't stop the Republicans from digging their hole.
Wow. Time to order the takeout and the wine, boys and girls, because we're hunkering down for a working weekend. What a great panel with Roger Fisk and Lisa Camuso-Miller. They'll be back with us, of course, in our second hour here of Balance of Power. Thank you both for the insights and bringing your experience to the conversation. This is a fascinating moment that we're experiencing right now in Washington. Budget bill fails the Budget Committee, and big questions as to where we're going next. We'll explore more of this in our second hour and bring you a conversation with Congressman Nick Lillotta, one of the Republicans from New York, from the SALT caucus we've been talking about. Maybe he's got the keys. Kaylee Lyons is on the way in, and we'll welcome our global television audience coming up next, right here on Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The bill couldn't even clear committee. Welcome to the Friday edition as President Trump's big, beautiful bill fails to pass the Budget Committee in the House. Now the entire timeline is being thrown into question. I'm Joe Matthew alongside Kaylee Lyons in Washington. Thanks for being with us on the Friday edition of Balance of Power. Kaylee, a big point of disagreement remains lifting the cap on salt, so not a lot has changed since this time yesterday.
Yeah, there's still many who want the salt cap lifted even higher than $30,000, but then there's also fiscal conservatives who want to see the cost-saving measures kick in earlier when it comes to Medicaid work requirements, rolling back measures in the Inflation Reduction Act. And it's those fiscal conservatives that actually took things down in the Budget Committee today in what was supposed to just be procedure. This committee doesn't have power to change the legislation, and yet it tanked anyway.
A procedural vote, essentially assembling the pieces of this bill. We saw a number of Republicans, to your point, from the Freedom Caucus, a la Chip Roy, Ralph Norman, and so on, voting with Democrats. And I suspect that their phones will be ringing today as President Trump makes his way back from the Middle East.
Yeah, keeping in mind that the president took to True Social today talking about how he wants Republicans to unite behind this one big, beautiful bill. But certainly you're seeing a degree of lack of unity, shall we say, on Capitol Hill right now. And that is actually where we go now live here on Bloomberg TV and radio. As joining us is Republican Congressman Nick LaLota, who represents New York's 1st Congressional District. He, of course, is in the SALT caucus and is one of the members who has been advocating for a higher cap. Congressman, welcome back to Balance of Power. Obviously, there are you and your colleagues who are pushing for a higher SALT cap up against some of these fiscal conservatives who worry what that does to the ultimate price tag. Is there a world here in which those who shot things down in the Budget Committee can get what they want and you get what you want too, or does someone have to lose in this equation?
Yeah, I'm comfortable we're going to land this plane ultimately. You know, we all support the concepts behind the One Big Beautiful Bill. We all want a stronger border security when we want to put the nation on a better fiscal track. And there's some other priorities in there as well that are really important. Energy dominance, really important to the House Republican Conference. We've met other deadlines in the past about, responsibly raising debt ceilings, ensuring the government was funded, doing things responsibly like that under a deadline. I hope that we could do that again this time. This One Big Beautiful Bill has a couple of warts on it, but I think that we can work through that in order to get it passed ultimately.
Well, Congressman, it's good to have you back. I know you weren't happy with the level that was coming out of the Ways and Means Committee when it came to lifting the cap on salt. So are you actually encouraged by what happened in the Budget Committee today, or are you concerned about the way forward?
Well, it just recognizes the obvious. There are numerous factions within the conference who are displeased with different aspects of the bill. SALT, of course, has gotten a lot of coverage, but there are folks in the conference who are concerned about SNAP, about Medicaid, and of course, the deficit hawks have their concerns. So there are a couple of things holding this bill up. I hope that we get to yes, but with respect to SALT, SALT is a pay-for. The bill as written right now from 2017 has the SALT cap expiring at the end of the year and going back to unlimited. And unlimited SALT over the next 10 years is valued at $1.3 trillion. And that's what's going to happen if no bill passes and if folks like me vote no and others vote no, and ultimately we don't extend those tax cuts. So I think the onus is on others to meet us a little bit in the middle. $1.3 trillion is a lot to incentivize some other great provisions in the One Big Beautiful Bill. The president's priorities on no tax on tips, no tax on overtime, no tax on Social Security, the AMT fix, the lower individual rates, the lower business rates. My constituents want all of that, but we don't want to have to pay for the bill again like we paid in 2017. We want a little more fairness this time around.
Well, and Congressman, when you joined us a few days ago, you told us that this idea of a $40,000 SALT cap for individuals and $80,000 for married couples hadn't been explicitly put on the table. That was something that was obviously in this discussion. Have you gotten an explicit offer for a higher SALT cap, or is that something you're expecting this weekend? Where do things stand?
Yeah, that 40-80 dynamic unfortunately had a poison pill in it, in that there was 40-80 for 4 or 5 years, and it dropped way down to 10 again for the next 5 or 6 years. That, unfortunately, is a gimmick. It's a scam. It just perpetuates the very thing my constituents and I are opposed to right now, this absurdly low 10K cap. That was really just a used car salesman trick that we didn't fall for. We're going to continue to negotiate in good faith to make sure that New Yorkers, New Jerseyans, and Californians get their fair share, because each of us are donor states. Each of our states' taxpayers send way more to Washington than we get back. New York gets about 91 cents for every dollar it sends to Washington, while Missouri, home state to the tax committee chairman, gets $1.60, and Louisiana, home state to the speaker, gets $1.78. So we're not looking for a handout. We're just looking for a fair share and an honest negotiation on how we can move this ball forward.
Well, I know this is a big issue for you. It's something you're passionate about. Congressmen and members of the New York delegation have been strident in their rhetoric in some cases. Would you be willing to vote no on this whole thing if it meant just eliminating the cap altogether, if you can't come to terms on the rest?
If it eliminates the cap altogether, heck, count me in. Let's book it as a yes and let's move on, if that's your question.
No, I mean, would you vote no if it meant allowing that to reset to zero?
Oh, to have no deductibility on the state and local taxes whatsoever?
To eliminate the cap. To go back to where we were before 2017.
That would do it for me. Count me in if we eliminate the cap.
But would you vote no to get there?
Sorry, I don't understand your question. No, I would vote yes on a bill that eliminates the cap. Right now, the cap is $10,000. They're offering $30,000. If they offer unlimited, count me in. Let's go. Let's make America great again.
There's a chance this bill might not pass, though, according to some congressmen. You may not see it that way. If this whole thing falls apart, does that help you enough in New York to eliminate this cap to put up with not having the Trump tax cuts?
No, so here's how the negotiation is going to go. If it falls apart, if the bill falls apart in the next couple of days, weeks, or month, everybody's going to rush back to the negotiating table and say, how can we salvage this? And at that point in time, the reality will be apparent to everybody else that what is on the table at that point in time is unlimited SALT. And then we can negotiate down from unlimited rather than up from $10,000. Now, I don't want to get there, but that's the negotiating reality. As the president would say, we have a lot of the cards in this negotiation, but we want to be professionals, we want to be gentlemen about this, and we want to do what's right for the nation. But at the end of the day, you can't stick the blue states with the bill for everybody else's tax incentives like what happened in 2017. The political dynamic is much different this time around. These blue state Republicans like Lawler and Kim and others and Tom Kaine made our majority, and we can't sell them out to pay for and fund the rest of the tax cuts. We have to ensure there's some equity in this bill, and we acknowledge those realities. We'll get to yes. We need to get the president's agenda through. We need to have those overall great tax incentives for America. The negotiations will continue through both in person and over the phone and on text this weekend, and we'll ultimately get there.
Well, of course, even if you can get there in the House, it then goes to the Senate, Congressman. And what you're describing, the fact that there are Republican members from blue states in the House, is not an issue in the U.S. Senate. Are you concerned that the Senate might actually reduce back a higher SALT cap you fought for, or look at some of the pay-fors that have been suggested, whether it's Medicaid or rollbacks to the Inflation Reduction Act, make them go away, and then you have a new problem in the House again when it comes to the total tally?
Yeah, so maybe we should invite you to our negotiating team, because those are the things that we're talking about right now. We want to ensure that if we do a deal here in the House, it's a deal that will be ratified by both the Senate and the President. So while we're having these discussions on the House side right here, contemporaneous, we want to have some assurances from others who are participating in this one big, beautiful bill. They too will ratify exactly the deal that we come to in the House. That's an important measure. We don't want to just take a vote for the sake of taking a vote here in the House and have our provisions die in the Senate. So what we negotiate here before we get to a yes here has to be assured that it'll pass the Senate and be signed by the President.
So how's it going to work this weekend, Congressman? Bring us behind the scenes, if you would. Are there a series of meetings planned? You mentioned phone calls and texts. Maybe you're going to get a phone call from President Trump, but will you be on Capitol Hill? Will you be working in committee rooms, or how does it come together on a Saturday and a Sunday with a deadline that you're facing?
So the House is not in session. Many of my colleagues went home yesterday, but as you can see from behind me, I'm still here on Capitol Hill, eager to make this deal work. I will continue to collaborate with not just members of the SALT caucus, but those who see this issue differently than me. Happy to work together as a conference, as a House Republican conference. We've gotten through and over hurdles like this in the past. I expect my colleagues from the upper chamber to work in good faith as well, and certainly the President wants to get this across the finish line. It is worthy of the nation's attention, is worthy to that we work over the weekend and through the night, talk, text, in person, whatever it takes, Zoom. We'll continue to keep the door open and keep the dialogue going to get this one big, beautiful bill passed.
And are these negotiations going to be bilateral, if you will, between the Speaker's office and the SALT caucus, or are you going to have to include members of the Freedom Caucus like Chip Roy and Ralph Norman, who obviously are the ones that helped take this thing in the budget in the first place? Are these trilateral negotiations?
Yeah, I think this is going to be an all-hands-on-deck effort, as it's been in the last couple of days, especially. We had a meeting yesterday in the Speaker's office with members of the Republican conference whose politics are much different. We had folks in there whose districts Trump won by 50, and those who Harris won by 3, 4, or 5. People with different constituencies, different priorities, different views of the world. I think it's important that we continue to talk with each other. I've been talking and texting with some of those folks here who come from some of those deep red districts. You know, we all have to come together at the end of the day to put this nation on a better track. You know, we're a nation $36 trillion in debt, $2 trillion deficit. A lot of folks are living paycheck to paycheck. They're eager to see Washington Republicans come together to ensure that we have a tax bill, an overall spending bill that's best for our country, and we'll work with each other regardless of political persuasion to ensure that gets done.
Really important conversation, Congressman. We really appreciate your being with us shortly after the Budget Committee vote. That's Nick LaLota with a working weekend ahead, as you just heard, the Republican from New York. We thank you, as always, for joining here on Bloomberg TV and radio. We want to add the voice of Laura Davison, our Deputy Bureau Chief here in Washington, D.C., and one of our political team leaders. Laura, it's great to see you. What you just heard from the gentleman from New York, we're going to stay the weekend. We're going to keep working on this. Sounds just like Chip Roy. I'm staying in Washington this weekend to deliver. How about we get these two together to figure it out?
It certainly seems like this bill is not advancing at the rate that House Speaker Mike Johnson wants. This, this sort of stunning defeat in the Budget Committee. That doesn't happen. This is really a procedural rubber stamp effort, and the fact that the bill went to committee knowing that it didn't have the votes and then failed indicates that there are serious issues that could really threaten the chances of this bill passing the House next week, as Mike Johnson has wanted. The House then is at least scheduled to recess for 2 weeks, means that it would be until mid-June that they pick this back up. I think we could see a lot of schedule changing in the House if it looks like things are falling back, as Representative LaLota just said. If things, if fall apart in the next couple of days, you expect to see people rushing back to the negotiating table to figure out how to salvage the Medicaid issue, the SALT issue, the spending issue. All of this is of deep concern.
Well, and of course, it's not just of deep concern for Speaker Johnson, who wants to get this done, but for President Trump, too. When you have the president taking to Truth Social saying that we don't need grandstanders in the Republican Party, stop talking and get it done, saying Republicans must unite behind the one big beautiful bill, and then hours later, 5 Republicans, although one was just for procedural reasons, 4 Republicans really in the Budget Committee decide to specifically not advance the president's bill. What does that signal about his power in all of this?
It signals that he doesn't have the ability to keep this party together. That's been his superpower through all of this, is that he has been able to put out a tweet saying people, hey, fall in line, and they have. Right now, that is not the case that's happening. It's clear the president is very frustrated with this process. That Truth Social post you just read, that was in a series of a long list of angry posts from the president this morning.
Including about Taylor Swift.
He was clearly angry about a lot of things, from pop culture to budget reconciliation. I think that covers the full gamut. But this is clear that that he has kind of from the top of this negotiation said, look, get it done. I don't really care how you do it, but just make sure these tax cut bills pass. As tariffs continue to percolate, you have people like Walmart coming out saying prices are going to rise. That's even more mounting pressure on the White House to get a tax bill done, and quickly.
I want to go back to where you started here, Laura. And first of all, the rarity of a bill failing in committee like this, I mean, it's a little bit of egg on face, I'm assuming, for the chair, unless Jody Arrington was trying to make a point. But also what this means potentially for the long-term status of this bill. Are we making too much of this to suggest that this whole thing could fall apart, or it's simply about getting everyone back in a room and coming up with a plan B?
Those are sort of the two options here. One, this may be a small blip, and in a couple days they've ironed out these details. They had that little bit of a public embarrassing moment and decide, okay, let's move forward with unity. It could also mean that this is just, sort of the signs of deeper troubles to come. I'll also note that you have senators already coming out, Republican senators saying that they won't support this bill, they can't support this bill. There's going to need to be big changes, scaling back some of these Medicaid cuts. That's something that House members are thinking about, particularly moderates. They don't want to have to take a tough vote on a bill that really scales back something that may be unpopular in their district, and then have that totally rewritten by the Senate. So you're seeing a lot of political considerations, not just between House Republicans, but also between House and Senate Republicans, of what is a bill that can get 50, the 51, 50 in the Senate, and 218 in the House. that's not an easy feat.
Well, and when you talk about Medicaid cuts in particular, obviously for Chip Roy and co, that is part of their problem is these new rules around work requirements, for example, aren't supposed to kick in for several more years. They would like to see it kicking in sooner. Was there a reason that this wasn't supposed to happen until 2029? Are they trying to get around issues potentially in the midterms until changes are made? Why wouldn't they have just done it from the jump?
The reason is why these tax cuts are set to expire. You put all the juicy stuff, the stuff that people like at the beginning, and you put the tough stuff at the end of the budget window. So 2029, I'll note that's when after the 2028 president election, after the midterms, the stuff that people aren't going to like and are going to feel the impacts of. That's a future Congress's problem, and it also gives this Congress a lot of time to potentially repeal that if you want to. There's a lot of things we've seen Congress do this time and time again. If they have to do something unpopular, they have to make a decision to raise some revenue. They'll put that in the future, and then that's a problem for another day.
Well, we've seen Donald Trump flip votes before. One of these no votes came from Ralph Norman. He got a phone call from Donald Trump last time the speaker's a job was at risk, and about 10 minutes later, he got off the cell phone and changed his vote. Could we see something along those lines?
We very much could. Trump is clearly whipping this bill himself, though both in public as well as in private, making calls to members. He wants to get this done. It's interesting to see, though, how many people are willing to buck him on this is supposed to be Republicans' signature legislative achievement, and it's not clear right now that they can do that.
Well, and when we consider that, and to come back to the idea that the midterms are next year, is this House conservative saying, okay, we're probably going to lose the House in 2026, therefore we need to make this exactly what we want now. This is our last chance to actually do something more dramatic when it comes to debt and deficits, and basically saying the majority is going to be lost anyway, or that they still think they can walk this hard line and retain the majority in 2026.
That's what they're publicly saying, but privately, House Republicans know that there's a very strong chance that they could lose the chamber. That's just kind of the tradition, history suggests that's a very much a possibility. But this is where the tension is. You have the hardliners saying, let's get everything that we can get done right now, and you have the moderates, people who want SALT, and others saying, don't cut Medicaid for my district. I need to expand SALT. Those are the things I need to get reelected. And the only way you, House Republicans, have a majority is if we have these districts around New York, in Southern California. So you have two sort of very much competing visions at odds here.
President Trump, on his way back from Abu Dhabi today, saw quite a number of posts on social media, as you guys suggested. We only had this one, the Taylor Swift post. The President of the United States. Has anyone noticed that since I said I hate Taylor Swift, she's no longer hot? What's going on that airplane?
It's Trump coming down from the high that he had in the Middle East. He was showered with praise. He had horses. There were dancers. There were, the whole spectacle. And, he also didn't get a lot of sleep. He went very late every single night.
Wow.
One colleague mentioned it's like when your child has a sleepover, comes home, had all sorts of fun, doesn't get any sleep, and then suddenly they're cranky and in a bad mood the next day.
I just want to know what he saw.
Who was he talking to?
Did someone start playing Taylor Swift on Air Force One?
It's a great question.
Where did it come from?
Taylor was in the air.
We'll have to wait for answers for another day, perhaps. Laura Davison, Washington Deputy Bureau Chief for us here at Bloomberg, with us on Balance of Power. So I guess she's no longer hot?
That's what he says.
I didn't. News to me.
You'd know this more than I.
I'm still a fan.
I guess so. Maybe we'll play that to the panel next. We've got a good one today.
Yes.
Roger Fisk, Lisa Camuso Miller, their take on a breaking news day here in Washington. We'll have a lot more straight ahead on Bloomberg TV and radio alongside Kaylee Lyons. I'm Joe Matthew. This is Balance of Power, only on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. Best level of the session right now on the S&P 500 index, on track for a winning week of roughly 5% right now. The S&P up 27, up by 0.5%. We've got the Dow up 220, Dow Industrials up 0.5, NASDAQ up 48 for the NASDAQ Composite Index. That is a gain of 0.2%. The Bloomberg Mag 7 Index up 0.1%. The 10-year currently yielding 4.43% with a 2-year 3.97%. Gold down $53 the ounce, down 1.6%, and West Texas Intermediate crude at $62.46 a barrel, up by just about 1.4%. Wall Street's hopes that President Trump's tariff war is cooling, driving stocks to one of their best weeks so far in 2025. Federal Reserve plans to reduce its workforce by about 10% over the next couple of years, mainly through attrition, with a voluntary deferred resignation program open to eligible employees. And EOG Resources says it has been awarded a concession to explore for oil onshore in Abu Dhabi, a development that will help the largest shale-focused producer by market value further an expansion beyond the United States. EOG Resources shares, they are lower now, little change, down less than 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Balance of Power continues. Once again, your hosts, Joe Matthew and Kaylee Lyons.
Right, Charlie, thank you so much. Live from New York, Charlie Pellet, watching Wall Street for us every day here on Balance of Power. We'll get back to Charlie shortly to check back in on the Friday trade with breaking news midday here in Washington. The headline on the terminal says it all. Trump tax cuts fail in House panel as GOP divided on bill cost. Panel being the key word there. The bill couldn't even clear the Budget Committee. Expected to be a rubber stamp, a procedural vote today that would then lead to a floor vote next week. But there are many holdouts here, beginning in the Freedom Caucus, where a number of Republicans voted with Democrats to sink the bill, as noted by Budget Committee Chair Jody Arrington a short time ago.
Well, the noes have it. The committee stands in recess, subject to the call of the chair. I want to thank everybody for their time and patience, and Godspeed and safe travels.
That gavel was not the happiest gavel you've
safe travels
ever seen, as everyone heads to the airport, although I guess not everyone, maybe many members of the Budget Committee, but not some of the ones who voted no in committee today. Congressman Chip Roy, for example, says he intends to stay the weekend. We just spoke with a member of the SALT caucus, Republican Congressman Nick LaLota of New York. He and his SALT colleagues also intend to be here for continued negotiations. They're going to try to work through this, and maybe we'll be in a different place come Monday. But remember, Monday was the day that this was supposed to be before the Rules Committee, the last hurdle to getting this to the House floor. So the timeline is now very much in question.
Yeah, it's throwing big questions into the timeline, and of course just the veracity of this bill to begin with. As we discussed with Laura Davison, there are real concerns about whether they can get this done at all in its current form, whether it's one big beautiful bill or maybe it's a couple of different bills that might require a few swings at tax cuts, the debt ceiling, say SALT, and the rest.
Yeah, remember when that's what the Senate wanted?
That's interesting.
The House fought for one bill.
Oh, true.
And one bill is proving to be kind of problematic. So let's get into this now with our political panel. Lisa Camuso Miller is with us, Republican strategist, former RNC communications director. And Roger Fisk is with us as well, Democratic strategist and former special advisor to President Barack Obama. Welcome to you both. Lisa, obviously this went down in budget today, which was a bit surprising. But I would also note that two of the kind of ringleaders here, Congressman Chip Roy and Congressman Ralph Norman, are also on the Rules Committee. If it wasn't going to fail today necessarily, would it not have failed on Monday?
No question it would have failed on Monday, but this is a precursor to what we're looking at, right? And I want to know if Godspeed and safe travels means something like bless your heart in the South, because I'm a kid from the SALT caucus, right? But to me, the chairman did not seem happy. He has also been very, very measured in the way he's talked about this particular bill. I think they knew going in that there were a lot of holdouts from the Freedom Caucus. They knew that there was going to be trouble here. I don't think that they thought that this was a rubber stamp, but they did go in hoping that maybe, just maybe, they could cross this hurdle and then get to Monday for another fight. And in fact, in Washington, D.C., there's nothing worse than the threat of having to stay in town. And it sounds like everybody who's got a dog in this fight is sticking around and staying around for takeout.
I think that's great. Washington's lovely on the weekends, often because the lawmakers are all gone and you can go anywhere you want. Roger, everyone's angry. No one's agreeing on anything, just like yesterday, just like last week, just like a month ago. Why would that be different come Monday?
Well, I'm not angry. I'm thrilled to be here with you and Kaylee and Lisa. And I agree with Lisa's analysis that we're going to see more problems when it gets over to the Rules Committee, even if it even does. I was just reflecting on, if you're a frontline Republican and you're getting very clear signs from an unlikely source like a Josh Hawley in the Senate that they're not down with big Medicaid cuts, why would you take that vote now, knowing that it's going to go over to the Senate and it's going to come back, you're going to have to vote on it after it's in conference, without the Medicaid cuts that you are now going to have to take a vote on? Your fingerprints are going to be on it as you head into a difficult reelection. So you can understand the logic for a frontline Republican to just back off at this point. So then, in a sense, you actually have some commonality between the Freedom Caucus and some of the SALT states, because the SALT Republicans don't necessarily want to own those Medicaid cuts going into a tough fight. And the Freedom Caucus philosophically doesn't want to spend more money. So the fact that these signals are coming from the Senate almost gives some license or some comfort to people to even distance themselves even more from this very, very big bill that goes in way too many directions at the same time. Very similar to what we saw with the Biden administration and the Build Back Better. It was just too big. And look at what happened when they broke it up. They broke it up so that infrastructure stood on its own. They actually got 12 Republican votes for that, and all 12 of those Republicans were reelected. So when these big bills get actually spliced into smaller bills, it can actually work better. But the spectacle that we all know the president wants to have come from this, the big beautiful bill, is looking very crippled at this point, and I can't see how they can get this back on track. The speaker can make some adjustments on the calendar, move up the work requirements from 29 to 28 and things like that. But it's going to be very difficult, and I highly doubt that we're going to see this moving on Monday or Tuesday or Wednesday.
Roger, Lisa, Kaylee, look at this. We're just now hearing from President Trump. We want to bring you to Air Force One. The president is talking right now to reporters at the back of the jet. This is live on Bloomberg.
When you look at the sanctions, these were really brutal, and they would have, I would say, zero chance of success. And this way they have a chance. Their leader's a strong person, but young and a lot of energy, and wants to do a good job.
Mr. President, the IDF was planning to send in tens of thousands of more troops and expand the war in Gaza, especially if there wasn't a ceasefire while you were here. Do you support that?
Well, we're going to see what happens. I think a lot of good things are going to happen over the next month, and we're going to see. We have to help also out the Palestinians. You know, a lot of people are starving on Gaza, so we have to look at both sides. But we're going to do a good job. We're very happy with what happened with, I hope it continues, and I think it will, but what happens with India and Pakistan, that was a big success. If you would have seen the level of anger between the two, that was not a good thing, yes.
A senior Hamas leader said that they might be willing to give up power, an Egyptian proposal, in order to bring peace. Is that a step that you
we're going to look at everything, but we want to get the hostages back. I've gotten them, a big majority back, but we want to get the hostages back. So we'll see how that works out. Okay?
Mr. President, are you putting to call Vladimir Putin? How do you think you can get those talks on track?
We have to meet. He and I will meet. I think we'll solve it, or maybe not, but at least we'll know. And if we don't solve it, it'll be very interesting.
And then did Austin Tice come up when you talked to the Syrian president?
I always talk about Austin Tice. Now, Austin Tice hasn't been seen in many, many years. You know that. He's got a great mother who's just working so hard to find her boy. So I understand it. But Austin has not been seen in many, many years.
You were joking about the endurance that it takes to do this. This was a lot to do in a short period of time. Conversations about endurance often focus now on Joe Biden and his endurance and his abilities. The Hur tapes right now, there's a lot of discussion about it. When will they be released? Will you release them? How soon do you
haven't
anticipate
looked into that. That's up to Pam and the group. I haven't really looked into it. Look, everybody understands the condition of him. I know people that are 89, 90, 92, 93 years old that are literally perfect. But Joe was not one of them. And they did a lot of hiding. They they were really playing games. And, you know, you can't do that. Our country's at stake. You see, even a thing like this, there's so many decisions for billions and billions, but then you have even more important decisions. You have decisions for life. And you can't have a man in that condition. And everybody was holding back, including the press, including the media.
So you're welcoming white South Afrikaners into the country as refugees when you've closed off that door to a lot of other refugees from other parts of the world. What message does that send to those who say it isn't? Why is that fair?
Well, I think if I see people in distress, I don't care what color, what they look like, what anything, their size, their height, their eyes, I don't care. But I think that from all evidence, the farmers in South Africa are being treated brutally. And it's been reported, and nobody wants to cover it. But they happen to be white, and if they were black, I'd do the exact same thing. And we treat people very well when we see there's a genocide going on. So if it's a genocide, that's terrible, and I happen to believe it could very well be. South Africa's out of control, and it's been out of control for a long time, and the media doesn't report it. And I'm not looking for reporting because, believe me, it's easier for me not to do anything. It's a lot easier because I don't get nasty questions like that. But the fact is that we're about saving lives, and we're going to do that. So we've made a home, and we'll make a home for other people that are treated badly, no matter what their color.
Will you go to the G20? Will you go to the G20 there?
I'm not sure.
Not sure.
I'm really not
On
sure.
Iran, has the U.S. given them a formal proposal? Has Steve Witkoff handed that over?
Yeah, they have a proposal, but more importantly, they know they have to move quickly. Something bad's going to happen. Thank you very much.
How's Tiffany doing? She's well. Everybody's good. Congratulations.
on your grandson.
Travel safe, sir.
All right, there you have it from earlier today on Air Force One. Not focused on what took place today on Capitol Hill because that was playback from a short time ago, but wanted to bring you the conversation between President Trump and reporters on the jet. Getting back to our breaking story, though it took place more than an hour ago here in Washington, the Budget Committee failing to pass the bill, the tax and spend bill that we've spent so much time talking about, including the extension of the Trump tax cuts, the lifting of the SALT cap, and so much more. I'm Joe Matthew in Washington alongside Kaylee Lyons. We want to thank Lisa Camuso Miller and Roger Fisk, our great panel today, Kaylee, with so many questions about the way forward on Capitol Hill, not to mention the many questions that the president was being asked about his trip abroad.
Yeah, of course, the president going to return to Washington with quite a conundrum in the legislative branch and trying to advance his agenda, which he posted on True Social about is so important, wanting to see Republicans united on this. And it'll be interesting to see whether he uses the telephone on Air Force One or otherwise this weekend to try to wrestle some members in line here. I was struck by what Lisa said, though, before we went to that tape about this notion that we knew going into the Budget Committee hearing today that there were outstanding issues, that members were not happy. And they went anyway and took the vote anyway and let it fail. This is a kind of repeating pattern with Republican leadership in this House of Representatives.
So was the chairman trying to send a message to the White House that we're not there yet?
Perhaps.
The Rules Committee vote on Monday, to your point, would have gone exactly the same way. It's the same lawmakers on the panel.
Yep, Chip Roy and Ralph Norman are the ones who are perhaps described as troublemakers here, or grandstanders, if you use the word of President Trump. We'll have more on this still ahead here on Balance of Power on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P 500 index holding very close to session highs right now, up 28, higher by about 0.5%. Dow Industrials also advancing now by 0.5%, up 231 points, while NASDAQ is up 58 for the NASDAQ Composite Index. That is a gain now of just about 0.3%. The S&P, by the way, has risen about 5% since last Friday, driven by a U.S.-China trade truce and speculation that the White House is softening its approach to negotiations. The 10-year, 4.43%. The 2-year, 3.97%. Spot gold down $53 the ounce, down 1.6%, $31.87. And West Texas Intermediate crude up 1.4%, $62.48 for a barrel of WTI. Earnings news. Applied Materials, the largest American maker of chip manufacturing equipment, out with a lackluster forecast. That is sending Applied Materials shares down 5.5%. And Take-Two Interactive Software reported quarterly sales that beat analyst estimates, but Take-Two today trading lower by 2%. Recapping the Dow, the S&P, NASDAQ all higher. S&P up 28, up by about 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie. Joe Matthew here in Washington, where President Trump is making his return to as we speak from his trip to the Middle East. He's stopping to refuel in the UK, going to be landing at Joint Base Andrews later this evening, returning to D.C. at the end of this trip, despite yesterday even suggesting it was unclear what his destination would be after leaving the United Arab Emirates, because he was still leaving the door open to potentially making a stop in Turkey, where negotiations took place today between Russia and Ukraine. Actually, direct talks between the two for the first time in more than 3 years, though it wasn't at the principal kind of senior level that would have drawn President Trump himself.
Far from. That's true. President Zelensky was elsewhere in Turkey. It was also he said he'd be waiting for Putin. And of course, Vladimir Putin did not show up. Interesting, though, I think the comment from Donald Trump was, if it's appropriate, and clearly he didn't find that to be the case. But we want to dig into this with Nick Wadhams, who helps to run our national security coverage here in Washington at Bloomberg. Nick, it's great to see you. The significance of these talks, as Kaylee said, first time in more than 3 years. But I think I overheard someone say earlier, on the Russian side, only the interns showed up. How important was this meeting?
Well, I have differing views on that. I mean, there was a prisoner swap, about 1,000 people. So for them, it'll certainly be very important, though Russia and Ukraine have done a lot of prisoner swaps over the last few years. I mean, you can see it a couple ways. One is at a small step toward what President Trump wants, which is that direct meeting with Vladimir Putin. I think for the Europeans and Ukraine, they do see it as quite significant, because for them, it basically flushes Putin out. You know, the question is, does he actually want to commit to a ceasefire? Is he committed to the idea of negotiations leading toward peace? They would point to this meeting and say, no, look, he's not serious about it. Then they can go back to President Trump and say, hey, look, Putin's not serious about this. Let's get on with those sanctions and really put the squeeze on him. The big question, of course, is whether President Trump gets that message. So far, we have no indication that he's willing to take that step with sanctions.
Well, and President Trump said himself that no deal is ever going to happen until he meets with Vladimir Putin, not Zelensky. It needs to be Trump, Putin first, is the thinking of this administration?
Yes. He believes, I mean, this goes back a long time, that the president believes if he can get in the room with Vladimir Putin, he can do the deal. I mean, which is... You could make the argument, but we've been here before, most notably with the North Korean leader Kim Jong-un, where they had a big meeting in Hanoi in the first term, and President Trump walked away. He didn't get what he wanted, and he walked away, and that situation has been completely unresolved. So, you know, that is certainly his wish. Europeans are terrified of the idea, because if you get the two of them alone in a room together, who knows what concessions President Trump would be willing to make.
The fact that Marco Rubio was there, that Steve Witkoff was there, suggests the U.S. is more serious about this than Russia?
Well, potentially, though. I think what you saw there was Rubio and Witkoff going in part as a way of supporting Ukraine and support, basically a show of support to the European allies as well. I mean, there was so much back and forth trying to figure out, will Trump go, won't Trump go, who's coming from the Russian side. You had Marco Rubio commit to this meeting. And then there was sort of a sense that he couldn't really unwind that once he had committed. I mean, President Trump had also announced that Rubio was going when he was in the Middle East. So Rubio didn't really have much choice. But, I mean, extraordinary comments from Rubio on the way there where he was basically like, listen, I don't think anything's going to come of this meeting, echoing what Trump had said. But you really saw there how low his expectations were for a breakthrough.
Well, so then it begs the question, if we continue to not see much forward progress, what is the U.S. or what are other allies willing to do next? Right. We saw a post on X from Ukrainian President Vladimir Zelensky, who spoke with Chancellor Merz from Germany, President Macron, Starmer, Donald Tusk, all in this meeting. He says, our position, if the Russians reject a full and unconditional ceasefire and an end to killings, tough sanctions must follow. Are we getting closer to the moment where this administration is willing to put tougher sanctions on Russia? And what would that look like?
Well, the two very big questions there. I think we are getting a little closer, in part because the president's also coming under pressure from the Hill. Lindsey Graham and more than 70 senators from both sides of the aisle are behind a very tough sanctions package. So that is certainly a possibility. The big question, of course, is what would those sanctions look like? When we talk about sanctions, it's always like, oh, there's going to be this big hammer that's going to drop and it's going to change Putin's calculus. Russia has been under sanctions for a very long time, well over a decade, and then we got ratcheted up even more after the invasion, and his calculus has not changed. So the big question is, do they go after oil? Do you go after Lukoil, Rosneft? Do you accept possibility that oil is going to get more expensive, maybe by another $10 a barrel or something like that? So that's going to be the question that President Trump is going to have to answer. And so far, aside from a couple social media posts, he has been mum. And Marco Rubio has also been quiet about this. So the administration really holding its cards close to the vest right now.
All right, Nick Wadhams, who leads our national security coverage here in Washington. Thanks for being with us on Balance of Power, where we add the voice now of Kelly Grieco, senior fellow with the Stimson Center's Reimagining U.S. Grand Strategy Program, with us once again on Bloomberg TV and radio. Kelly, it then becomes a question with what Nick was just describing about sanctions not necessarily being something that has shown the power to break the will of Russia and specifically Vladimir Putin. It becomes a question of what does change Putin's calculus. And I do wonder if militarily, when we consider the Russians' position currently in Ukraine in regard to its forces and capabilities, does he have a military incentive at this time to be considering a ceasefire? Or does he have every reason to believe he could keep going at the current pace?
Yes, I mean, I think you're asking exactly the right question, which is if you're going to ultimately get a deal and negotiate, both sides have to decide that they're better off taking a deal than continuing to fight this on the battlefield. And we do have, I think, a number of signs now that it seems Putin thinks that he may be better off fighting this on the battlefield, or at least making one last big push this summer with another offensive to see how much more territory he can physically take. And so my sense is that's probably what's going on here, is he wants to see what else he can accomplish on the battlefield, and then he might be more open to negotiations.
What are we sending at this point, Kelly, to Ukraine in terms of military hardware, in terms of, I guess, logistical support, or is the spigot beginning to run dry? When is Ukraine on its own?
Yeah, so, I mean, one of the big announcements about 2 weeks ago was that we were sending more air defenses. That came out of, around the same time as the mineral agreement was signed with Ukraine. So that I think is quite important, because that's one area where the United States is one of the only countries that can provide like Patriot interceptors that Ukraine needs. The other thing we know is that we're continuing to provide a lot of intelligence support. That's being done through European Command and NATO. That's really critical, even though we don't see it. It helps them a lot with targeting. But the real issue here becomes that the funding is, nearly out for providing additional aid. So the question then becomes whether Congress is going to authorize a new package. And, based on last time, there would be reasons to think that that's going to be really hard to do. And I think a lot will depend probably on whether Trump is still thinking that he can make a deal with Putin, or if he starts to become so frustrated with them that he decides to sort of ratchet up some of the pressure on Putin and maybe support some kind of package.
Well, as we consider both sides' positions here, and to your point about Putin perhaps thinking he might have a better hand here if he continues to pursue this war on the ground, we understand that the Russian delegation was demanding in talks today control of 5 Ukrainian regions, inclusive of Crimea, but also looking at Zaporizhia, for example, Donetsk, the kind of regions where we're familiar with that they've been jockeying for control of. Do the Russians have the controlling position in all of these areas right now, or is there still a chance that Ukraine can regain this territory before we get to some kind of negotiated settlement?
No, I mean, I think I would phrase it a little differently and say that right now the Russians are asking for parts of territory that they don't actually have under their control. They have made tremendous advances in all of those regions, but they don't completely control, for example, all of Donetsk. And I would expect actually this summer offensive rather, would probably focus a lot on trying to capture the rest of Donetsk. But I think that's part of the issue, is that where you don't have actually forces that are controlling territory, the Ukrainians are signaling, we're not prepared to hand you more territory. And so I think that's really one of the key areas of dispute right now, is exactly where the territorial lines will be. And there's a danger here, I think, that Putin's actually overplaying his hand, and that, instead of being willing to compromise of the territory that he's holding and go to a peace deal, he seems to want all control of all of these 5 territories. And I think the question will be whether he's able to accomplish that on the battlefield this summer. And if not, if he'll finally concede that it's not worth the continued cost of fighting and that he's had enough. He's satisfied with what he has.
President Trump's been talking a lot about Iran this week. Kelly Grieco, first it was word of an olive branch, as he put it, news of a written proposal for a nuclear deal that went to Tehran. Today, on Truth Social, he writes, they have a proposal. More importantly, they know they have to move quickly or something bad is going to happen, he wrote. That's a direct quote, which apparently caused a great deal of confusion in Tehran. I'd like to ask you about the battle plan that he's referring to. What exactly would we do to move against Iran militarily? Would it be bunker-busting bombs to go after nuclear facilities, or more than that?
Yeah, I mean, it's not entirely clear what, the military plan would be. I would say, though, that we have been building up forces in the region, including bomber deployments in particular, including the type of bombers that can carry those really large bunker-busting bombs. I think that buildup of bombers does have some kind of latent force of threat that potentially we would strike facilities in Iran. Of course, that would be a major escalation. And, the real risk then is that we'd end up in some kind of regional war. The other possibility is that we'd be willing to sign off on something, including possibly supplying the Israelis with some capabilities they might need to conduct some kinds of strikes against Iran. But, I think it's clear he's trying to use this sort of as a latent threat to create some pressure for negotiations, which is sort of what you do with these kinds of negotiations. But I would just say it's interesting to see that the Iranians seem at least somewhat receptive to trying to find a deal.
Well, the Iranian foreign minister, in response to the suggestion from President Trump that they should have something in hand, said on X today, Iran has not received any written proposal from the United States, whether directly or indirectly. He goes on to say, Kelly, in the meantime, the messaging we and the world continue to receive is confusing and contradictory. If it is indeed confusing, do you see the circumstances taking shape in which Iran is going to be willing to agree to something specific from the United States, or do those specifics still have much work to do to be ironed out?
Yeah, I mean, it's clear the specifics have much work to do to be ironed out. I think what we're getting at is actually something that we're seeing similarly with the Ukraine attempts at Ukraine peace deal, which is that President Trump very much sees diplomacy and making these sort of deals about interaction with himself, with another leader. Where traditionally diplomacy, these kinds of really hard to get deals, there's a lot of groundwork that's laid before the leaders even meet to try to iron out all the details to find compromise and really pave the way for the leaders to essentially, at that point, agree to the terms. He tends to not do as much of the former and focuses more on the latter. And so I think we're seeing some of this play out with the Iranians as well, in that they're accustomed to that process where you work this out at a lower level and iron out terms, and not sort of Trump's more very direct, often even public approach. And I can understand why it creates confusion. This is, I think, one of the risks inherent with his approach to diplomacy.
Always great to have you with us. Kelly. She is with the Stimson Center's Reimagining U.S. Grand Strategy. Kelly Grieco, great to have you with us, as always, on Bloomberg TV and radio. I'm Joe Matthew in Washington alongside Kaylee Lyons, where we're also seeking answers to exactly what happens to the president's tax and spend bill. Kaylee, it didn't pass the Budget Committee, and we'll be joined on the late edition of Balance of Power by the congressman from Tennessee, the Republican in the middle of all of this. Tim Burchett will join us here on Balance of Power.
Yeah, so hopefully we can get some answers from him. In the meantime, more coverage is ahead here on Bloomberg Business Week Daily. We'll see you at 5 on Bloomberg TV and radio.
Hallå.
This is
Ja, hur går det?
Business Week Daily, reporting from the magazine that helps global leaders stay ahead with insight on the people
Jävligt tjockig idag alltså.
in today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business.
Nei, han har ikke pratet i dag, har han det?
Stenivek, along, not with Carol Masser, who is off today, Bloomberg News cross-asset reporter Emily Graffeo. She is in, and Emily, It's one of the best weeks of the
Jaha.
year, at least for now, for the S&P 500. Up about
Okay.
5% on the week as we speak.
Yeah, it's
Huh.
been a pretty incredible rally.
Ja, da burde jo markedet vært bearish i dag, da. Han
Yeah, I
bare,
think that's fair to say. Kind of shrugging off some of the economic data, consumer sentiment numbers that we got a little earlier. We're going to be speaking with Mike McKee about that in just a minute. Also coming up a little later in the program, we're going to go to India and speak with the CFO of a large telecoms company,
Nei.
part of the Tata Group. So we're looking forward to that as well.
And additionally, the state of residential and commercial real estate with the EVP of Capital
nei,
Markets.
jeg ble tatt i et sjokk i dag.
More coming up in the next hour right here on Bloomberg Business Week Daily. First up, though, a check of the day's trade.
Ja, altså, jeg skulle bare gå for $200 i dag, for det var det jeg trengte. Og så hadde jeg lyst til å flytte stoppet litt tightere. Og da gjorde jeg det, og ble da tatt ut så vidt. Og så fløy den jo selvfølgelig til det jeg trengte. Så etter det prøvde jeg å gå inn og longs igjen. Men siden jeg da hadde mye høyere entry, ikke lavere, ikke sant? Så ble jeg da tatt ut et par ganger på det. Bare noen småtapp, men de adder jo litt opp da. Og så klarte jeg å misklikke 2 ganger. Feil type kontraktssize på gull. For da, du har jo mikro og mini, ikke sant? Så jeg på med 2 minis, og da måtte jeg bare close ut med en gang. Da tappte jeg $100 bare på det. Når jeg sitter i en gullong nå da. Jeg har lang gull da. Ja, jeg håper det. Håper det. Ellers så blir det liten ekkel dag. Ja, det kan du si. Men vanligvis så kommer jeg liksom i mentaliteten, ok, nå skal jeg tjene liksom så mye som mulig da, ikke sant? Men i dag hadde jeg bare aim for bare $200, ikke sant? That's it, og så get out. Og på grunn av jeg hadde det mindsetet, så var jeg litt mer sånn fitte. Og ikke gjorde det som jeg skulle da, kan du si.
Michael McKee, Bloomberg News International Economics and Policy Correspondent. He joins us right here in our Bloomberg Business Week studio. Mike, I want to start with the story that broke about 90 minutes ago. The Fed planning to shrink its workforce by about 10%
Vi har nesten ikke bøyd oss i det hele tatt.
couple of years, mainly through attrition. This is a Bloomberg News exclusive, but when I saw the headline, when I thought of this, all I could think of was Doge and what Elon Musk has been doing over the last few months. Is it wrong for me to think these two things are related?
No, I wouldn't say it's wrong to think they're related. The Fed's not specifically relating them, and Doge has no legal authority to require the Fed to cut anybody. But they obviously have been criticized by the Doge folks, and Jay Powell has said in the past that they try to, follow
Det fredag da.
the general procedures of the whatever administration they have. So
Nei, det gjør de ikke.
cutting bodies.
Det gjør de ikke. Men generelt sett så vel fredager litt roligere.
But Powell is the person who would make
Altså, den choppa jo veldig halv 5, 6, ja, nei, hva da? Ja, vi kan si fra 6 til 6,40. Og så hadde vi en liten pump-up, så dumper vi ned igjen, og så pumper vi opp igjen nå. Det er litt bedre enn Nasdaq. Litt bedre. Ikke mye.
They are run by private boards of directors, and the whole Fed is self-funding. So Jay Powell would lead a directive to try to lower the head count. He could cut people at the board itself, but the Fed Bank presidents will have to go along with that. And some of the members of the board of governors are, there's a committee that supervises the regionals. So I'm sure this was a product of negotiations.
Is there any, I guess, thinking about what kind of employees at the Fed would be potentially first to get cut as a part of this headcount reduction?
It's hard to say because the Fed does so many different things besides monetary policy and research. You
har
could
det.
see some of the research staff cut back, perhaps at some of the banks. There's been talk for years that maybe some of the regional banks could merge research staff so they're not all doing the same thing. But they also do the payment system, and that has now it's evolving into an instant payment system, its own kind of parallel to what all the crypto folks want. And so they may need fewer bodies. AI may start to contribute. They may need fewer bodies. And then there's always the question of regulation, regulating banks. And there's been talk in the administration of consolidating bank regulation. There are 3 separate bank regulators now. So that may have something to do with it down the road. There are a lot of places they could look for a couple here, a couple there.
I mean, a couple would be a few, because this is an organization that has about 24,500 employees as of 2023. This would equate to a roughly 2,500 person workforce reduction. You mentioned payments to Emily just now. What else are all these employees doing at the Federal Reserve?
Well, the payments and regulatory are the biggest sections, because payment system is obviously it's kind of the underpinning of everything that happens in the financial world that we report on. And bank regulation is a huge group. The smallest group is the monetary policy one, and then there are other efforts that the Fed's banks do. They do community relations, and they have to live up to the Community Reinvestment Act, which sort of got to regulate what kind of lending gets done into poor communities.
Når var det ble sånn?
A lot of things like that. The whole idea of, should the Fed have its own cryptocurrency? Should there be a Fed coin? They put together a task force out of the Boston Fed, but with people from the board and the Boston Fed who have been looking into that and doing the research, et cetera.
Ja.
So there are a lot of different areas, a lot of different things going on.
We also got economic data today. This was, this Fed news is definitely at the top of the terminal right now. But new consumer economic data.
New unhappy consumer economic
Did we
data.
learn anything new from the consumer sentiment report today, just about the state of how Americans are feeling about the economy?
People were feeling lousy about the economy, and now they're feeling more lousy about the economy, is kind of what the takeaway is. The numbers that were interesting were the expectations index falls to 46.5. That's the lowest since May of 1980. I asked Joanne Shu, who is the director of surveys at the University of Michigan, whether that's comparable to today. And she said, sort of, but the economic conditions are different. In 1980, we were still in the very high interest rate Paul Volcker years, and people were depressed because that was also the Iranian hostage time period. So
Ja, jeg har likt gule litt I det siste.
Inflation expectations.
Det jo mer eller mindre bare å prøve å følge trenden på gull, egentlig. Egentlig.
4.6% for the 5 to 10 year is the highest since 1991. The 7.2 is the highest since.
Jeg satt med han I call og ga han litt call også.
It's not a surprise because that's about where inflation was at
Yes.
that time. But her view was these numbers are very large, but they just reflect how worried people are.
How should we interpret that word?
Ja, nei, altså han risket nok hele kontoen på den ene traden, og så bare holdt han. Men det jo basically som man tjener de store pengene. Man må liksom bare gi faen og holde. Du må jo bare miste synet av penger da, for å si sånn. La som det ikke står 5,000 pluss på kontoen, ikke sant? Ja, det var det han satt med.
And at this point, there's not a direct correlation between sentiment and spending, but there's a general one, and we did see retail sales come in weaker.
Men ja, han tjener godt på jobben sin, så han har litt sånn fuck you money.
It's interesting when you look at the chart of the Michigan
Derfor han spiller tøft.
change in prices, this graph, it's higher than it was during the pandemic. Like people's inflation expectations are higher than during COVID. Does that surprise you?
Doesn't necessarily surprise me given the way sort of public opinion works. It builds on itself, and it's more of a concern for the Fed in that we just went through a period of high inflation. So people are more likely to anticipate the worst.
Stakkars glass, fy faen.
They just went through it and didn't like it.
Nei, norsk det er så ekkelt i dag.
People are thinking it's coming back. They tend to extrapolate
Så
that
ekkelt.
out as even worse. And then the Fed gets worried
Jeg vet
because
det.
inflation expectations might become unanchored. And then you get the feedback effects of people going to their bosses and saying, I need a raise because inflation's high.
But as you remind us, it seems almost monthly, the saying, watch what consumers do, not what they say.
Well, that's why it was important, the retail sales numbers. And of course, at the end of the month, we'll get the overall spending numbers, which include services. And we have to see if people are indeed cutting back. And then you need it for a couple months because maybe they just pulled forward. The money they would have spent in April, they spent in March because they were trying to get ahead of tariffs and stuff like that.
So in your view, do you think Jay Powell is still more concerned about inflation than employment?
I would say they are at this point because inflation will go up faster, and we saw some evidence of that in the CPI and PPI of some initial tariff reactions. Companies seem to be reluctant to let people go. They go back to their experience trying to hire people coming out of the pandemic. And so they may be slower to get rid of people other than the Fed.
Tok noen trades på den crazy-kontoen en dag, eller?
Interesting aspect of the Michigan numbers, too, were a big rise in the number of people who thought they would lose their jobs in the next 5 years. So there is
Jeg synes jeg hørte noen lyder i stad, ja.
concern on both sides of the Fed's mandate. And of course, if you think you're going to lose your job, you
Flat
spend
trades.
less.
Michael McKee, Bloomberg News International Economics and Policy Correspondent. Mike, have a good weekend. Thanks for joining us.
Thank you.
Appreciate it. That is the latest when it comes to economic news and, of course, what we learned about the Federal Reserve earlier today. Let's now go to Washington for the latest from the Capitol, where a key House committee on Friday failed to advance House Republicans' massive tax and spending bill. This after hardline conservatives bucked President Trump and blocked the bill over cost concerns. We got Joe Matthew with us. He's co-host of Bloomberg Balance of Power. He joins us from our Washington, D.C. bureau. Joe, Representatives Chip Roy, Ralph Norman, Josh Brechen, Andrew Clyde joined Democrats to vote against this. What happens now?
Yeah. Well, that's a great question, and that's the one we're all asking. This happened right around noontime. Tim, it's great to be with you today.
Ja, det er for det.
You're going to hear a lot of people speculate about the fate of this bill based on this failure. And I won't try to...
Nei, på Nasdaq. Jeg vurderte egentlig å kjøpe den, for vi choppa ned der nå.
This is the easy part.
Uh,
The committee is like the layup,
Ja.
the rubber stamp, and it's
Men jeg gjorde det ikke.
to see something fail on this level. The fact that the chairman, Jody Arrington, even brought this to a vote, clearly knowing that he didn't have the numbers, is remarkable. You mentioned Chip Roy, Ralph Norman. These are frequent critics of legislation on Capitol Hill that doesn't cut spending enough, and they know what it's like to get a phone call from Donald Trump. So a couple things can happen here.
Yeah.
And you know what? Yeah, he's on the plane right now, by the way. I don't know if he's taking a nap, Tim, or if he's actually on the phone with them, but this could be a pretty dicey weekend for these guys as they try to put the pieces back together.
Well, that's exactly where I wanted to go, Joe, because we saw what happened in the last several months when Republican members of Congress have not gotten on board. All it takes is maybe a phone call or two from the president, perhaps even maybe from some of his allies or from Speaker Johnson. What's the president's next move here? What political capital does he have to push these guys to get on board?
Well, it's a great question. He was on Truth Social earlier today saying, stop talking and get it done. He was referring to the grandstanders, as he likes to call them, the names that we've already used here. The vote was 21-16, so you've got more than a couple Republicans to convince here, but there's a lot of moving parts. When you're trying to find balance in something like this, and the whole matter of SALT that we talk about a lot here on Bloomberg is right in the
Det er ganske
middle.
random.
If you're going to make the New York Republicans happy and raise the cap on SALT, you're going to upset other people who want to see steeper cuts to make up for that. And that's the balancing act that Speaker Johnson is in right now. He clearly hasn't found the balance. But just to give you a sense of what this means, we had the Budget Committee today. It was supposed to go to the Rules Committee on Monday, which is kind of the gatekeeper to the floor. And then, as the Speaker promised, a vote on the floor by Memorial Day. They're not going to fool around with that Memorial Day break. Everyone's going home one way or the other. So this whole timeline could suddenly be off the rails. When you consider what's coming in terms of the debt limit and so forth, it could be a complicated summer, one that was already complicated. It could be even more so.
Okay, so everyone's not going to be there voting on this on Memorial Day, Joe. So what do we know about just exactly what happens next with the timeline here?
Well, they'll probably get a couple of boos when they're in the Memorial Day parade if people are actually paying attention at home. But we have to remind ourselves, this is the signature piece of legislation for the Trump administration. This is what he calls one big beautiful bill. This is to extend or make permanent the Trump tax cuts. Think about the promises on the trail. No taxes on tips, no taxes on overtime. We already went through SALT. They kind of have to get this done. And when we find out in a couple of weeks what the real X date is on the debt ceiling, that's going to be maybe the gas on the fire that gets people together. The fact of the matter is, though, I'll make this even more difficult. Once all this is potentially done in the House, it goes to the Senate, and they're going to rewrite the whole thing. They're going to make all kinds of changes and probably turn back some of the cuts that were made to Medicaid to pay for some of this stuff. And all these same guys in the House who didn't like this bill today will like it even less then. And then where are we?
Well, Joe, while you're talking to us, Kaylee's sending us tweets. This one coming from NBC News, reporting that the House Budget Committee Republicans are going to try to reconvene on Sunday at 10 p.m.
Oh, that'll go well.
So, yeah, so what
Altså, for å være helt ærlig, så har jeg egentlig ikke noe target på Nasdaqen. Altså, for å take profit, da skal den opp ja, liksom 70 points til. Jeg har ikke noe target, så Nei. Jeg må jo se et klart target som ikke er en mil unna, liksom.
Aside from some arm twisting from President Trump, I don't know.
Hey, Joe, before we let you go, we got about a minute left. We wanted to talk to you also about takeaways from President Trump's overseas trip. 4 days in the Middle East, the tour that really focused on making deals. How would you just describe for us the view of this region by this administration and how it differs from previous administrations?
You know, we talked to former Congressman Denver Riggleman about that today. He joined us live on Balance of Power from Dubai. He's actually founded an AI company of his own, and he's in the mix over there. And he was talking about this incredibly important moment as this region is opened up to the likes of NVIDIA, AMD on the friendly list, if you will, when it comes to high-tech chip exports. This is an incredible moment of opportunity, I think, not only for the administration, but for the industry here as we look for options to turn away from China. Pretty incredible, the dollar figures that we saw announced on this trip, and it's also a whole new look optically at what a presidential trip can look like here, leading with the dollar signs and kind of backstopping with the politics. I'll say one thing, though. Nobody got to Turkey today named Trump or Putin for Ukraine peace talks. That was something we were holding out for, and it's not going to happen this time. That will remain on a lower level.
Okay, well, thanks for the update, Joe, from Washington. Really appreciate it. I want you to get some rest this weekend because I know you're going to be busy following all the happenings in Washington, D.C. Also, don't miss Joe and Kaylee tonight at 5 for the late edition of Balance of Power.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. 5 days of gains for the S&P 500 index, on track for the second best week in 2025. The Dow, the S&P, NASDAQ all higher, with the S&P up 29 right now, up by about 0.5%. We got the Dow up 265, up 0.6%. NASDAQ up 60. That is a gain of 0.3%. The Bloomberg Mag 7 index up by 0.2%. 10-year 4.43%. The 2-year 3.97%. Gold is slumping 1.6%, 31.87 the ounce, and West Texas Intermediate crude up 1.4%, 62.46 for a barrel of WTI. Charter Communications has agreed to combine with closely held Cox Communications. Charter up by 1.3%. They're on picket lines instead of the railroad lines. New Jersey Transit locomotive engineers started striking this morning. This strike involves all 12 of NJ Transit's commuter rail lines, though the system's buses and light rail service continue. Recapping, S&P up 28, up 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Well, President Trump said on Thursday that India has made an offer to drop tariffs on U.S. goods as the nation negotiates a deal to avert higher import taxes. We know our next guest is watching this closely. He's featured in the upcoming weekly CFO Briefing newsletter. It's written by Nina Tretman. She's Bloomberg News senior editor. You can also sign up for it at bloomberg.com/CFO-briefing. Nina joins us now along with Kabir Ahmed Shakir, CFO of Tata Communications. Nina, I want to start with you. Why did you choose to feature Kabir in the upcoming CFO Briefing newsletter?
Well, it seems as it's good timing, right? India is in the news. We've also seen a fair amount of tensions recently between India and Pakistan. So we're also talked about risks to Kabir. So yeah, it seemed to be a good time. Kabir, thank you very much for staying up so late. It's, I think, around midnight in Mumbai. So thank you very much for joining us. We've just heard from Tim on the outlook for India. Just wondering what that means for your business as you're growing your business at Tata.
Thanks, Nina and Tim, for having me on the show. Yeah, I know it's almost going to be midnight here, but quite excited to be on the show. As we spoke, earlier as well, I'm cautiously optimistic about what the year will unfold for us. We are working tirelessly on our strategy and executing on our strategy, and of course, business is not ever going to be static. The environment is going to keep throwing challenges at us, but I guess we have a resilient business. We are in the B2B space, and we are here to serve our customers, and our products and services help our customers both on the revenue side and the cost side outcome. So managing volatility, helping them grow, helping them manage their bottom line and their risk is what we do day in and day out. So I'm excited to continue to partner and help our customers.
I'm curious about how tariffs specifically affect you. Even though you're based in India, you are a global company. You essentially connect 80% of mobile customers worldwide. You serve 300 of the Fortune 500 companies in some way. But tariffs affect products, hardware, infrastructure, technology. How would tariffs affect your business? How do they affect your business?
Well, there are two ways in which it could affect our business. One is directly, because we are in the telecom space and we do procure hardware equipment, which we deliver as part of the overall service to our customers. So it does impact there, but that impact is very negligible and insignificant. So I'm literally not worried about the direct impact. What worries me is even so much so not the tariffs, but the volatility, the uncertainty leading up to it. So from the time President Trump announced, and then there was a pause, and now there is a bit of a withdrawal. So we don't know when this stability is going to stop and when there's going to be more clarity. So when we see this uncertainty with our customers, the delay in decision making is something that is likely to push revenue out. Although as of now, I have not seen this in our order book as yet, and that's the reason why I use the word cautiously optimistic. Right, that we would like to be cautious to see what's that conversation that's happening in our customer boardrooms and how we can help them.
Maybe I can jump in here, Kabir. Just thinking about the relationships between India and the US, I'm wondering how you're seeing additional growth opportunities for your business. I know you've told me the US is an important part for your business. You've done 2 transactions here recently. Just talk to us a little bit about how you're seeing that develop.
Yeah. US is a very, very important market for us, and we want to grow US to $1 billion of our business. We are currently about little under $2.5 billion, dollars for now, and US kind of totals up to around 700, 750. So we would like to take it to $1 billion in the very near future. So we've invested both in terms of product capabilities for the business, go-to-market capabilities, feet on street, and everything that we can do to grow the business. So therefore, our strategy is still steadfast, and we will look for both organic and inorganic opportunities to grow our footprint in the US. So we are committed to that.
Kabir, what is the M&A outlook like? Because at least in the US, we had a pretty big media deal announced today with Charter and Cox. Are you looking at any potential M&A activity?
We are continuously scanning, if I may, and there are targets that we'll look at. If you look at our business, our data business has 2 chunky parts. There's a core connectivity part of the business, our traditional telecom point-to-point connectivity, and Ethernet, and international lease lines, and the entire submarine cable that we have. So that's roughly about half of our business, and the other half is the digital portfolio, which we call the overlay services, where we use the connectivity as a foot in the door and then provide value-added services to our customers, whether it's the customer interaction suite offerings that we have, whether it's IoT, Move, cloud, security, and all of those offerings that we do. It is in that space that we would be really looking for any potential targets that could either, I would say, bolt on and fill any portfolio gaps I may have in my product offering, or even help us with the go-to-market offering. I'll give you a recent example. When we bought Switch, and it was primarily a US-based business, Switch gave us 2 capabilities. One, it gave us the media transmission business in the US, and that was very, very important for us. Plus, it also gave us the media production capability, so we could backward integrate and offer more product offerings to our customers, and we could take that globally as well. So it made a lot of sense for us to get a footprint in the US geography, and then use that capability to even go global. So assets like that will be of interest for us, and we continuously scan for them.
Yeah. Kabir, just wondering, based on the fact that you're based in India, we've seen some geopolitical tensions there recently, not the only place in the world where we're seeing that flare up recently. Just wondering, from a CFO perspective, how do you navigate these kind of geopolitical risks, and how far has risk management become more important to us, to you, and also sort of how does that work?
Nina, I would say we have a very, very robust risk management framework. And today it is geopolitical risk. Yesterday it was something called COVID pandemic. And not more than a decade ago, it was a Lehman collapse and the crude oil crisis. So we've seen, and every time when this event happens, we call it a one-off event, a black swan event. But I guess all organizations, sail through this. They have a resilient P&L and balance sheet, and resilient culture that helps them navigate through this. And we are no different. And we are a global organization, so therefore we are not insulated to only domestic, issues. Every morning we wake up with something happening, across the world. The geopolitical, conflict, as when we spoke, I mentioned, it never has ever happened that we had 3 cable systems go down at the same point in time in the last 20-year history ever, which happened about 9 months ago. And that's because of the Red Sea conflict that you actually see. So we have woken up to the reality that despite these pressures, we need to continue to be, serving our customers, providing them, diverse paths, giving them alternatives, so that their business, keeps running. That's the reason why they come to come to us in the first place. So when we chalk out plans, we of course look at the likelihood and the impact of any of these events occurring. And depending on the severity, either we are acting on them right now, having a plan A, plan B, plan C ready, or if not, keep watching that space if it develops in any way disadvantaging us, and have mitigation plans.
We're speaking with Kabir Ahmed Shakir, CEO of Tata Communications. Kabir, you have this perch as CFO of the company that operates, or has business, I should say, in close to 200 countries around the world. So you understand where there's weakness, where there's strength. What are you hearing from customers right now? This isn't exactly discretionary spending that they do when it comes to IT, when it comes to telecom. But are there areas of the world where you're seeing strength? Are there areas of the world where you're seeing weakness right now?
Yeah. Look, when we look at any of these things impacting like the tariffs, of course, there's a prediction that it will be slow down, especially in the US. The very recent Goldman Sachs report of last month suggests that spend levels are going to be pretty static compared to last year. So, and the probability of capex coming down is as high as 45%. So you see all those, statistics coming in, and I can understand why, because of the uncertainty. And if customers need to rewire their supply chains, then they would rather preserve the cash for that than, spending on important but non-urgent, IT spends. So that's one dilemma. The other conundrum that they actually have is clearly there is a FOMO. I mean, with the buzzword of AI going through, every organization is also looking at, are we investing in AI, and are we future-proofing our business? So therefore, not investing and not spending on that space is not an option either. So that's the kind of conundrum that the customers are in, and we are helping our customers to look through this, bring clarity as soon as possible, so that they do not, suffer the consequences of an indecision on and not spending in time. So it's a tricky situation. So I'm not saying it's easy, but you see that consistently across, industries. Quite often with network, it so happens, Tim, is if it ain't broken, why fix it? That's the kind of attitude, people have. So it's very normal to try and push back that spend. But as I said, with AI coming in, it's very difficult for them to push back for too long.
Yeah, certainly a theme that we saw when it came to the most recent round of earnings reports from companies here in the US, that AI spend is continuing. Kabir Ahmed Shakir, thanks so much for joining us, CFO of Tata Communications. Also a big thank you to Nina Trentman, Senior Editor at Bloomberg News. Check out the CFO briefing by Nina Trentman. You can sign up at bloomberg.com/newsletters or go directly there, bloomberg.com/CFO-briefing. Let's get an update on the trade, because we're seeing stocks move a little higher. Here he is, Charlie Pellet.
All right, I thank you very much, Tim. Indeed, I'm just pulling up the weekly numbers right now on the Bloomberg, and for the week so far, we got the S&P 500 index up by 5.1%, second biggest week of the year. But you care about what's going on right now. We have got the Dow, the S&P, NASDAQ solidly in the green, just about the best level of the day on the S&P 500 index. Stocks are gaining. Wall Street's hopes of a cooling tariff war drove stocks to their second best week in 2025. S&P 500 index up for a fifth straight session. So here's where we stand. We've got the S&P up 31 now, up 0.5%. The Dow up 283, up 0.7. NASDAQ up 0.3. The 10-year 4.43%. The 2-year yield 3.97%. Gold down 1.5%. $31.90 the ounce, and West Texas Intermediate crude up now by just about 1.5% on WTI. So bottom line here, it is an update for the Dow, the S&P, and NASDAQ. Briefly, Verizon Communications has won FCC approval for its $9.6 billion acquisition of Frontier Communications Parent Inc. after agreeing to pare back diversity initiatives. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Today is a big day. It's not just because I'm told there's some sort of big basketball game tonight. It's also the premiere of a new podcast from the team here at Bloomberg Business Week. It's called Everybody's Business. It's a smart and fun chat show about all the things business, hosted by award-winning business and economic journalist Max Chafkin and Stacey Vanek Smith. They join us here in our Bloomberg Business Week studio. They need no introduction, but I'm going to give them one Anyway, Max is also senior reporter for Bloomberg News. Stacey Vanek Smith is senior editor of Bloomberg's daily Big Take podcast. Max, there are a lot of podcasts out there. There are a lot of podcasts about business. How did you approach this to differentiate it from everything out there?
Well, we just wanted to, obviously here at Bloomberg, we spend a lot of time following the market very closely, talking to corporate insiders, really telling that kind of high level, big money story. And, we wanted to kind of touch on the stories that the way those things affect regular people, affect the decisions we make to get a new job, to what to do with our 401k, and all the stuff that's happening right now in the news, whether there's a 145% tariff or a 30% tariff or whatever.
Tommy er ute av gulltraden. Jeg hoppa inn på personlig igjen.
In our everyday lives, so that's the connection we're
Da
trying to
kan
make.
dele
But
skjerm.
mostly, Stacey and I just wanted to kind of like have some kind of loose conversations with some smart journalists that we know, and so that's part of what it is as well.
Stacey, what can we expect out of the podcast? What's the kind of like intended listener experience here? This is something you listen to on your commute. This is a longer podcast. Give us all the technical details.
We would like you to listen to it wherever you want. But
Det er veldig stille dag i dag, ass. Men
the dots between some of the economics news
jeg hoppa inn på bunnen her og gikk ut rundt oransje linjen, tror jeg. Da vi hadde droppet, og så kjøpte jeg inn på personlig konto her. Og så skal jeg kjøpe inn igjen når vi kommer inn hit. Og de her.
I guess, Max, what I like about this
Går vi noe lavere enn det her i dag, så er jeg done. Ja, og så aimer jeg egentlig bare for over disse highsa her. Egentlig greit. Så trailer jeg såpass etter det.
and more out there. Talk a little bit about sort of thematics for the week. I mean, it's kind of tough to boil everything. Like we're doing this every day for 3 hours, and there's
I don't
too
know
much.
how you do it.
Well,
We're
there's
just
too
like-
much.
yeah.
There's we don't run out of anything to talk about. You
Det vil
guys
ha
have
ned
to
hit,
do
hvis jeg
this
skal ta
once
den
a
her.
week and choose what to distill down into something that's digestible.
Yeah,
Yep,
so we
yep,
talked
yep.
about, so like this week, for example, we spent about half the show talking to Amanda Mull, who you mentioned.
Jeg kan prøve på en tidlig long rundt her også, men jeg hadde heller ventet til den kom helt med mindre risk.
Basically buying and branding and what happens inside of stores. And the thing we wanted
It's
to
kind of
explore with
normal
her
also.
was, on one hand, you have all this news about tariffs. On the other hand, prices actually haven't really gone up much yet. And what's happening there? When are they going to go up? And I mean, the answer, we explain this, is they're going to go up very soon. And this is going to be a difficult holiday season, even if Donald Trump backs down from the tariffs even further than he already has.
Stacey, you don't have to spoil it because we want everyone to listen to the podcast, but it's going to feature an underrated story for the week. Give us a little hint.
Well, my hint is that my co-host, Max, is an ultra marathoner. He runs these incredibly long races that are 100 miles. He runs like through forests, through the night. And as it turns out, there's quite an interesting business story connected to this, having to do with athletic shoes. And the soles of athletic shoes are sort of getting bigger and bigger. This has been kind of a trend.
Oh, yeah.
Well, it started in the ultra marathoning community, and now it's causing a controversy because races are trying to put regulations in place on how high shoes can be. But the shoe companies are pushing the envelope, and customers like bigger soles.
I've also wondered how Max trains for these things because he's a busy guy. He's got a few kids.
I know.
He has a lot of work to do, but I found the secret. He just runs to and from the office.
I have a working theory there might be at least 2 Max Chapkins, but I don't
That
know.
could be.
I don't have any evidence.
Okay, so the weekly cadence here, we get a new one every Friday, Stacey. The premiere is today. If you think about the sort of the cadence moving forward and the big themes, obviously we talk a lot about everything happening out of Washington and emanating from Washington. That is a business story. Everything that Elon Musk is doing is a business story. What's the theme, in the coming weeks? Like, how do you know what it's going to be?
Well, we don't. This has been quite an intense news cycle. I think huge stories kind of come out of seemingly nowhere very often. A lot of the business news isn't quite as organic as maybe it used to be, where we would see trends coming from far away. I think a lot of these, because they're anchored to policies that are changing out of the Trump administration and things like that, often you just have to stay really loose. I'm sure you both know this better than anybody. The news really changes by the hour right now.
Guys, I'm looking forward to checking it out. A new one drops every Friday. Get it at Bloomberg.com or wherever you get your podcasts. It's called Everybody's Business, and the premiere is today. Max Chafkin, Stacey Vanek Smith, co-hosts of the new Everybody's Business podcast. All right, well, we are watching all the economic data that we are getting very closely, including real estate data. Housing starts increased in April as a pickup in multifamily home construction more than offset a decline in single-family dwellings caused by elevated inventory. Back with us is Katie Hubbard. She's Executive Vice President of Capital Markets at Walton Global. It's the privately owned asset and real estate investment company. It's got about $4.4 billion and nearly 81,000 acres of land under management in the U.S. Katie, always good to have you on the program. If you think about where we are right now versus where we are when we last spoke to you back in March, what is the biggest shift that's taken place from your perch?
Yeah, Tim, thanks so much for having me. I would say the biggest shift is just weak spring selling season. Typically, 37% of all sales by public home builders are made in February through May, and they just have not had the traffic. And it's really because of elevated borrowing costs that we're seeing. Mortgage rates are still high, and then the uncertainty in the economy is keeping people from shopping.
Katie, I want to get your take on the economic data that we got out today, housing starts. Because I'm looking at it, we have multifamily home construction, like apartment buildings, jumped, but then single family home construction decreased. What do you make of this divergence? What is that telling us about the overall housing economy right now?
Yes, I mean, the public home builders are really doing what they can to protect their balance sheet, so they're not wanting to overbuild with the weak spring season. So they've really pulled back on their housing starts. Typically, they're going to be starting about 3 homes per community across the nation, and you're at less than 2.7 homes per community. So they're just building less because they don't want to be stuck with inventory that they can't sell. Because when they have inventory sitting there, they're having to slash prices to keep the units going. And then there just continues to be a pent-up demand in the rental market because of the lack of affordability in the single-family market. It's keeping the developers hungry to build and on the multifamily.
Katie, let's go big picture and talk about a theme that has emerged over the last few years and especially emerged during this last presidential election cycle, and that has to do with housing affordability, housing availability. You touched on it when you talked about rental and home prices as well. Are these homes going to get built in places where homes don't traditionally get built? I mean, that was one of the ideas that was presented during the campaign by Vice President and then candidate J.D. Vance, was building on federal lands. In your view, is that how the U.S. is going to tackle this housing problem?
That is a great question. So we're just coming off of the ULI conference where they're talking a lot about affordability and how we're going to be able to build homes that not only are affordable, but also attainable for people that aren't looking for, affordable homes with government assistance. Really what's happening is developers are moving out into further out into the suburbs where they can build and the land is more affordable. The challenge then, of course, then you don't have the utilities availability. So you don't have water, sewer to be able to build big master plan communities. Herein lies the problem with the government. Yes, does own 500 million acres of land that they could just say, hey, you can build on this, but then you have to have public-private partnerships, and it has to be a win-win where everybody along the value chain can make money. And if you look at the land that the government owns, it's the wrong land in the wrong location without the availability to actually build on it. Physically, you can't build. And then the people who would be potentially living in places where the government owns land, we're talking, the desert, the mountains, there's no jobs there. So it sounds good, but it's just not a viable option.
Yeah, I heard there are 3 things that are important when it comes to real estate: location, location, location. I've heard that before.
Right.
So then is the answer in upzoning or rezoning? Is the answer in changing local laws in municipalities to allow more dense homes and perhaps getting rid of parking requirements and really concentrating on areas where the economic activity is and making sure that people can find available housing in these areas? Is that the key?
That really is. We need deregulation to make permitting easier, to make the densities better for developers so that they can make their numbers pencil. The challenge is just in those urban core areas that we're talking about, there's not a lot of availability of land. And I'm sure if somebody came, wanted to build an affordable multifamily development on a park in your neighborhood, you wouldn't want that. So you've got, the not my backyard mentality at ULI. They were talking about now they've got a YIGBY, yes, in God's backyard, where they're actually looking at taking religious institutions that maybe are abandoned or not being utilized and putting affordable housing in there. So there's a lot of, discussion about ways to make it work. And one of the ways is through just engineering, being able to build homes at a faster pace through engineering. So there's that is coming. I would say if you've looked at Boxable, that's where you can like unfold a house in 3 days, doing that on a larger scale with bigger buildings.
I'm wondering how tariffs and the trade war impact that, what you're talking about specifically, like the speed at which home builders can actually build and source raw materials. What are you seeing right now about how tariffs are impacting the housing supply chain?
Yeah, so today it's actually better than we thought. The pause on the tariffs has helped. Right now, you're looking at about 2 to 4% that has actually impacted the building costs today, and home builders just are not passing that on to the end users. They were anticipating a 6.8% increase in materials this year, but it's actually been less than expected.
What's the biggest issue? Is it lumber from Canada? Is it gypsum from Mexico? What is it?
It's all of the above. It's, you've got steel, you've got appliances coming from China is a big one. The houses that they're building today, they have purchased materials in the past. So it's really looking forward. And that's another reason why they've slowed down their starts, is because they don't really know what the prices of those goods are going to be for those future homes. And we really need that to stabilize across the board. But yeah, it's all of the things that you mentioned, Tim.
Katie, what have you heard? And, we talked about this a few months ago, but I want to get an update from you on this. What have you heard recently from the home builders about labor, especially with regard to the immigration crackdown that we've seen in the U.S.? Are home builders finding enough people to work for them? And then are there subcontractors finding those folks too?
Yeah, what's interesting is that they're not really reporting a shortage in labor. They're actually having some of their trades contact them and asking for more work, just because there has been a slowdown in construction across the board. So that has not really affected them that much yet. Where you're going to see that affect the market the most is in the 50 unit and below multifamily market, because the people that are now not immigrating to the U.S. or have left are typically the renters that are renting those smaller multifamily houses.
Before we let you go, we have just about a minute left, but I have to ask about mortgage rates, because Trump has been pressuring the Federal Reserve to cut rates faster. Does the housing market need an acceleration in the path of cutting rates? How much do we have to see rates come down?
I mean, definitely the sweet spot is sub 6%. There's so many people that are on the sidelines, waiting and hoping, hearing that rates are coming down. Even when the Fed does cut rates, though, that doesn't typically affect the 30-year fixed. It's really tied to the 10-year Treasury, and that is really tied to inflation. So sticky inflation is keeping the 10-year high. At 6.78 is the 30-year fix today. We really need the 10-year to get down to about 3.78 for the rates to hit below 6. So we don't see that happening this year or next year, but that would definitely help the market.
Katie, always good to check in with you. Appreciate you taking the time and joining us on this Friday afternoon. Katie Hubbard, she's Executive Vice President of Capital Markets over at Walton Global. A reminder, they've got about $4.4 billion and 81,000 acres in land throughout the U.S. under management. Taking a look at markets, we're still seeing equity markets higher on this Friday, 0.6% to the upside on the S&P 500. Coming up next, some of those stocks that are on the move.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
It is Bloomberg Business Week Daily. I'm Tim Stenovec. That is Emily Grafeo in for Carol Masser on this Friday, May 16th. We're seeing the S&P 500 pretty much at its best levels of the day, up 0.6% right now. We're also seeing at or close to session highs, the NASDAQ composite up close to 0.5 percentage point. We'll go ahead and call that 0.4%. The Dow, Emily, up 0.7%.
Yeah, pretty much all across the board. Risk assets higher. Treasury yields kind of quiet, but, you know, maybe they're already ending out the week. The bond traders have left already. Tim.
Yeah, and what a week it's been, at least for the equity market, shaping up to be one of the best weeks of the year.
I'm Emily Grafeo, along with Tim Stenovec. Let's take a look at some stocks on the move today. With us is Denitsa Sakova, cross-asset reporter at Bloomberg News. Denitsa, you're looking at a popular company here with anyone who works in an office in New York City and likes to eat lunch.
We're talking about lunch and we're talking about Kava, and I personally really like them, but they're having a pretty bad day. They dropped as much as 6%. Now they're down about 3%. The losses are coming after earnings report. That was a good earnings report, but analysts are saying it doesn't just justify their hefty valuation. So it's interesting. That's obviously a very competitive place, a very competitive space. There is Sweetgreen. There are all those brands. Kava is not necessarily the most expensive. Sweetgreen is more expensive. Kava raised their prices about 2% earlier in the year, but they still remain a little bit cheaper than competitors. We saw some good news in the report. Sales at established restaurants grew. We saw some very important metrics of earnings growing. One thing, Kava has been outpacing competitors in the recent quarters. So expectations have been quite high going into this report. Perhaps one reason we're seeing some disappointment. The stock is actually down 15% this year. Of course, this comes after a 160% surge last year. But definitely this earnings report is not adding too much optimism for analysts.
That stock is still up 125% since IPOing.
It is.
It's incredible.
However, if you go back and look at the one-year chart, then you go back to the highs of December of 2024, so not even that long ago, it's still down about 36% from then.
All about timing.
$11 billion market cap.
Yeah. The food is good.
Yeah, they still don't have one near our office. I'm just throwing it out there.
Yes, that's true. But their dips are amazing. But yeah.
But we digress. Okay.
We digress.
Let's talk crypto.
Let's talk about Coinbase. What a week it has been for Coinbase. I feel in terms of news stories, it's probably like a one-year cycle in a week.
Right.
So the stock is actually up about 9% on Friday. And if you look at this week, if you zoom out, I love that stat. The stock is up more than 30% over the last 5 sessions, which is the best weekly gain since President Trump re-election. So the week started with a lot of bad news. We had the news about the hack. Then we had an estimate that is going to cost about 400 millions. We know hackers gained access to customer data, names, dates of birth, all those super sensitive information. There are a lot of investigations and things going on. But there is a lot of concern with that. We also had a confirmation of reports that U.S. regulators were investigating the user figures the company quoted before their IPO. So obviously, all those things up away from this, the company is joining the S&P 500. This is obviously a massive milestone. It's happening next week, and that's clearly boosting the stock, adding a lot of optimism. Of course, the index effect, Emily was writing about it, but it's an important thing to launch going forward. All those passive money mutual funds tracking the stock, that's a big boost.
It is,
that could help.
That helped earlier this week in the single day stock move, which was more than 25%.
Yeah.
What I found fascinating, you don't see that every time a company is added to an index.
Right.
It's not, you don't always see a bump like that. I mean, why would you see a bump like that with this time, but not necessarily other companies?
I think Coinbase is such a well-known name within the stock market, because sometimes the companies get added to the S&P. No offense to them, but it's like, I don't hear that name. Coinbase, you see the ads. They have Super Bowl ads. They have obviously like a big popularity with anyone who's trying to buy crypto in the US. A lot of them use that exchange. It's a very like user friendly, familiar company. So maybe that added to the market action.
I totally agree with you. Also, it's a risk on week. Everything is rallying, all the risk on currents of the market, crypto. So that's also a stock that's driven by sentiment.
Okay, 30 seconds left for applied materials.
Last one. It fell as much as 7.3%. It came off a lackluster forecast for the current period. Of course, we're talking about the trade war. Of course, we're talking about China there. Of course, in the last 2 weeks, there has been so much back and forth. But what we're seeing now is China accounted for 25% of applied materials sales last quarter, which is down from 43%. So a really big drop there. And obviously, there is a lot of volatility. This is currently the largest American maker of chip maker gear. And it's likely going to be impacted by all of those restrictions we're seeing on sales to China. The company is still up 2%, so we're yet to see if the drop yesterday, if the drop today is going to hold. But a tough day today.
Denitsa Sokova, cross-asset reporter for Bloomberg News. For more conversations like this, check out our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. Coming up next on Bloomberg Television, it is the close. If you're just sticking with us right here on Bloomberg Business Week Daily, we got the mayor of Fort Worth, Texas. We're also talking the big telecom cable deal as well. That's next.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Heather Bosch. No deal. Conservative Republicans in a House Budget Committee voted down a package of tax breaks and spending cuts. CBS's Torianne Small explains.
Representative Chip Roy was one of the leading members defecting with the party because he believes these spending cuts aren't deep enough, especially as it relates to Medicaid. That's a big issue for quite a few moderate Republicans who had concerns that it would negatively impact their constituents.
There's concern millions of Americans would lose health care. A manhunt is underway in New Orleans after a jailbreak.
Jail guards discovered the escape when they came up 11 short in a head count around 8:30 Friday morning, said Sheriff Susan Hudson.
Our top priority right now is the safety of the public and returning these individuals to our custody without delay.
But New Orleans Police Chief Ann Kirkpatrick said it took the sheriff's office 2 hours to notify the NOPD of the escape.
When we learned about it, we knew the immediacy to at least inform the public.
Chris Miller for CBS News, New Orleans.
Cleanup is underway after storms pounded the upper Midwest. CBS's Lana Zach is in Wisconsin.
Several communities are all pitching in to try and get power up and running to help with the cleanup. All of these new power cords up here have been put up since we've been here this morning. Earlier, the power lines were strewn throughout Main Street here, just as a sign of how quickly everyone is working.
Before the next round of severe weather hits. In Maryland, a judge is hearing arguments on whether the Trump administration can keep details about a mistakenly deported man secret. Kilmar Abrego Garcia was among migrants sent to a prison in El Salvador. CBS's Jake Rosen.
Attorneys for Abrego Garcia have accused the Department of Justice of stonewalling. It's really been a lot of similar arguments, both in this case and a number of other ones involving these men sent to Salvadoran custody and Salvadoran prisons.
The judge previously ordered Abrego Garcia's return. A young Tennessee gamer is credited with stopping a Northern California school shooting after seeing two teens discuss the plan in a gaming chat room. Sheriff Dave Kane.
The suspect went on to talk about having a manifesto and a plan to target a Tehama County school. The suspect also sent photographs of himself and an accomplice to the reporting party in the same attire and pose as the Columbine school shooters.
New Jersey Transit train engineers on
Se på den här Botox, den här posen nå. Ja, snipa bunnar alltså.
Thousands of New Jersey and New York City commuters are scrambling to find other ways to and from work. The engineers want higher pay. This is CBS News.
Tok du den eller Tommy? Ja, Tommy-karen jeg delte skjerm i stad, sa hva jeg tenkte hvor jeg skulle kjøpe. Så løp han tok den, eller han sto over. Kom du mål med 200? Ja, jeg tjente tilbake. Jeg gikk med ganske lite size. Jeg rakk ikke fullt ikke med. Jeg tjente tilbake i tap i dag, så nå er jeg $18 oppe. Jeg tror jeg tar dagen, fordi i dag har vært egentlig helt jævlig. Nei, altså, Nasdaq har jo gått opp, men har liksom bare choppa opp hele tiden. Jeg likte de andre dagene bedre, for å si det sånn. Ja, det var ille i dag, altså. Det var ille. Ja, jeg tror det som er litt vanskelig, og det er i hvert fall for min del noen ganger, er liksom å sitte der og så vente på å da komme inn i en trade og være i en trade, ikke sant? Og så venter du da, la oss si at du sitter i en trade i liksom halvtime, en time, og så blir du tappet ut liksom sånn akkurat. Da blir du forbannet, ikke sant? For da har du sittet der og sett på, og så, ja, så blir du bare tatt ut likevel, liksom.
Baker was in 3
Tror du det?
James Bond movies, 2 times as a gruff CIA agent, opposite Pierce Brosnan in GoldenEye.
In London, April's a spring month.
Tror du kan finne på nytt da?
And he played a brutal arms dealer in The Living Daylights.
Nei, Nasdaqen går bare opp.
Sunday will be the 45th anniversary of the eruption of Mount St. Helens in Washington state. On May 18th, 1980, the top of the volcano collapsed in an explosion of ash and gas. 57 people
Se neste taget mitt på Nasdaq. Ah ja, ok. Ja, det taget faktisk.
I'm Heather Bosch, CBS News.
Da går jeg opp til high-en vi hadde i går.
This is Bloomberg
Det er taget på
Business
Nasdaq.
Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week Daily, with Carol Masser and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily. Good afternoon, everyone. Happy Friday. We've almost made it to the end of the week. We got 2 more hours with you right here on Bloomberg Business Week Daily. And we're seeing stocks extend gains right now. After we got a report about the U.S. and EU talks. We're going to have more on that from Charlie Pellet in just a minute. But suffice it to say that we're seeing equity markets higher by 0.6% on the S&P 500, the NASDAQ higher by 0.5 percentage point, and the Dow up by about 0.8%. So off of session highs, but still higher on the day, and really good week, Emily.
Yeah.
Oh, did I even say you're here?
I don't know, but
okay, that's
I'm not
Carol Masser. Carol's out today. Emily Griffeo from our Bloomberg News Cross Asset team. She's here with us once again.
Yeah.
Thanks for doing this.
Of course. And we have a lot coming up in the next 2 hours. We're going to talk about the latest on New Jersey Transit. Commuters right now finding themselves with few options after the first transit strike in more than 40 years. That's not why Carol's not here, but she is a New Jersey girl.
Yeah, she is.
She doesn't take this specific transportation that's affected. But
she's good. Yeah, she's good for now. She's good for now. We'll see about next week.
That's also, New Jersey. We're going south, though,
We're going
right?
south. What are we doing in the south?
We're going to be speaking to Maddie Parker, the mayor of Fort Worth, Texas.
Yeah, good to have her back on the program. We'll be speaking with her in just about 20 minutes. Also, we're getting healthy today.
A new healthcare service tailored to lifelong athletes. Tim, you're one of those, right?
Trying to be.
We're going to speak to Alex Mather, founder and CEO of Eternal. We're going to learn about that company.
All that and more coming up over the next 2 hours right here on Bloomberg Business Week Daily. First up, though, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
All right, thank you very much indeed. 53 minutes.
Åh, var dårlig trade. Faen, nå kan jeg bare takke for dagen.
Level of the day now.
Nei, jeg chiller fortsatt, men jeg tror ikke jeg tar noe mer selv.
The FT reported that
fortsatt inne med 50% av lot-sizen igjen på personlig konto. Ja, begge. Jeg har funded-konto, så har jeg en personlig, og så har jeg eller i teorien har jeg 3 personlige kontoer. En jeg tredje på manuelt, og 2 jeg har noen bots på. Og så kjører jeg funded-kontoer også. En på gull og en som tredjer alt.
Over 2 fatal 737 MAX crashes, that according to lawyers for the family. And there's a massive corporate deal today involving 2 of the biggest names in cable. Charter Communications has agreed to combine with closely held Cox Communications.
Nei, Meta24-appen det som blir brukt når det kommer til bots. 90% av tida. Hæ? Nei, jeg er ikke eier den botten. Ja, du kan se på det som sånn. Eller jeg copy-trader botten, kan du si. Jo, du kan endre litt sånn på risiko sånn selv, om du vil ha safe-stillinger eller litt mer cocky, men ja. Nei, jeg vet egentlig ikke hva den går ut på, jeg. Helt ærlig med deg.
Alright, thank you, Charlie. So,
ja.
New Jersey Transit, the locomotive engineers went on strike this morning, which triggered a shutdown of the agency's rail service and disrupted travel.
Skjønner. Ja, det er Martin Gilbert, eller? Ja, riktig. Ja. Ja, oi, trailerstopplås også, ja, riktig. Altså, jeg hadde jo flere botter også. Jeg hadde en bot som var helt syk. Men den var jo såpass risky. Det er sånn, enten så dobler du konten, eller så blåser du den til helvete. Men de jeg har tilgang til nå, de er ganske solide, ass. Jeg vil jo fortsatt redde manuelt selv, da. Det er det som er gøy.
We gotta help out our listeners and viewers around the world who don't necessarily live in the tri-state area and give them some context about why this is essential to New York City.
Med disiplinert, hvordan tenker du?
To the economy of New York City, to the economy of the region. Just give us some numbers, some context about New Jersey Transit, who it carries, how many people it carries, that sort of thing, and what the effect of this is.
Right, so New Jersey Transit operates about 925,000 weekday trips, just system-wide, on a weekday. So that brings in about thousands and thousands of people each day.
Ja, men det er ganske vanskelig å få botten akkurat som du vil ha, da. Det kommer på litt an på hvor avansert strategi du har. Men jeg er keen på å få i min strategi i en bot også, men
Friday is a little bit easier because people work from home anyway.
Ja.
But New York employers do have to be mindful of if people can get in for those next few days.
Do we know at this point, and look, I think it's important to remember, you know, you have the folks out there who can work from home, but you also have people who work in healthcare. I mean, I think one of your stories earlier this week mentioned Memorial Sloan Kettering and the fact that it warned patients to be cognizant that this could actually happen. If we think about this from the perspective of, I don't know, congestion in other areas, if you take a bus in, do we have any data on that at this point, Shri?
No data yet because it kind of just kicked off, but we could probably anticipate a lot of road gridlock. You know, Shakira concert goers were like, the traffic is insane because there were no trains or bus service. So that kind of gives us a preview into how those peak days could go if people hit the roads.
Shri, we have to give you a shout out, you and your team, for this outstanding headline on an article. I'm just going to read it for our listeners. Hips don't ride. NYC NJ travel chaos leaves Shakira fans fuming. That's a great headline for any Shakira fans out there. But really on a more serious note, what did the concert goers experience? Because I feel like you kind of expect there to be bottlenecks in traffic when you're going to a concert. How was this different? This was last night, I think.
This was last night, and there's another concert happening tonight at MetLife. So, you know, those trains kind of
eliminate some of that routine congestion. You know, you're gonna see traffic going in and out of a concert
Ja.
anyway on the roads.
Jeg,
But a lot of
jeg har faktisk jeg har en AirShift-bot selv, som jeg prøvde på et av disse firmaene som tillatte det. Og så fikk jeg da utbetaling, klarte å tjene penger og fikk en utbetaling. Men med en gang jeg var flere $1000 oppe, så denne de meg P18. Så, ja, det de som teller det bare scam.
The point where they're going to actually come back to the bargaining table? What's keeping them from actually doing what many would argue is their job right now?
Yeah, wage has just been at the center of this. Obviously, they kind of negotiate a contract every 5 or 6 years, but you know their pay has been at the forefront. So union workers really want to, they're seeking parity with engineers at Amtrak or the Long Island Railroad, and they want to make about the same amount. And New Jersey Transit is saying, hey, we can't afford that. If we were to meet your demands, that would cost us millions, and we'd have to hike up fares by 17%.
Or broker?
You know, we'd have to drastically cut service. So they're saying it's too expensive. And the union is saying, well, no, that's not, you know, that's not necessary. So there are some conflicting reports on what the engineers make, what their base salary is. And
men var det HFT, eller var det bare vanlig bot? For det to forskjellige ting.
They haven't seen eye to eye, and negotiations have been very tense.
Nei, nettopp.
The first day of the strike, what do we know so far about, like, how the negotiations persisted today?
Yeah.
What has the union said so far?
Yeah.
Have they made any progress yet?
Yeah, so sources
Yeah.
close to the union have told me that they have not met with New Jersey Transit since
Yeah.
late last night. Union sources have said that New Jersey Transit walked away from the table around 10 o'clock to hold a presser with Governor
Den pleiser ikke stoppe oss, eller?
to kind of talk about the state of play.
Ok, den gjør det, ja.
That night, they announced that they were going to strike kind of mid-presser. So they're not set to officially go back until Sunday with the National Mediation Board to kind of spar it out there. They could meet anytime before then. They could meet right now if they wanted to. But yeah, the next official confirmed date that they're going to meet is on Sunday. So we'll see what happens from there.
Here in New York City, the people who are familiar with our subway system, the MTA, it's not actually run by the city, it's run by the state. What's the governance like of New Jersey Transit?
Yeah, so New Jersey Transit is completely run by the state too, but it's our regional transit system. So we have people coming
Ja, riktig. Ja, det minner meg om den første botten jeg hadde. Da var det sånn når det var nyheter, så burde man skru den av.
Around Trenton, North Jersey, and they all kind of come into Manhattan and back. Or you also have those larger hubs in New Jersey, like Secaucus or Jersey City. So it definitely drives a lot of people in and out, throughout the day, not just in New York, but also in some major hubs in New Jersey.
Oi, gul bare flydde opp nå. Fy faen.
Just some of the commuter stories. I know in some of the articles you have some people actually sharing their experiences of like what they actually had to deal with. Can you give us maybe one of the stories that you've reported on of just an actual real life commuter like dealing with all of this?
Yeah, well, I can definitely tell you that commuters have been coming to me just dying to tell me their stories. I talked to someone earlier this morning who said that
Ja, jeg har tro på den ene botten jeg har nå. Han sjefen i hvert fall sa at den har 3 år med data, ingen måneder i minus, og avkastning på alt fra 10-40% i måneden.
Nobody knows what the timeline of this is going to be.
Han rik, ja.
Given what your reporting has told you, what you've heard from each side.
Det vet jeg ikke, men han koser seg i Dubai, og han tjener vel i hvert fall 10 000 daglig passivt, vil jeg tro. Dollar, altså.
As far as I'm concerned, this could last, indefinitely. As long as the strike is going on, service is going to be disrupted. So we will see what comes out of Sunday, but this could go on for a long time or a short time.
Newark Airport having issues with air traffic control, having issues with canceled flights, delayed flights. The air train that gets people to Newark Airport, is it affected?
Ja, kanskje det.
I don't think so. I think that the New Jersey Transit train does have a direct line from Penn Station to Newark Penn Station.
So as long as you can get to Newark Penn Station,
you should
somehow you should be okay. Well, That's not an easy thing to do without New Jersey Transit.
No, definitely not.
Shri Taylor, thank you so much for joining us.
Ja, eller han markedsfører den ikke. Jeg fikk tilgang gjennom en felles kompis.
Bloomberg Interactive Brokers studio. Coming up next from New Jersey to Texas.
Ja, nei, det er...
Speaking with Maddie Parker.
Du kan aldri være sikker.
Fort Worth. That's coming up next on Bloomberg Business Week Daily.
Men han ene kompisen med Botox, han har brukt den nå i 5-6 måneder da.
Of 1%.
Så... Hva du mener at... Hva er det du mener kan skje, liksom? Ja, han eieren. Ja. Nå er ikke jeg eieren, så... Men, ja. Jeg skjønner hva du sier. Ja, det er interessant. Se. I thought. Ja, gullet går opp. Angrer litt på at jeg closa den ene kontoen min på toppen her. Men. Jeg holder på personlig. Er vel ikke safe å ligge... Nei... Du må... prøve å komme inn... Altså, det kan være på hvor du skal stoppe oss, da.
NASDAQ up 86 now, up by 0.5%, on track for the second best week of the year. Your 10-year 4.43%, the 2-year 3.98%. Gold now down 1.4%, $31.94 the ounce, and West Texas Intermediate crude up by 1.3%, $62.40 a barrel. This Bloomberg Business Flash is brought to you by ShipStation. Calm the chaos with the shipping software that delivers. Use code Bloomberg for a free trial at ShipStation. ShipStation.com. That's ShipStation.com with the code Bloomberg.
Short
So
på gull.
now the S&P NASDAQ all advancing today, but one of the big stocks that's moving higher, shares of Virgin Galactic right now up by 56% for a record intraday gain. Analysts encouraged by the space exploration company's first quarter results and firming up plans to introduce its new Delta spacecraft.
Kom inn her på denne kontoen, og så denne her ute på den her.
Sequoia Capital Managing Partner Roelof Botha was among the Coinbase global customers whose personal information was stolen as part of a hack against the largest U.S. crypto exchange, that according to sources. And New Jersey Transit locomotive engineers, as we have been reporting, are on strike, shutting down the agency's rail service and disrupting travel for hundreds of thousands of commuters. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. We love checking in with mayors, and this one in particular because she's the mayor of one of the fastest growing cities in the country. We've got back with us Maddie Parker. She's the mayor of Fort Worth, Texas. She joins us from Fort Worth, and we should note that Fort Worth is part of the What Works City certification through Bloomberg Philanthropies. It is supported by Michael R. Bloomberg, the founder of Bloomberg LP. It is the parent company of Bloomberg TV and radio. Maddie, good to have you back with us. It's been close to a year, believe it or not, since we last spoke. When we spoke to you last year, you talked a lot about the economy, about EV magnet manufacturing, the great relocation to Fort Worth. I'm wondering if you're still seeing continued strength in the local economy, or given the concerns that we've talked about nationally, there's a bit of a slowdown there.
Yeah, well, first of all, thanks for having me back on. It's hard to believe that was a year ago, Tim. So we're seeing a lot of that same economic success here in Fort Worth and Texas. Yes, the economy has kind of taken a different turn in the last few months, but all in all, people are pretty bullish on the Fort Worth, Texas market. Just in the last 2 years alone, Fort Worth has seen $3.7 billion of economic impact and investment. We have a lot of things in the pipeline right now that continue to see green light to go. So I have every reason to be optimistic, but we do keep our ear to the ground and really talking, especially on the manufacturing side, to understand on the tariff conversation what would be happening in the United States economy, really what this
Snakka bare vært choppy oppi hele løs.
Tell us
Hvor har du lært å trade? Jeg lærte meg selv.
and potential new businesses coming in. What are you seeing right now coming up?
Nå har jeg holdt på hver dag i 3 år.
I think the important thing for those that may be listening to your program,
Startet med høyere time frame, supply and demand, og så lærte jeg meg bare å gjøre zonene fra sånn til sånn.
And their new program with the Army, but it also expanding into
Hvis ikke vi flipper opp her nå, så er jeg ute med min posisjon. Helt. Det er helt greit. Vi kan fortsatt gå videre, men fornøyd nok med
having a really robust approach across the entire city about what those things really do offer. One big piece I think that contributes to our overall economic growth is a robust higher education network across Fort Worth and Tarrant County and into Dallas County, all over DFW really. Over 55,000 graduates from our higher education institutions across DFW every single year.
Profitable, ja.
And then a lot of these companies that are relocating or expanding in Fort Worth know they've got a great workforce connection. A nice fun fact
Jeg begynte å tjene bitte litt i fjor. Så jeg tapte jo penger hele første året, eller et totalt år, var det bare tap. Men jeg startet å lære med ekte penger nå, for jeg klarte ikke å trade demo og ta det seriøst. For da holder du bare traden da. Hvis du trade med ekte penger, og du ser at du ligger i 1000 år oppe, eller hva enn mye penger er for deg, så må du jo, da er det ofte man bare closer traden tidlig og sånt på ting da.
You're competing not just with other cities around the country, but I mean other cities that are within Texas. I mean, if you think about Texas and the growth that it's seen over the last few years, it's got 5 cities now within the top 15 in a population: Houston, Dallas, Fort Worth, San Antonio, Austin. What is the competition like to get new business? And what makes Fort Worth as a city stand out? Is it easier for Dallas, Fort Worth, for DFW because of what the dual cities close by have to offer?
Always said that we're stronger together across North Texas and being a part of the DFW region. You guys know this, we're soon to pass Chicago Metro as the 3rd largest metro region in the entire country. We're also incredibly fortunate that we're a part of the Texas booming economy, continue to be #1 as a pro-growth state by every metric that you look at because of the economic development efforts across the state of Texas. It was really
Jeg så på en long her i dag, helt på bunnen. Jeg tok jo ikke det. Og så prøvde han på longs her, inn i choppet her, og så ble jeg tatt ut. Akkurat flere ganger.
We're now on the map.
Og der er jeg ute på gull.
For these big potential projects and really leaning into those. But you're right, a lot of times we are competing with other Texas cities, but it's a friendly competition. You know, we wanted first them to focus on Texas, and once we know they're focused on coming to Texas or expanding here, then we can kind of take the gloves off and compete with different cities. But largely, I would say in the last year, you've seen them really trying to choose between a city like Fort Worth and maybe down to Austin or Houston as a top choice.
På personlig konto så er det 22% av profitten. Så du kan laste ned bare PDF fra for eksempel frontbroker, hvor det står alle transaksjonene.
That's really on the national level, but from your view, how are your constituents feeling about the economic outlook?
Say that anytime there's large economic uncertainty or infighting, partisan or otherwise at a national level around the direction of our economy, it does translate here at home. Sometimes it's very specific. It's, you know, around grocery prices and concerns there, or it's prices at the pump may be a concern, or just the general cost of living. Housing affordability continues to be a top issue in Texas and really in any growing area across the United States. You do see it translate. You might get different opinions from people as to why they may be holding their pocketbooks more closely, what their savings account looks like. But it's just really a part of how you weather the storm. I am hopeful that from an economic policy perspective, especially here in Fort Worth, where we do have such a robust advanced manufacturing network, and you really understand the impact of tariffs in particular, that we pay close attention to that. And we try to do our part as leaders at a city level, also working with our state and national leaders to understand, try to educate our public on where those impacts may fall. Some of it really, quite frankly, though, is out of our control. But I do think those national polls you mentioned do translate here in Fort Worth and probably in any large city across the U.S.
Mayor Parker, I want to talk education. I know that you've mentioned your 3 kids to us in interviews past. You have young kids in school in the Fort Worth area. According to the NPR affiliate for North Texas, KERA, the Fort Worth Independent School District has lost more than 12,000 students going back to 2019 and expects to lose an additional 6,500 by 2030. Help me understand what's going on there. Why is it losing students if the city's seeing growth?
It's a complicated answer to your question. And interestingly, if you look across the country at large urban school districts, a majority of them are losing enrollment and population. That's very true here in Texas. You have school districts like Plano or Duncanville that are losing population enrollment. I think it's a multitude of things. Number one is probably a change in direction after COVID. A lot of families started making different choices for their families. These kids still are in our communities, but they've got a lot of different choices. You know, here in the city of Fort Worth, we're home to 12 traditional public ISDs. A multitude of families are choosing private education, charter schools, homeschool families. By the way, over 600,000 families choose homeschooling in the state of Texas alone. So what I try to do is, rather than focus on the numbers, because it doesn't impact their bottom line in a school district, is every single school district needs to focus on being the school of choice, having great options for their families if they want to bring families back into enrollment, but also acknowledging that these large districts probably are a thing of the past. By large, I mean, when Fort Worth ISD was 85,000 students, now they're just north of 70,000. And as you said, preparing to go lower than that. So in fact, next week, they're going to face a tough decision about school closure and consolidation and enrollment. That's really focused on better student outcomes. But these are decisions that large districts are having to make across Texas and really across the United States. And as I said, it's a complicated answer and maybe not always the same in every single city. But we're still a young city, large percentage of young families and children here in Fort Worth. The average age here is about 32 to 33, which really bodes well for your local economy. And they're just choosing different options for their children rather than their large district down the street.
Mayor Parker, I'm wondering if this turmoil in the school districts could potentially prevent people, if you're concerned that it's maybe preventing people from moving to Fort Worth. And if so, what could the city do to kind of stem maybe some of that hesitancy?
Well, I would say this. Lucky for us, the lack of growth is not a problem for us. We have thousands of people moving here every single year, contributing to the population growth you've seen. Just this week, we announced cresting over 1 million people and passing the city of Austin in population. And that's, as I mentioned before, people are moving for a quality of life they want to see in a community like Fort Worth. We're a large city with a lot of small town charm. People want to raise their families here and build businesses here. When it comes to education, though, regardless of whether or not I had children, I have a responsibility as mayor of this city to make sure that every single student has access to a high quality education. It really starts at birth and goes on to whatever their career path may be. We've done a multitude of things here to really refocus around student outcomes and efforts here. I'm really proud of the track that we're on. Fort Worth ISD is our largest district. Yes, half our students go to Fort Worth ISD. The other 11 school districts are also making their own efforts forward. But as any large city should be looking at, what is the state of our education in this country? And we can all do better. Adults need to raise expectations and really demand excellence and success from all students, regardless of their zip code. And we have a focus here and a goal in Fort Worth that every single child in our city, regardless of zip code or neighborhood, deserves access to a high quality education. And while this will be a long-term goal for us, we have certain programs and initiatives in place, including our Mayor's Council on Education Workforce Development, to really bridge those gaps and make a difference. Because to your point, long-term, it would have an impact. If we're not taking care of business and really recognizing that the students in our classrooms today are key to our success long-term, it would deter people from wanting to live and grow and invest in our city. And that really needs to be something we keep on the forefront of any effort we have around economic development. Education has to be at the center of that.
I know you're focused on Fort Worth as the 45th mayor of Fort Worth, but we have to end with your ambitions beyond being mayor. Are you thinking more about statewide office? Are you thinking more about national office?
I'm not right now, and I'll be honest. I don't know if either of you have children. My youngest is 8, turning 9. Right now, I'm focused on having a sleepover for 12 9-year-old boys at my house on Saturday night.
Oh, God.
That seems to be where my focus is. I love being mayor. It really allows me to serve here at home in a city that I love. I appreciate not being in partisan elections, quite frankly, and getting to focus on what really matters. But who knows? The sky's the limit, and God has a sense of humor.
Good luck getting sleep this weekend if you're having the sleepover. We appreciate you taking the time and joining us, Mayor Parker. Always good to check in with you. Maddie Parker is mayor of Fort Worth, Texas. She joins us from Fort Worth. We got less than 30 minutes to go to the close of trading on this Friday, and what a week it's been. We're hovering around session highs, just off of them, 0.6% to the upside on the S&P 500. Coming up next, we are talking media and telecom. That's next.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all ripping higher. We're on track for a week in which the S&P has advanced about 5.1%. Let's head right over to the First Word breaking news desk for the afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks with a bid right now, helped by a 6% gain in United Health Group. The Dow is currently up 300 points. S&Ps are higher by 32, and the NASDAQ is higher by 0.3%. The U.S. 10-year yield is at 4.44%. Gold is in the red, oil is in the green, and Bitcoin, that's higher by 0.2%. Among the main 11 S&P sectors, leaders were healthcare and utilities. Only energy was in the red, and leaders to the upside in the Dow, UNH and 3M, while Cisco fell 1.3% and led to the downside. After earnings, Applied Materials fell 5.6%, and wrapping things up, the Bank of New York Mellon is trading higher for a 15th straight day, is on its longest winning streak ever. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you, Bill. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Take a car in the morning. It's 45 minutes to get.
Thanks so much for that update, Charlie Pellet. Do appreciate it. Hey, I'm watching on what's going on in the world of TMT because we have a big deal. Charter Communications has agreed to combine with the closely held Cox Communications in a cash and stock deal that would value that would create two of the biggest U.S. cable providers. The takeover values Cox at about $34.5 billion, including debt. The combined company would be the top broadband operator in the U.S. It would increase Charter's subscriber base by more than 20%. This is according to Bloomberg intelligence analyst Geetha Ranganathan. It also comes at a time when cable companies are facing increased competition. We got a special guest for our drive to the close today. That's Craig Moffett. He's founding partner and senior analyst at MoffettNathanson. He joins us from New York this afternoon. Good to have you with us, Craig. A deal such as this in the year 2025, could it face regulatory scrutiny?
Hey, Tim, good to be here. You wouldn't think so. Cox and Charter are adjacent. They don't directly compete with each other. Charter's pricing strategies and their go-to-market strategy is pro-competitive and pro-consumer. So you wouldn't think that this deal would face any challenges, even at the state level, because they'll also have to get approvals from the public service commissions and public utility commissions in the individual states involved. You wouldn't think it would see any challenges. But again, things have been sort of unpredictable when you get DEI considerations and things like that can hang up otherwise big deals that are ready for approval. You do have to be at least somewhat circumspect about what kind of process it'll face.
Okay, that's a deep tease for the Verizon Frontier conversation we're going to have in a few minutes, but we want to stick on Charter and Cox right now because that is the big deal of the day.
Right, and Craig, so you joined the show in January. I think Carol Masser was here. It wasn't me. I'm filling in for her. But your top pick for 2025 was Charter Communications. So I'm wondering, how has your view changed on the company in light of today's deal news?
Well, nice to see you, Emily. I think it's actually not changed at all. And in fact, I suspect that the reason that Cox was finally willing to agree to a merger after 20 years of being asked, or really, I guess, almost 20 years of being asked, they went private back in 2008, if I recall, is that the Charter momentum, and in particular, the Charter momentum in wireless and the converged offering of wireless and broadband together was so compelling that I think Cox probably said, we're better off to be part of the Charter family after saying no to mergers for 20 years. Maybe it's finally time.
Is it time because of what has happened in this industry over the last 20 years? The rise of streaming, the cord cutting that we're seeing, the secular decline of what's known as the cable bundle, and just the disruption that we've seen. I mean, in your career has been pretty remarkable.
It has, but I don't think that's really behind it. It's easy to probably the younger listeners don't remember when cable was about video. Cable's core product hasn't really been video for 15 years. Cable's core product has been broadband for at least 15 years. And so it's really all about broadband. What's changed is that we're now seeing broadband and mobile service being offered together in this kind of what is typically called within the industry convergence, but which they're trying to sell to customers as just sort of connectivity everywhere. The CEO of Charter was speaking at the Moffett-Nathanson conference for us yesterday and was saying that that he thinks when a customer pulls out of their driveway, they don't really care who's providing the service in the driveway, who's providing the service in the house, and who's providing the service outside of the house. They just want to make sure it works in all those places. And so what they're trying to do is convince customers that we can give you a better deal at a much lower price and give you the best connectivity everywhere. And it's working for Charter. And that's, I think, why the stock is up almost 60% year to date. It's been, or over the past 12 months, I think it's just, people are starting to see the fruits of that strategy. And I think that's, again, precisely what Cox saw. And Cox has an agreement with Verizon for carrying wireless traffic that they are not able to put over Wi-Fi or over their own network. The same as Charter does, but it's not as good a deal. And so I think a lot of this was driven by, we want to be on the Charter deal that has better economics and better terms than the deal that we have with Verizon.
Is this going to keep working for Charter Communications, given the competition that they're seeing from the wireless companies that are now doing broadband into homes? I mean, I have Verizon or Charter offered where I live, and I can get Fios for $40 a month for a really fast connection because it competes with Charter right there.
Yeah, you're exactly right, Tim. That's why you've seen pressure on the broadband subscriber numbers from Charter and Comcast and the rest of the cable industry. The answer to that the cable operators have been pushing is, well, a broadband competitor may be able to save you $20 a month on your broadband subscription, but we can save you $75 a month on your wireless subscription if you take it all together, and you will end up being much better off financially and have a better product. And that's a wireless service that actually, while the cellular portion runs over the Verizon network, it actually beats Verizon in network testing results, because the time that it's not on the Verizon network is actually running faster than the Verizon network does. And so it is by far the best, the lowest price deal available to customers. And that's what the cable operators are leaning into.
So what's the plan here for infrastructure and building out just more infrastructure for internet in the home? Are the combined companies now, Charter and Cox, going to be building out more fiber? That's kind of the infrastructure that delivers the fastest connection here, right?
Well, there's a narrative that fiber to the home, or what in the industry is called FTTH, is better than cable infrastructure. It's not really. They are largely the same. In fact, overseas, there have been all these cases that have demonstrated that cable actually has more fiber than fiber to the home does. That is, a packet is delivered over cable spends more time on fiber than it does even on a fiber to the home network. So the networks are largely interchangeable today. There simply isn't really an advantage to having something that's called fiber over something that's called a cable network. So it really comes down to price, and the most differentiated part of the offer is actually in the mobility side.
Hey, Craig, before we let you go, promise we'd do 30 seconds at least on Verizon winning FCC approval for its $9.6 billion acquisition of Frontier Communications Parent Inc. Why, in your view, did this deal go through?
Well, I think it's pretty clear it went through because they agreed to end all their DEI programs at Verizon, and the deal was approved minutes after that. And that had been the hang up that the FCC had with the deal. But it's also, that deal is interesting because why is Verizon buying Frontier? They're buying Frontier because they want a bigger wireline footprint. Remember, they already
Craig, unfortunately, got to leave it there. Craig Moffett over at Moffett-Nathanson.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week Daily. I'm Tim Stenovec. That is Emily Griffeo. She's in for Carol Massar. A redhead crossing the Bloomberg terminal right now. The Supreme Court blocks President Trump's deportations of Venezuelans. We're getting that information to you now. We'll let you know when we have more on this, but just worth repeating. A redhead crossing the Bloomberg terminal. The Supreme Court has blocked President Trump's deportations of Venezuelans. Checking out the most read stories on the Bloomberg terminal right now. We've talked about quite a few of them, including what's happening when it comes to New York City, New Jersey transit. In the meantime, I want to talk a little bit about what's happening with the markets, Emily Griffeo, because we're on the cusp of a bull market.
Yeah, it's been a really incredible rally since the April, I think it was the April 8th was
April
the
8th
low.
was the low, yeah.
And it's interesting because, like,
where were you on April 8th?
I don't remember.
You don't even remember.
Oh,
exactly.
you know what?
Do you remember?
I actually do remember. I was in a meeting, and then my phone was like blowing up with all the headlines that the S&P was up like 9% on the day because of the tariff pause, and we've come such a long way since then. But the economic data is still so weak. At least when you look at soft data, consumer sentiment is at a decade's low right now. At least according to numbers that we got this morning, inflation expectations are low, or
high.
we should say high.
Not good.
They're not good. And yet the stock market is climbing higher. We're now in positive territory year to date, which I don't think you could say that a couple days ago. Sometimes what the stock market is doing is not often reflective of what's going on in the economy.
Yeah, I think that's fair to say. From those April 8th lows, the S&P 500 is up 19.5%. As you mentioned, we're positive in the S&P 500 for the year, up 1.3%, though we're still down half a percentage point when it comes to the NASDAQ composite. I think a lot of folks were really concerned about what we saw, what we were going to see when it came to earnings. I'm eager to get back on the program, Gina Martin Adams. She said, watch earnings. And it was really a tale. I mean, if you look back in hindsight, it was a tale of two different types of companies. You had the mega cap tech companies performed pretty well. And then some of the other companies, I mean, withdraw guidance and say, we have no idea what's going on here. There's just too much uncertainty.
The retailers as well saying that, like, oh, this is not going to be good. Shelves are going to be empty. But it's still a little bit of a wait and see when it comes to whether the consumer sentiment is going to actually be reflected in spending data.
Yeah, Dana Telsey of Telsey Advisory Group, who was on our program yesterday, she was on Bloomberg Business Week Daily. She was on surveillance with me last week, and she said we're a couple weeks away from empty shelves.
Yeah, that's what Torsten Slok from Apollo
Torsten said it to us the same.
Saying,
yeah. So I mean, he's watching the same data that she's looking at, which I think has to do with the container ships that are coming from China. There is a lag, and given what happened 6 weeks ago with this, with the huge tariff that was put on China. A lot of companies didn't end up shipping out from China. So we'll see.
But here's the thing. If you took that information and said, great, I'm going to pull all my money out of the stock market, I'm going to go to cash, you would have missed out on the rally, at least if you're an equity market trader. A lot of those ETF investors, which typically are more retail, they kept buying. They bought the dip. They didn't stop.
That's a good point. Hey, I mentioned earnings. We're still in the midst of earnings season. We're going to hear next week from Home Depot and Lowe's. We're also going to hear from Palo Alto Networks. We're going to be speaking to Wendy Whitmore, Chief Intelligence Officer over at Palo Alto Networks, in about 20 minutes. We're going to hear from Target on Wednesday.
Oh, that's a good one.
We'll get Snowflake on Wednesday as well. Thursday, we'll get Analog Devices, Autodesk, Intuit, Ralph Lauren, BJ's Wholesale Club, and Friday we'll hear from Booz Allen Hamilton. We'll see if they got hit by the Doge cuts.
Okay.
So still hearing from companies.
Yeah.
Okay, cool.
All right, well.
Are you ready for this simulcast?
Yeah, the simulcast.
No earnings today.
There's no earnings. That's good.
All right, you hear that music, you know what it means. We're just about 2 minutes from the close of equity trading here. The S&P 500 off its best levels, but still up 0.7%. Coming up next, it is our cross-platform coverage of the market close on Bloomberg TV, radio, YouTube, and Bloomberg Originals. The closing bell, it starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Scarlett Fu, taking you through to that closing bell with a global simulcast. It started. Tim Senovic is in the radio booth. Emily Gorfeo in today for Carol Massar. Alex Seal on assignment as we welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube, as we close out what has been, Tim Senovic, a very solid week for U.S. equities.
Yeah, one of the best weeks of the year for the S&P 500. We're solidly in the green on the S&P 500 year to date. And Emily reminding me a little earlier that we're up 19.5% from those April 8th lows on the S&P 500. So that was just like 5 weeks ago.
Right. And the market was still able to rally higher today, despite the fact that a lot of the economic data that we got showed consumer sentiment is pretty weak and Americans are expecting inflation to tick up higher.
Yeah, but so far that hasn't translated into the hard data showing that same kind of damage, right? So as long as that hasn't made that leap over, a lot of folks in the market are saying it's still time to sit back and see how it all plays out.
And it gets to this idea, though, too. I mean, when we talk about this rally, and I'm glad you brought this, or Emily, you brought this idea of this 19% rally off of that lows, of course, after having that effectively 19% drawdown from the highs on the S&P 500. We haven't round tripped just yet, but it is kind of interesting that this isn't necessarily being led by tech in the way that you would think it would be. It is a lot of the other sectors, right, Emily?
Yeah, I mean, that's right. If you look at the equal weight index, it's been rallying there as well. And also the Russell 2000 small caps outperforming both mega cap tech stocks and the S&P 500 today.
All right, well, on a weekly basis, tech is out front, as are the discretionary names, but all of the 11 S&P sectors in the green on a weekly basis. As for the day, you have the Dow Jones Industrial Average closing out up about about 328 points, or about 0.8%. The S&P 500 up more than 40 points, or 0.7%, while the NASDAQ higher by 100 points, or 0.5%. The Russell 2000 getting in on the action as well, adding about 19 points, or 0.9%. And we should point out transports and mid-caps also getting pretty strong bids on this day, up about 1% each.
This was a broad-based rally, at least in the S&P 500 today. You only had 56 names move lower, while you had 446 names advance on this Friday afternoon.
Yeah, so it's a pretty clear IMAP, too. Look at the 11 sectors in the S&P 500. Only one, energy, finishing lower by 0.2%. Otherwise, what's interesting here is that you have the defensive sectors, those that pay high dividends, healthcare, utilities, real estate investment trusts, and staples doing the best.
All right, let's go to some of the gainers on the day. An easy task to find these. I want to start with Charter Communications, up close to 2%. We could say 1.8%. The company has agreed to combine with Cox Communications. It's a cash and stock deal valued at about $34.5 billion. That does include debt. This combined company would be the top broadband operator in the U.S. It would increase Charter subscriber base by more than 20%. It would position them to better compete in this converging market where you have the wireless providers offering wireless service. You also have the wireless providers offering fixed broadband service as well. So it is a really competitive space. We just spoke to Craig Moffett over at MoffettNathanson. He reminded us the core product when it comes to TMT companies, it's no longer TV, it's no longer cable. This is all about broadband. Once again, shares of Charter today higher by 1.8%. CoreWeave finishing the day higher as well. 22% to the upside today. It more than doubled from its March IPO. This after NVIDIA reported its stake increased to about 7% of outstanding shares. This was as of March 31st. We learned this in a 13G filing on Thursday. NVIDIA was expected to have about a 5.2% stake in CoreWeave after its IPO. That was what the prospectus showed back at the end of March. And finally, look at what happened with Virgin Galactic today. Now, to be fair, the stock has been beat up over the last few years. Shares just soared today. It was up as much as 98% earlier in the session, closed higher by 43% to the upside, a record intraday gain. Analysts encouraged by the space company's first quarter results. They did say they plan to charge more for its space tourism flights when it resumes sales in the first quarter of 2026. They've got this new Delta spacecraft. It's going to hold 6 people, faster turnaround between missions. Then they'll clear this existing backlog of ticket holders in about a year. Also, they made about $460,000 for the first quarter. It was slightly above estimates. Negative free cash flow, though, expected to be between $105 million to $115 million in the second quarter, Emily.
All right, let's look at some of the decliners for the day. Applied Materials, this is a chip equipment maker. They gave a lackluster forecast for the current period, highlighting the potential cost of the U.S. trade dispute with China. So the company said sales will be about $7.2 billion in the third quarter, plus or minus $500 million. That was roughly in line with Wall Street estimates, but some analysts had projected as much as $7.4 billion. So that stock closed down about 5% today. I'm also watching shares of Hershey, the chocolate maker, was down 2.3%. Additionally, Mondelez was also falling as cocoa prices, which of course is a core ingredient in chocolate candy, surged to a 3-month high today on renewed supply fears as shipments from top grower Ivory Coast slow and also dry weather threatens next season's output. So go and buy your chocolate right now, Romaine. Those shares were down 2.3%. And speaking of food, Cava was also down about 2.3% closing today. The fast casual chain reported first quarter results and updated their outlook, but analysts said that while the report was positive relative to peers, the dining establishment needed stronger results to justify the premium valuation. That stock is up a ton since going public in 2023.
All right, let's check in on yields here. Third straight week where we've seen yields rise both on the 2-year and the 10-year. You see the numbers there. These are your daily moves. 3 basis points on the shorter end of the curve, not much on the longer end of the curve. But it should be pointed out, you go back to where we were in mid-April, towards the end of April, when yields were actually drifting lower. The big bump up ever since then, basically since the start of the month, certainly concerning. A flirt with 5%, of course, in the middle of the in the longer end of the curve, and a flirt, of course, with 4% on the shorter end of the curve, 3.99 right now on your 2-year yield.
Okay, you know, this is a program that airs worldwide. We've got viewers and listeners all over, but our focus for part of the program today has been what's happening in the New York metropolitan area, given the strike, the first one in 40 years that we've seen. When it comes to New Jersey Transit, we spoke to Bill Maloney earlier, who typically takes him about 90 minutes to get in on the train. He had to drive to Hoboken from his home, walk from wherever he was able to park in Hoboken to get on the PATH train because he wasn't able to get on New Jersey Transit today. It's not just disrupting, though, people who are trying to get to and from Manhattan, from New Jersey for work. It's also going to disrupt Shakira fans who are attending the concert at MetLife Stadium tonight, and it happened even last night as well. Real hiccups.
You know, Tim, I feel like you usually expect that if you're living in New York or you're in the New York City metropolitan area, there's going to be a little bit of traffic trying to get to MetLife for a sports event or for a concert. But our Bloomberg News reporting sourced a tweet here. Someone tweeted that they sat in traffic for 6 hours for that Shakira concert, which that sounds like a lot more than you would typically expect. And
They better
again,
get this
it's all
sorted
coming
out
tonight.
before the Beyonce concert next week. Beyonce starts her 5 concerts in the MetLife next week?
Yeah, the Beyonce concert, Shakira folks got stranded yesterday. I mean, I don't know if you're actually a basketball fan, but apparently the New York Knickerbockers, who have, of course, sucked wind for decades now, actually
Tonight
in contention. So how are all those fans who don't live in the city going to actually get here tonight? They're going to drive in?
They're going to zoom in.
They're going to drive in?
Yeah, do a shared Uber.
No, but it gets to this idea too. I mean, and I know a little bit earlier on this program, we had some of the officials on this network. I should say we had some of these officials on. This doesn't seem like they're anywhere close to striking a deal. So I do wonder how long this goes and sort of how we sort of mitigate the impact.
Well, a lot of people are getting ready to work from home, perhaps. But, what's interesting is that in the markets, working from home on Fridays may no longer be something you can do because trading on Fridays has become a lot busier. For portfolio managers, it's become the busiest day of the week because they need to prepare their portfolios for what could be market-moving news from President Trump over the weekend. They are de-risking their portfolios, in many cases buying treasuries and selling credit.
Yeah, and more importantly, though, this is also about the price action as well. I mean, there was always sort of this churn, and this is specifically when we're talking about the fixed income space, was typically you can buy things relatively on the cheap on a Friday and then roll that over into next week. And now that's kind of been upended. So a lot of folks are basically working a lot longer and a lot harder and a lot later on Friday to sort of set themselves up and prepare themselves for maybe what happens over the weekend.
May I make a humble suggestion to our investing audience?
What's that?
Perhaps maybe just buy another Bloomberg terminal for the vacation home.
There you go.
The place in the Hamptons.
You have no vested interest here.
Always
I
be
would
selling.
suggest maybe that would help with this challenge of just always having the information. at the ready. So you can enjoy a 3-day weekend perhaps, but also be able to act on that info.
All right.
It's just a humble suggestion, guys.
I think our bosses love you, Tim.
Oh, well.
Yeah.
That's the idea.
And this is why.
Hey, guys, that is going to do it. Have a great weekend, everyone. I think
too.
the band is getting back together next week. I do want to thank all of you. It is going to do it for our cross-platform coverage of the market close on Bloomberg TV, radio, YouTube, and Bloomberg Originals. We will be back on Monday, same time, same place.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week. That is Emily Griffeo. I'm Tim Stenivek. Taking a look at what's going on with the markets right now, we actually see...
Well, the S&P closed up 0.7%, Tim. Really incredible rally here. Let's also take a look at crypto, though, because Coinbase was on a wild ride this week after there was news that it was being added to the S&P 500. It was a major milestone for the crypto company, because it was the first crypto exchange, the first crypto company at large to be added to the world's most famous index. However, later in the week, we got news of a hack at the crypto exchange, Tim. We also got news of regulators probing the company. So it's been a wild ride, but when you look at what Bitcoin is doing, it's up almost at 104 when you look at its price, 104K that is, Tim. Let's also take a look at some of the top red stories on the Bloomberg terminal to finish out the week. The first one here being that Trump's tax cuts were rejected by a House panel as hardliners are digging in. This, of course, is referring to a key House committee on Friday, which failed to advance House Republicans' massive tax and spending bill after hardline conservatives bucked Trump's vote here and block the bill, or his push here for this bill, and block the bill over cost concerns.
Hey, you mentioned, Emily Griffeo, some of the stuff happening when it comes to hacks, Coinbase specifically. I'm going to read some headlines here, okay? Sequoia Capital Partners data hacked in Coinbase breach. Coinbase hack highlights how greed can overwhelm cyber defenses. Coinbase customer data stolen. Just a sample of headlines from Bloomberg News and from the Wall Street Journal. This garnering our attention on a day such as today, and kind of perfect to have Wendy Whitmore back with us. She's Chief Intelligence Officer of the $128 billion market cap Palo Alto Network. She joins us from Santa Clara, California. Wendy, good to have you back with us. The Coinbase hack, I think, really highlights how our information is at risk, even if we think as consumers, as users of these products and services, it's safe. I mean, when you talk about the type of data that's at risk here, I mean, we're talking images of driver's licenses being available to hackers as a result of accessing the network. Talk to us a little bit about what we know.
Jeg ble tatt ut et par ganger i det choppet i dag på avstand. Gul var litt cleanere i mine øyne.
Nasdaq var fin, den når den ble ut. Det var fin pop.
Ja, den poppet opp et par ganger, brøt et par ganger. Men jeg vet ikke, jeg bare, hvis du tar sammenligningen liksom i dag og denne dagene, så følte jeg i dag var mye mer choppy enn de andre dagene.
Jeg liker det i dag enn i går.
That goes after finding out who the attackers are that are responsible for this attack and bringing them to justice. And I think, as the largest cybersecurity company in the world, we at Palo Alto Networks, we don't ever want to see any client be paying a ransom. But we have not seen organizations previously take this kind of tactic. And I think what they're doing to disrupt
har du litt bredere stopper, så går det fint.
And to make it a little more challenging. And I think attackers in the future asking the question of, wait, I don't know if I want that $20 million international fund, which is going to mean people who, may be in my network, but may be willing to kind of turn me over to international law enforcement. I think they're going to start asking questions, and disruption in this cycle is really critical.
Yeah, I mean, the sense that I have is that our information is not safe.
I dag?
I mean, I don't know how many
Ja.
times a day I get text messages.
Gull. Jeg fikk 2 ganske nice på gull.
From these so-called fake butchers. Oftentimes, I don't even pick up my phone if I don't recognize the number. Honestly, the world we live in
jeg tok 3 longs på gull.
pretty annoying. Like, this is a very annoying place to be as a consumer
En
right
break-even.
now. Is it going to get any better, or is
Alle var
this
pluss,
just
tror
the
jeg.
reality that we live with?
Ja, småvinst på gull, og så hadde jeg bare et småtap på Nasdaq. Han ble akkurat tatt ut 2 ganger på Nasdaq da, altså by the tick liksom. Så det kunne jo enten bli jævlig bra på Nasdaq også. Men jeg gikk bare for $200 for dagen, og da ville jeg bare gå inn med lite og ha tight stop, ikke sant? Så det var egentlig grunnen til at jeg ble tatt ut. Hadde såpass litt tightere enn vanligvis da.
Your question though was, hey, is it getting any better?
It's not getting any better for me. Will it?
I think it can get better. And I think that we're seeing AI actually be a massive tool for the side of the defenders, because as I highlighted, we're up against such a major scale problem. These attacks are getting more sophisticated. Real-time defense is absolutely critical. So what you're going to see,
Ja, den har funnet.
certainly at the company
Den har
level,
funnet.
all
Så det en dag til på $200 for å få
making us able to scale
PR på denne
against that
kontoen.
better. But you're going to see that get into your consumer technologies as well, where they're going to start doing more effective blocking, and you're going to receive less text messages moving forward that are scams in
50 000
nature.
eller?
When you talk about AI, something that comes to
Totalt
mind is just how scammers can
$50 for evalueringen, og så $150 for å aktivere den. For å komme da på den ekte kontoen hvor du kan tjene.
Hvorfor kjøper du ikke bare den største?
Fordi på targeten på 50K-en så har du 4K drawdown og 3K profit target, mens på de større kontoene så har du, skal jeg se,
9000 og 4005 i drawdown, men du liker da 150 000 innen 50.
Men det er lettere å passere 50K enn 150K.
Tror du?
Nei, det er det ikke.
Jo da. Hvor lang tid bruker du på å passere en sånn konto? Bruker bare 2 dager?
Ja, hvis jeg gjør det aggressivt så bruker jeg 2 dager, eller 3.
Ja.
Så det kan passe det også.
Jeg har passet mange sånne for folk på det toppstep.
For folk?
Ikke som regel 2 dager. Ja, for noen folk.
Så du logget inn på deres konto, eller bare ga det en trade?
Jeg logget inn på deres konto.
Asking them questions about where the domain controllers were, what were their names, and finding out information that was actually helpful for them in the course of an attack. So that means that in order to really be successful here, organizations have to fight AI attacks
Jeg har brukt som regel 2 dager.
on the defense, and that has to be
2 trader, så det 4005.
I mean, I know a guy who was getting calls like that looked like
Jeg gjorde det nå det siste.
It literally said his bank's name.
Funker like greit det. Det å bruke en evighet på å passere en konto er bare waste of time.
Actually his bank. Like, what are we supposed to do as consumers?
Ja, hvorfor er det så billig?
Well, I think we got to approach every conversation, unfortunately, with skepticism, do that same with every message. But for your bank, for example, most banks will say, hey, we're not going to reach out to you and ask you for personal information. Everywhere you use multi-factor authentication, it not only sometimes adds a little bit of time for you to get in, but it's going to make it a lot harder for an attacker to try to log in as you, essentially try to steal money.
Det var $400,000, tror jeg.
Ja. Så på 100K er det 6K profit target og 3K maximum loss. Så 1 til 2, mens på 50K-en så har du 2000 max loss og 3000 profit target.
When it comes to sort of safe security hygiene, Wendy, always appreciate you joining us. Wendy Whitmore, Chief Intelligence Officer of the $128 billion market cap.
Men du kan jo si, ja, har du så mye å si, kanskje en ekstra trade, kanskje holde bare den ene traden litt til. Du kan jo spekulere og si det også. Men, ja, i mine øyne så er det lettere å passe enn 50 på hvert fall, så da går jeg for det.
5%, one of the best weeks for the S&P 500. Coming up next on Bloomberg Business Week Daily, we are talking how to stay sharp and fit as we get older.
Jeg har tenkt noe mer på prisen. Det er nesten billigere å ha en større konto enn sånn i level.
Ja, det kan du...
Har du ut 100% på den, eller?
Nei, du kan bare ta ut 50.
Ja, første 30 dagene,
ja.
Så kan du ta ut 100.
Ja, så jeg tar ut 50. Tror jeg. Jeg tror jeg tar kvelden.
Ja.
Han ender vel bare streamen og kommer tilbake nå, tror jeg. Det er fredag og... Ok, vi snakkes. Ha det.
God helg. God helg.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. 5 in a row for the S&P 500 indexes. Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle structure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. The Dow, the S&P, NASDAQ all advanced today with the S&P on the week up by 5.2%. back at 59.58, up 41, up 0.7%. The Dow up 332, up 0.8%. Nasdaq Composite Index up 0.5%. 10-year 4.43%. Spot gold down 1.3% today. Gold now at $31.99 the ounce, and West Texas Intermediate crude oil up 1.3%, $62.39 a barrel. Virgin Galactic shares up 43%. Analysts encouraged by the space exploration company's first quarter results. Recapping, S&P up 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. As we've been reporting over the last hour,
Så har du gjort det i dag, Robert?
extended an order blocking the Trump administration.
Nei, skal du se, jeg har nå $70 pluss på første 24 timene. Men jeg har prøvd litt med sånn nivåtrading, og ser det går inn flere trades, da, men jeg har tatt litt for store tap i forhold til jeg har fått igjen. Det funker ikke så aller verst, da, for de fleste han er jo grønn. Jeg har jo veldig lite å trade med i øyeblikket, så jeg må ta litt forsiktig. Ja, da er det om å ta tapene fort. Ja, det er nok det. Så, men det er klart, jeg skal prøve å komme inn på en short, og det skal du se kanskje ikke så lurt å gjøre når du har så lite. Det er bedre å ta dem long i stedet. Litt av rakuttet på nedsida der. Ja, så hvertfall når det går oppover. Ja, i prinsippet så skulle det selvfølgelig ikke være, men det virker noe litt sånn da. Så strekker vel strikken litt for langt nå. Ja, men fort å gjøre det. Ja. Så er det litt med det at du skal liksom prøve å holde trua på det du holder på med. Også.
You have to give them due process. They have to be told and given an opportunity. But how much notice? We don't know. So that should be decided by a lower court. It's like on the ground. Unfortunately, where they are is the Fifth Circuit, which is the most conservative circuit in the country, and already basically looked at this and went, nah, we don't have to do it. So what happens now is that the removal of the Venezuelans that are actually represented here, the plaintiffs here, is
holdt på trua. Ja.
Whether or not what kind of notice they decide to give them. But it's stayed also because now the Supreme Court is saying in this case, if you file a writ of cert and we take this case, then it will their removal will be stayed until we're done with the case. And what they also reference, which I think is interesting, they reference Abrego Garcia's case twice. Okay. And they say, look what happens when we let you, Abrego Garcia, being the person who was illegally deported to El Salvador. And he's still there. And, yes, and they say,
Nei, men det er vel egentlig bare å ta dem så lenge de skal si når de ikke respekterer, kan du si, nivået. Ikke det, tror jeg.
We don't have jurisdiction over him. So the Supreme Court is saying, oh, remember the case of Abrego Garcia where you said you didn't have jurisdiction? That's why you can't fly these people out because you don't have jurisdiction. So it's in, it's in parentheses, remember the case. It's telling the Trump administration, this is not the way. This is not the way you're supposed to deport people. It says you can't deport them under other means, but not this way.
If courts have previously told the president and his administration that they have to facilitate the return of Abrego Garcia, and he hasn't done that, does this matter? Even matter in the context of getting the administration?
Så det har tatt ut dem og mer,
Trump administration had asked again for them to allow them to expedite these removals. And this is all, do you remember last weekend when Stephen Miller was saying we want to suspend the writ of habeas corpus, which by the way, every
Inn på søndager i kirka da. Du kan gjøre i kirka, ja, I hvert fall det vi gjør oppe I Trøndelag.
And when Lincoln suspended it during the Civil War, he's the only president to do so. It's looked on now as like that wasn't the right thing to do. So that's why they're talking about suspending the writ of habeas corpus, because they want to send these Venezuelans out.
Ja, det går da vel som vanlig I morgen, det.
They don't want to wait for even a
Stengt I morgen.
They just want to send them out quickly.
Det stengt I morgen.
Lørdag I morgen.
Ja, det kan jo stemme. Her det alle dagene likeens, så jeg vet ikke hvilken dag det
We know you're still getting through this case, so we do appreciate it. Bloomberg News legal analyst and host
det
of
skal det bli.
Bloomberg It's 6 p.m. Wall Street time on Bloomberg Radio. June Grosso joining us. Let's switch gears a little bit because I don't know exactly what to attribute this to, Emily. Maybe it's the popularity of the best-selling book Outlive by Peter
Vi
Thiel.
vet ikke hvor vi fer hen på søndagsmorgen.
Maybe it's the fact that, like, my own confirmation bias that I'm.
Jeg skal faktisk sjekke på søndag. Dessverre.
To perform like, you know, in athletic competitions.
Konfirmasjon.
So you got to do more to stay in
Ja, men det er for det også nå.
Definitely happening.
Det det.
Older athletes and wanting to maintain performance.
Ja, Berganja for alt sånt I år.
Ja, heldig.
Ja, det bra.
Har du noen unger, eller?
Hæ?
Har du noen unger?
Ja da, men skal ta seg en gamlesting, han 19, og så andre to, han blir 17 da.
Ja, ok.
Han blir 18, mener jeg selvsagt, ikke 17. Ja, stuller med det først. Ja, og jeg ser dem nesten ikke heller da, så.
Nei.
Nesten ikke sett dem på siden ja, 2010 omtrent.
Ja, såpass.
Det såpass.
Og de bor ikke hjem.
Hva du sier at?
De bor ikke hjem.
Ja, men jeg har ikke bodd så langt unna senere årene, men så jeg har litt med mora å gjøre her.
Ja, så
jeg trenger ikke å utbrodere det her nå. Det finnes egne nettsider for sånt. Ikke for det er ikke her heller. Men jeg ser det mange leker skjebner, for å si det sånn. Ja. Så det ja, så er jeg ferdig med konfirmasjonen og alt det der.
Aging, whether you're in your 20s, your 30s, 40s, or beyond, thinking about your health, your performance, and the process of aging in that same way.
Jo, nei, det stenger 10:30. I dag det fredag.
Ja, men det jo ikke noe mer å sette noe tredd før I dag.
Paying attention to like living
trenger ikke å sette med noe over her det gang.
Longevity is the word I'm looking for.
Hvor jævlig hardt å svarte egentlig.
Longevity is in vogue right now?
Jeg tror det.
Partially, I think I'm like the two of you. I've read the books, listened to.
Ja, altså nå har vi akkumulert såpass mye oppi motstand her at det må react. Det må gå ned.
Our parents and our grandparents live longer. And that's amazing modern health.
Nei, jeg tør ikke, men så lite jeg har på kontoen. Så.
Nei, altså det man gjør jo ikke, det jo ren gamble. Plutselig så kommer det til nyheter I helga.
Ja, han tar noe fri, han Morris-kolben ellers.
Nei, han peiser på, han.
Peiser på, ja. Han har vært stille I dag, da, men han har vært ute og fløyget, tror jeg.
Ja,
men så var så mye jagere bakom en, så jeg lurer på om de har skutt inn det.
A really important aspect of their life that's incredibly complex, and you know, we're just really excited to be in the middle of that.
Alex, I want to talk a little bit and learn a little bit about what you're
offering.
You know, you don't necessarily, you know, there are a lot of companies out there already that offer, you know, quote unquote longevity services, and I've looked into these and I've talked to doctors about them. The doctors I've spoken to have said, you know, some of what they do is evidence-backed, is evidence-based, it is based on the science, but
Eller du stenger når klokka begynner å bli. Eller, skal vi se, det stoppet nå, eller?
Nei, jeg har ikke stoppet, jo, kanskje.
Den går ennå, kanskje.
Ja, jeg vet meg, jeg stoppet.
Det går en halvtime til. Tenker jeg. Det stod, jeg mener det stod 11 på CMC.
Ja, men det fra megler til megler.
Ja.
Min stoppe 10:30.
Din stopper alle. Okay.
We kind of were sorting out what they needed, what they wanted, and where they lacked. And what we saw was that most people go into it thinking, oh, I need this supplement or this hack to make me live longer. And what we saw in the data was that almost needed close attention to really big things in their health, in their fitness. Like you listen to the podcast, you read the book,
det är akkurat som med håret.
Lots of ideas, lots of tactics.
Tynnes ut, ja.
Sleep, nutrition,
Det är färdigt tynna till mig.
all these things that are more basic came to the forefront for us, and what we wanted to help folks do at the end of
Man bare renske over restene når man mangler selv.
5 hours a week, whatever it is, to dedicate to your physical activity. Where are you going to get the most bang for your buck? What's most important for your aging process? If you're going to go run the Boston Marathon, we can help you. If you're, thinking about adding muscle mass, we can help you. Where are you strong? Where are you weak? We're there to support you. And I think most folks that we talk to lack strategy, not tactics.
Ja, yes. Ja, for å ha en god helg.
Become a member at
God
Eternal.
helg, ja.
Fin
How much is it
17.
going
mai.
to cost someone to
Takk, det
become
samme.
a member? And
Ja,
also,
takk.
it looks like on your website there's a wait list. So how does this work, and what do you have to pay for it?
Yeah, so the way it works is first, the first thing we do is connect you with a dedicated coach, dedicated doctor, and a nutritionist.
RP-formidlelse er
And
ganske
so that's your team.
likt ut,
And so that
trøtt.
they get to know you remotely. And then you come in and get
Ikke
assessed.
bra.
So we have locations in San Francisco and New York, with more coming. And we physically assess you in a bunch of ways. We take your blood. We get you on a treadmill or on a bike, look at your VO2 max, your lactate threshold. We do a strength and power test. We put you on a DEXA scan.
Tim and I should
machine to
compete
look
on
at your-
this. We should go together
I'm
and
ready.
compete.
Let's do it.
We've had husbands and wives want to do that. Yeah, totally fun. It's a really great experience. And folks don't realize how hard they work and how much they push themselves. And we look at you as a human being across all of these different factors. And so the team behind you looks at that data over the next week or two.
Okay.
And they come up with a ton of information that's there to help you.
We only have 10 seconds left. Price, just so we know,
Yeah,
price?
$4,800 a year. That includes 2 full assessments, full access to your doctor and coach.
All right, Alex Mather, founder and CEO of Eternal. This is Bloomberg.
tradet selv, derfor copy, men forstod for sent. Skulle gjerne lært om hjernen fikset seg på. Ja, altså, teknisk er ikke så veldig vanskelig sånn, egentlig. De fleste overkompliserer det bare. Sånn, kort forklart, du setter streker vannrett, eller horisontalt, rett over grafen. That's it. Eller på skrå diagonalt over. Og så er det bare å ta bunnene og toppene av candlesticksene, liksom. Da satte man seg ned litt og faktisk bare studere grafen, så kan de fleste lære seg litt teknisk.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ all advanced today, but our top story, the U.S. Supreme Court has blocked the Trump administration from using a wartime law to send a group of Venezuelans to a notorious Salvadoran prison, faulting the government for not giving the men adequate notice about its deportation plans. Stocks higher today, 5 in a row for the S&P 500 index. S&P today up 41 to 59.58. That was a gain of 0.7%. Dow Industrials up 332 points, up 0.8%. NASDAQ up 0.5 with a 10-year at 4.43%. The 2-year 3.98%. Gold down $43 the ounce, down 1.3%, 31.97. West Texas Intermediate crude up 1.2%, 62.37 a barrel on WTI. Charter Communications up 1.6% after agreeing to combine with Cox Communications in a cash and stock deal valued at about $34.5 billion. But what about potential regulatory issues? That question for Craig Moffett, founding partner of Moffett-Nathanson, who appeared right here on Bloomberg Business Week Daily.
Things have been sort of unpredictable when you get DEI considerations and things like that.
Jeg har et mål om å prøve å lære litt. Ja,
Craig Moffett of Moffett-Nathanson, the Cox
det tar som regel en dag om gangen. Du lærer ikke over natta uansett.
That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie.
Jeg bare ser på grafene mens man sitter, så vil du se mønster eller sånn. Se hvordan den oppfører seg rundt diverse plasser. Når den kommer opp dit, så gjør den sånn, da går den opp litt, går den ned, og så går den opp på stange igjen, så går den ned, og så går den opp på stange en gang til, og så ramler den ned. Eksempel. Og da får man som regel en reaction fra motstand oppover.
Thank you. Doing great.
So
Happy
it's
to be in New
amazing.
York.
These bottles are iconic. Like I see the name Tarani, I don't necessarily know what it is. Then I go to the website and I'm like, oh my god, this is like.
Det er jo egentlig bare topper og bunner.
Well, I'm glad you know
Historiske topper og bunner.
I associate them with coffee shops, but is that where the most of the business happens?
It's happening in all different places. I would say about 30 years ago, shortly after we had created the first flavored lattes, we went crazy after cafes and helped them grow and helped this whole flow of flavor go. Now you would find us in all kinds of other applications. So if you are in your early 20s, you are likely trying Tarani in your energy drink or maybe in your matcha or in all kinds of other ways.
So you're buying it for home use rather than it's a B2B sale?
It's both.
Okay.
It's both. It's about
what's bigger,
half and half.
So half of your sales are from selling to coffee shops and the other half are directly to consumer?
And we call them drink shops
or
now.
Or even a retailer location, I guess?
Because they sell a lot of variety of things. It's not so much about coffee anymore, and most of it is cold.
Okay, so speaking of variety, you have 150 flavors. It's interesting because I feel like some businesses, the strategy is don't give the consumer too much choice because then they're going to, there's like what is it called? Like the
anxiety that you have? Or like
I don't know. I think there's just some term for it, but when you get anxiety, there's too many choices. But talk about the strategy of 150 flavors and how that's worked out for you guys.
There's a consumer trend of personalization and customization. So we help consumers curate that. One of the things that we're experimenting with right now is a pop-up experience that's started here in New York. It's headed to Seattle. It'll stop in Austin and other cities.
Det er jo sånn avhengighetsskapende.
Answer a series of questions in an interactive
Så det er veldig artig når du ser at
so it helps them curate the kind of choices they
at
might
for
want to
eksempel hvis du prøver litt teknisk, og så ser du at det funker faktisk. Satt ut en strek, og så stopper den på den streken. Eller litt over eller litt under, men den stopper i det området. Det er veldig artig.
There's zero-calorie options. There are options that are sugar-free. There are the classic options as well. There's one called Pureemade. When you think about ingredients and the kind of the pushback that we're seeing right now on a national level, especially with Robert F. Kennedy Jr. at the FDA, this idea of banning these so-called natural flavors, how does that fit into your ingredient supply chain?
It fits perfectly fine. We follow consumer trends, and we've seen a trend for clean label for some time. We know, though, that there are all different kinds of trends. So there are some people who want their Instagrammable moment with a wild beverage, or maybe they want to feature their college colors. So we have all kinds of choices for all kinds of pocketbooks, but we've been naturally moving towards natural flavors, natural colors, and other things for a while.
Is anything that could anything be banned that you currently use with what we're seeing from Ken Paxton, the Attorney General in Texas, and what we're seeing from followers of the Make America Healthy Again movement?
The things that people are most concerned about, we don't have in our products, but they're talking about banning all FD&C colors. So we do use some of those.
But you don't need them in flavors, right? Like you could have a flavor like that doesn't.
Det vises godt på skjermen.
People do eat with their eyes. So we use it in very small quantities because our flavors are concentrated. So it falls well below any concerns. However, people eat with their eyes. I think since we'll all be doing this together, consumers will become accustomed to having less color.
Interesting.
Right.
Okay.
Yeah, I'm curious, like what would you do if something like that was banned? Are there alternative ways to add color or?
Sure, we do it now. We use crop-based colors, and there are some really beautiful ones. I don't know if you've ever had tea made with butterfly pea flowers.
I have not. Have you?
No, but I can see Bloomberg offering that upstairs in
when
the pantry.
You try it, it turns your drink a beautiful purple blue. So there are natural crop-based colors.
When you think about the geographic distribution of your sales, how much is the U.S. versus outside of the U.S.?
We are fundamentally
Man kan liksom se hvor ting går an. Vi har bare zoome ut på grafen.
Or export from the U.S. and import into those other countries based on the ingredients, because you have the cereal companies coming out and saying, well, the Fruit Loops that we have in Canada are different than the Fruit Loops that we have in the U.S. because we can't use this coloring. Do you run into the same challenges?
There are some
Ser du på
And of course,
Nei, viser
ingredients
sikkert
come
ikke.
from all around the world, like cocoa. We don't grow cocoa in the
Ingen som skjer.
US. That is a tariffed product now, right? A lot of the ingredients.
How much does that increase your costs?
Well, it increased the cost of cocoa by 10%. That's something that we take into consideration. So what we've been trying to do is build in a lot more efficiency in the way we produce so that we can try to absorb as many of those tariffs as possible. One of the things that you wouldn't necessarily think about, we're expanding our manufacturing right now. So we just expanded, we added 200,000 new square feet of distribution space, and we're taking over the prior space where that was to build new manufacturing. Steel tariffs, stainless steel is tariffed, and suddenly on a $60 million investment, which is a sizable investment for a mid-sized company, has $3 million in additional tariffs that we didn't anticipate.
And this is to build the manufacturing. This
It's
is
to
not
build.
about
Så det er jævlig mange Austria-kalmer som kommer bort.
And we're working with domestic fabricators. So they just can't get their hands on enough stainless steel to be able to do that. So I find that fascinating. I'm a huge proponent of creating great jobs in manufacturing. Tarani is, we think of ourselves as a company that creates opportunities for people from all walks of life, and we need a lot more of that in the US.
And you're based in the San Francisco Bay Area.
Right.
How's business out there? Because we don't have a ton of time left, unfortunately, but I was just out there and the downtown area is pretty quiet.
Downtown is quiet, but the neighborhoods are busy and vibrant. And manufacturing left the Bay Area some time ago. We are devoted to creating jobs where people need them most. And even though we're largely a tech sector in the San Francisco Bay Area, we have people who need all different kinds of jobs. And we need that across the US.
$600 million in revenue is what you're set to do this year. You're set to surpass $1 billion in annual revenue by 2030. Where's the biggest growth coming from? Just 10 seconds.
Biggest growth coming from consumers online, but also all kinds of fantastic drink shops that you see growing across the country.
All right, so online and old-fashioned in-person
The
as well.
TikTokers.
The TikTokers.
Absolutely.
Good
We
point.
love those folks.
Melanie Delbecco, CEO of Tarani, the 100-year-old company celebrating its 100th anniversary this year. Hey, a headline crossing the Bloomberg terminal. This is a redhead. The United States rating has been cut to AA1 from AAA by Moody's. The outlook to stable from negative. This is Bloomberg Business Week Daily.
Shorta du steg?
Nei.
Bare jeg så han kom tilbake her, og så han ramlet så gærlig.
Nei, til meg er det stengt.
Ja, ok, sånn. Skal vi se, det var det, vet du. Skal vi se, 4-15.
Har jeg ramlet inn bra?
Ja, han er nesten 100 poeng.
Ja, nei. Jeg sa jo at det kom til å gå ned.
Ja, mer. Han fikk mer.
Ja. Langt ned, så.
Det er en fucky 100 poeng.
Nice. Det kan vi like.
Så fortsatt.
The S&P 500 got this great function on the Bloomberg terminal, HCPIW.
Okay.
Shows you exactly what the S&P 500 did this week.
Ja, 7 minutter igjen.
Yeah. You can do D for day, Y for year.
And what did it show us, Tim?
5.3% for the S&P 500 this year.
This week.
This week, excuse me. Thank you.
This week. This year. Yeah, you're learning how to use the function.
I am, but I'm actually also looking at how it did weekly compared to other weeks. It's the best week since February 21st.
After all of the volatility that we've seen, and like even look at the VIX too. It's down now below 20, 17, and it's not just mega cap tech stocks. It's not just like Nvidia driving the rally here. It's more broad-based.
And next week, we got a lot of earnings on the horizon.
That's right. We have retailers, Target coming up.
Yeah.
Sist fredagen tidligere nå, så har han jo gått rett opp, egentlig.
Yeah, we'll see if they change the narrative at all. Let's take a look at some stocks on the move this week. I'm Tim Stanovic with Emily Grafeo. We're joined by Bloomberg News earnings reporter Red Brown. Red, you have the unique feature of being in here on a Friday afternoon to give us, after the market closes, to give us these stocks that were on your radar for the entire week. What are they?
Well, lucky me, I get to stay late on a Friday, but...
We love it when you're here. And I know you're staying late for us. So
no, I mean, of course, it's a privilege, always. But the stocks that I'm keeping my eye on for this week, number one would be United Healthcare. They've had quite a wild year. And that's really saying something for this company, which is like notorious for being the most consistent, the most boring company kind of in the S&P 500. They've shed 42% of their value this year, which is just an incredible kind of turn of events. It's lost, just to kind of like put that in perspective, it's $290 billion that they've lost. They were looking at
$600
billion. Now they're closer to $300 billion in terms of market cap. So, yeah, it's been quite a year for that company.
I mean, quite a week. This is what you call a no good, very bad week. You know, it started off with the news that they were tearing up their guidance for the year, getting a new CEO, and ended the week with this Wall Street Journal report that they were being investigated.
Så det stengt 5 på det.
Those are really the main drivers of the share performance that we're seeing this week, and it kind of has a lot of investors just like scratching their head. It is, how could they have gotten things this wrong? How could they have estimated their costs so poorly? This really does seem like
Ja, skal se om jeg får til et chart til løpet av helga, så skal jeg se.
you're seeing at some of the other peers, Humana, Elements haven't
Hva som skjedde med droppet?
so yeah, there's
Det skal droppe.
fantastic they're gonna need to turn around with a new CEO.
All right, what else are you watching?
First Solar is another one that's kind of top of mind for me. Since April 30th, the stock is up 40%. And a lot of that is coming down to some of the political pressures just starting to alleviate. So first we saw the China tensions easing earlier this month with Trump and China able to...
Jeg tenker ikke så hardt på Tesla, men jeg har chart på dem, så jeg kunne
process
opptatt.
of cooling relations there. A lot of the global solar panel supply chain still runs through China. First Solar has made a lot of efforts to kind of diversify away from the country, move to Vietnam, things like that. And then on top of that, we got a big relief when Republicans voted for the kind of revamped Inflation Reduction Act. And it looks like they're not going to be as hard on green energy as people were fearing. So that's another kind of big boost for this company.
All right, Supermicro.
Det går sikkert an å ta en long en på det her.
Supermicro, they're up 42%
Ja,
this week.
kom
That's their
nyheter
best
litt der.
one-week performance since
Hva
November.
gjorde det?
And it all really comes down to President Trump trip in the Middle East. It's kind of the gift that keeps on giving for a lot of these companies. Nvidia also another one of the best performing stocks this week for the same reasons. And for Supermicro, it comes down to on Tuesday they penned a $20 billion deal with a Saudi data center company. And then big announcements from OpenAI to do work in the region as well. Supermicro's biggest customers.
Am I reading this right, Red Brown? 44% higher this week for Supermicro?
Incredible. Yeah.
It's now the 4th best performing stock in the S&P 500 year to date.
This is such a volatile stock.
I feel like it was in the bottom 10 like a couple weeks ago.
And then before they added it, it was moving up. Then they added it, then it moved lower. Nvidia, you mentioned too, Red, up 16% just this week.
Yeah, kind of getting back to those big numbers that we expect from Nvidia.
Wow. For more conversations like this, thank you to Red Brown, Bloomberg News earnings reporter. He's going to be busy next week too with earnings. For more conversations like this, listen to our new Stock Movers podcast.
På måndagen så dere sikkert glemt det òg.
In the stock market, listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. Red, do not leave, because I want to ask you about earnings coming up next week. Emily said there's some good bellwethers coming up. You have a story out. It's the week ahead for earnings. You wrote it along with some of our colleagues. What's on your radar?
Well, yeah, like you said, we do have the retailers coming up, and we're also going to get just kind of a view of how they are dealing with tariffs. We saw that great story about how Walmart is saying, we haven't raised prices quite yet, but it's coming, right? Like this is going to be, we're going to have to do this, start passing on some of the higher tariff costs. So we'll get a view from, I think, some of the names that you guys said already, Target, Home Depot, all of these sort of discretionary companies too, is going to be a really good view into kind of how the consumers are
Red Brown, Bloomberg News earnings reporter. Also, a quick reminder, the U.S. credit rating has been cut by Moody's ratings on an increase in government debt. It's a landmark move that casts doubt on the nation's status.
Ja, det er jo stengt til meg.
Ja, du får ikke med den.
Jeg satt plotta inn alle linjene mine som har kommet bort.
Ja, riktig. Men du legger dem opp med ca. 100 poeng imellom det?
Ja, jeg legger dem nå der det
skal legge.
Og så helst 100 poeng imellom. Minimum 100 poeng imellom.
Sånn, ok. Så de må komme noe tettere min, og de respekterer jo dem, så...
This is Balance of Power on Bloomberg TV and radio. Alongside Joe Matthew, I'm Kayleigh Lyons in Washington, coming to you with some breaking news tonight.
Det har vært å prøve det en stund til, for så.
Ja, du satt ut på intradag, eller?
Ja?
Du satt ut på intradag? Satt ut linjene på intradag?
Nei, altså går lenger tilbake enn det. For jeg tar ut noe viktige nivåer, kan du si, med signifikante bunner og sånt. Sammen med topper, sånn så blir det noen flere linjer bortover. Jeg satt ikke opp det i dagchart kan jeg bruke.
Possibly $5 trillion to the debt and deficit. This is why we saw members of the Freedom Caucus voting against that bill today.
And it certainly gives fuel to the arguments they will be making as negotiations continue this weekend. And we should all keep in mind here, Moody's was the last...
Får som regel litt mer oversikt enn, skal du si, I hvert fall innen 5 minutter chart. Nå ser du akkurat det som skjer her og nå, egentlig.
Ja.
Det greit å zoome ut en annen gang, og så se litt I det større bildet.
Hvorfor stenger den oss tidligere? Nei, det hvorfor det vet jeg ikke. Bare sånn.
Well, I mean, of course, my first thought, Kayleigh, was going back to 2011 when we talk about this idea of the S&P when they made that trade here.
Men det var egentlig bare å stenge ned, ikke det, tror jeg.
Most of the markets were closed. You still have futures
trading. Jones skal komme tilbake.
Og det skal du si, det stengt. Trangelen,
the treasury prices You're also seeing equity markets, at least as reflected through some of the ETFs that are still trading, like the
Jeg kan jo stenge
QQQ,
sjøl,
the
for den
Shopson
saks skyld.
NASDAQ
Det var
100,
ikke
as
verst.
well as the SPY, also moving
Får
slightly
stenge
lower
når jeg
now.
er ferdig.
Declines are fractional, to be sure.
Hvis ikke kommer når jeg er ferdig, så stenger jeg den bare.
But again,
Ja.
it is late
Yes.
on a
Ja, men den er
Friday,
god.
so we could
Vi
see
snakkes til
much
vekka.
more of a reaction when we
Hei,
come
bra.
back on Monday
Hei da.
morning. But this, of course, gets to this idea of something that the market has been pushing back on. And you know this, Kayla, you know this, Joe. A bond market has been very concerned here about rising deficit levels, about rising debt servicing cost levels. And with this bill that was working its way through Congress, it was very clear here that there was going to be potentially some pushback from the market. I was a little surprised that we got the pushback, though, at least at this stage, from one of the ratings companies.
Isn't that right? Insights from Michael McKee. Michael, this comes more than a year after Moody's changed its outlook on the U.S. to negative. What's happened in that period of time to lead to the actual downgrade?
Well, I suppose I could shorthand that by saying nothing, Joe. Moody's and the other credit rating agencies have been concerned about the U.S. debt profile and how it continues to grow. And there have been suggestions that this could be coming for quite some time. It is a little unusual in terms of timing, but the forcing issue may be the big, beautiful bill, and Moody's looking at that. They say in their statement that they don't think it's going to do anything to lower the U.S. debt situation. So they felt like they could go ahead and cut us one notch. Now, it means the U.S. has been downgraded, as Kaylee said, by all three agencies. That puts us below number. There are 10 countries now left that have AAA ratings. The U.S. is no longer a AAA rated country, even though it is the largest country, largest economy in the world.
Well, so when we consider, Mike, as I sit here on Balance of Power, thinking about the response we might see from an administration, which has argued, at least if you listen to the Treasury Secretary repeatedly suggesting it's not actually the deficit level that matters, it's all about debt to GDP, and even that isn't that bad. Mike, is this Moody's essentially saying that that argument does not hold water, especially in the current interest rate environment we're in when we're talking about the interest burden?
Absolutely. Moody's is looking at projections that the U.S. Debt to GDP ratio is going to rise to well over 100% over the next couple of years, maybe as high as 140, 150% on the path that we are on. And they say that just suggests a sort of level of fiscal irresponsibility that justifies the downgrade. The question now is, how does that impact the U.S. itself? Because it will likely raise interest costs, which will increase the debt because the government's going to have to pay more for its borrowing. As Romain said, the markets are largely closed. We'll see when we get to Sunday night, Monday morning, what this means. It doesn't likely mean forced selling. After the S&P downgrade in 2011, a lot of bond contracts were changed. They took out the reference to the AAA rating, and they put in just U.S. government debt. And because of the size of the Treasury market, that's generally been considered acceptable reference to the debt. And it means that just because there's a downgrade doesn't mean a lot of people have to sell. But it certainly probably means higher interest rates.
All right, Mike, thank you so much. Bloomberg's Mike McKee and The Close co-anchor Romain Bostick with instant reaction to this important headline. And for more on the downgrade and the economic implications, we turn to SMBC Nico Security.
Ja, senast
Joe Lavorgny, of course,
det kom en
the
nyhet.
first Trump administration. Joe, it's great to have you back. Your insights here, was this deserved, or are you going to tell me Moody's is making a political move?
No, I don't think it was deserved. Well, I mean, actually, I didn't want to say that, but you said it, and the timing is just very strange. Look, the bill is working
Jeg
itself.
påstår hvis du ser
We have to see what it looks
1,
like.
2, 3, 4, 5 meldinger lenger opp, så ser du hva jeg påstår.
I have real problems with. For example, they're assuming GDP at less than 2%. I don't know what Moody's is assuming, but when you have 100% debt to GDP, as Secretary Bessent has mentioned, that is not unusual in the world we're in, especially coming after a period of very low rates. You had negative rates and zero rates through much of the industrialized world. So here you are, you're downgrading the country that has the reserve currency, you're downgrading the country that's growing the fastest of any industrialized countries, and you're also downgrading the country that has the best productivity per capita of any country. So to do this, I'm completely nonplussed by it. It doesn't make any sense. And to do it on a Friday before even seeing a bill, which I think will actually potentially, I'm an optimist, do some good stuff on the spending and certainly raise revenues. I mean, I just don't understand how, and I'm guessing this is behind Moody's analysis. I don't know because I've not seen it yet. But I mean, when you assume that an expiring of a tax package that's been in place for 7.5 years is somehow going to add to the deficit, that just doesn't that's fundamentally wrong in my opinion. It's just very poor forecasting. So you have a big problem with what Moody's did.
Well, I'll give you some of Moody's reasoning, Joe, and I'm reading here directly from the statement. They say over the next decade, we expect larger deficits as entitlement spending rises while government revenue remains broadly flat. They say in turn that leads to large fiscal deficits, driving the debt and interest burden higher. What part of that thinking do they have wrong here? Is it the revenue side or entitlement spending going up? Because is that not the trajectory?
No, the trajectory. Well, if you look at the CBO scoring, it's actually beyond the next 10 years where Medicaid are driving it. It's actually more so than Social Security, but that's way far out. I mean, the revenue share of GDP has been above its historical average. We've recently had a really excessive spending. And we have to see actually what that spending looks like. We're working with the Congress. Congress is working rather to pass a budget. So we don't know what the spending is going to look like. I mean, we knew this was going to happen, Kaylee. The long-term trends by some estimates look poor. This isn't new news. So why would you do it now without even knowing what the budget looks like? And by the way, 10-year yields were recently under 4%, and they've risen up into the 445, 450 range because we've taken recession risk off and the U.S. economy looks healthy. So and term premium, by the way, which is higher, is still lower than where it was in January. So again, without going into all the details that Moody's came up with, their assumptions to me, I don't agree with. I don't agree with them.
Well, it's really interesting here when they point to $4 trillion being added to the federal deficit over the next decade. Joe, are you taking issue with the reasoning or the timing here? Because Moody's hasn't seen the bill yet.
No, the reasoning. So I'm assuming they're using CBO analysis. So, for example, CBO assumes 1.8% growth the next 10 years. That is ridiculously low. It's a point or more less than what Trump had during his first 3 years. It's even a lot weaker than where President Biden was the last few years. The difference between 1.8% growth and 2.4, 2.5, I think we could be at 3, but whatever. If it's mid-twos, the revenue difference on that alone is worth $2 trillion. If it's a 3% economy, which I think we can get back to, that's $4 trillion of differential revenues between what CBO is forecasting and what we would get based on just the growth. And that's keeping the revenue shares the same. So I have a real problem with those assumptions. They're economically doom and gloom, and I don't agree with it.
Well, when we consider, though, the wider economic context with which Moody's is doing this, yes, there are negotiations happening on Capitol Hill, Joe, but there's also negotiations happening with a number of countries trying to set new rates of tariffs that, according to the administration, are going to be at least 10% as a baseline. It's going to be very hard to get below that, and that brings us to the highest level we have seen in decades. Does that not have some bearing when we consider the fiscal health of the United States as well as the potential inflationary or growth impacts that could have?
You were I was almost with you all the way, Kaylee, on that. You're certainly on the revenue side. I mean, we're on track to run $200 billion of tariff revenue this year at the current run rate. That's a lot of money. It has yet to show up at all in the inflation data. Amazingly, the inflation data have undershot expectations. The problem is when CBO does its analysis, because it assumes it's part of law, it's got to be legislated, those tariff numbers aren't even a part of it. So let's say it's only $100 billion. Let's say it's the bottom end, and that's super pessimistic. That over
Det åpner ikke om 5 minutter. Nei, 45 minutter. Det er helg.
There's going to be some slowdown in spending where you could
Lørdag i
$1
morgen.
trillion over a 10-year period. Because remember, it's $100 billion times 10.
Men på søndagen så tror jeg
Aren't even going to be part of this scoring. And they should
Søndag snart.
given how much revenues we're already raising.
Does this not strengthen
Jeg
the
regner med vi går
hand
ned.
of Freedom Caucus, though, who have expressed concern
Det
about
var jo det nivået jeg har sett på hele uka. Og fra det nivået her så blir vi å gå ned.
Certainly the fiscal hawks will use
Forhåpentligvis
this
så har
as
jeg
a
rett.
reason to be more careful On the outlook,
Time will
and
show.
as it relates to the spending, I'm all for it. Yes, we need to slow the pace of spending. By the way, when we talk about spending cuts, Mike, as you know, these are never cuts. They're only cuts
I'm
relative
just another
to a
Joe,
baseline.
Joe. It's just us two Joes talking here.
If we go from 6% nominal spending, let's say, to 5%, that's a 1% spending cut. So I certainly think we desperately need to slow the pace of spending. But again, because a lot of those deficit projections long-term are on the revenue side, they're assuming way too pessimistic growth. They're assuming that if we have massive tax increases next year, the largest ever,
Varsågod.
that's going to raise revenue, it won't work that way. But certainly on the spending side, there's room to cut, no question, or slow the spending anyway.
Well, Joe, when we consider that part of what Moody's here is talking about is the interest burden, I do wonder if you expect, given what we've already heard from President Trump about how he feels about where current interest rates are, if you would expect
Ja, så det kan jo selvfølgelig gap på, men sjansene for det anser dem som ganske sånn små, men for så.
Maybe, but here's what I want to say, though. If you look at the curve, the yield curve, as you know, is still very flat. And recently, it's above the Fed funds rate. So you have a situation where the curve is flat, so the interest costs are significantly higher. If we have lower rates and the curve normalizes and the funds rate is around 250 to 275, which is where I think neutral is, those interest costs are all of a sudden going to look a lot lower. And by Jay Powell's own inflation metric, his supercore, which is the services economy, excluding energy and housing, it's 50% of inflation, has no impact or not any impact. Tariffs have no impact on that. That right now suggests monetary policy is as tight as it's been before the Fed started cutting rates. So there's a very powerful argument right now based on real rates that the Fed could and should be cutting. And as that curve normalizes and those short rates fall, the interest cost is going to come down a lot. I doubt that that's in Moody's estimates either.
Joe, thanks for being with us here moments after this news broke. Joe Lavorgna,
Thank you.
Economist, SMBC Nikko Securities. Up next, we have a lot more on this breaking news about the U.S. ratings downgrade. We'll be live on Capitol Hill for reaction as well. This is Balance of Power on Bloomberg TV and radio.
Men de fortsatt å vake opp i 365-linja mer. Ja, vi har fått ut ett par linjer på grafen. Føles ut som man sitter og snakker med seg selv, men det gjør sikkert det også. Jeg bare setter ut motstandslinjene mine. De var fjernet fra grafen, så jeg, så det var... Nå må jeg sette dem ut igjen.
Welcome back to Balance of Power on Bloomberg TV and radio. As we come to you live in Washington with breaking news, Moody's downgrading the U.S.'s credit rating to AA1 from AAA, citing specifically in part their belief that there will not be multi-year reductions in mandatory spending and deficits resulting from current fiscal policy proposals under consideration, putting a spotlight on Capitol Hill, which is where we go next. as we consider the fact that the House Budget Committee, after conservative revolt over the fiscal trajectory of the United States that could be changed by this bill, shot down, of course, its advancing the tax package through the Budget Committee. We want to get more now with Jack Fitzpatrick of Bloomberg Government. Jack, we know conversations around this are going to continue with these conservative members this weekend. How much
Minus med det, da, front ved det, at hvis det tryner 1000 poeng nå, så sitter jo feil vei med
It adds a lot of fuel on one hand. You had 4 conservative holdouts just in the Budget Committee alone. So this was a major statement that they're serious about holding up a bill unless it's more fiscally conservative. On the other hand, I'd point out the SALT Republicans, who want a more generous tax deduction for their constituents, have also threatened to hold up this bill. So there is the risk that if you give more in Medicaid spending reductions and more fiscally conservative measures to the conservatives, some of that may ultimately just be redirected to a more generous SALT deduction. So there's not necessarily a fair takeaway today that this will be a far more conservative bill, even as a few conservatives really put their foot down and demanded some additional concessions.
Jack, we understand there's a 10 p.m. hearing set for Sunday, a Sunday night hearing, the Budget Committee, to try to do this all over again. You can let us know if that's still the case, but I'm wondering about the Republican no's, Roy, Norman, Clyde, Brackeen. What changes between now and then for these Freedom Caucus members who don't like anything they're seeing?
Roy and Norman want an earlier phase-in of the Medicaid cuts, whether you want to call them cuts or spending reductions. They want it to be a more aggressive path. Brackeen wants an earlier attempt to pull back the clean energy tax credits. Clyde brought up Medicaid and also essentially wants less taxes on gun sales. You can come up with some combination of offer. You need at least 2 of them to get on board in the Budget Committee, but you also need either Roy or Norman specifically to get on board to get it through the Rules Committee, because they're both on there and you can only lose 2 votes. So they need some significant combination, potentially 3 out of the 4 functionally, to get this thing to the House.
Ja, men det sitter feil vei, så det går 1000 poeng
It's going
på
to have to be
toppen.
a productive weekend for that to happen. Bloomberg's Jack Fitzpatrick from his perch on Capitol Hill. Jack, thank you for the reporting.
Ja.
As we now add the voice of Democratic Congressman Raja Krishnamurthy of Illinois. Congressman, it's great to have
Går
you
videre
with us
der
here.
på risk management, da, det jo.
Found ourselves in here in Washington having seen that bill fail in the Budget Committee, and only hours later, this credit downgrade
Du mangler kanskje litt der,
that we
ja.
just received from Moody's. Is Moody's telling us something that other lawmakers ought to be listening to, Congressman? What are we learning about the fiscal health of our nation?
Well, it's
Vet ikke
precarious
hvorfor du
for a
shorta det, da,
particular
men
bill. They call it the big beautiful bill. I think it's a large lousy law. Would
Eller
basically
sitte over
put
helga for
trillions
deg.
of dollars on America's credit card, you know, basically piling up debt for future generations. And I think that Moody's recognizes that and is sending a signal to them not to pass this bill.
And yet they are going to continue to try over the weekend, Congressman. Obviously, there's many questions about this timeline, knowing as well that embedded in this bill is a lift to the
Jeg
debt
tviler på at det går 1000 poeng opp. Da begynner vi å nærme oss all time high, så heftig at
agencies, Fitch and S&P, already have warned about this. Do you think that there may be a possibility Democrats, in the name of the full faith and credit of the United States, are going to have to step in at some point to work with Republicans to make sure the debt ceiling gets raised in a timely manner?
Possibly, but only if the Republicans don't shred the social safety net in the name of funding tax cuts for the wealthiest among us. Remember, this same bill basically takes Medicaid away from upwards of 10
Såpass, ja.
million Americans, their sole source
Eh,
of healthcare, and basically leaves them more destitute, sicker, and unable to work, making them more reliant on the social safety net. I'm a
Ja, da har du litt å ta igjen der, da.
public housing and food stamps, and I would not be here but for the fact that the government stepped in the breach when my parents fell down economically, and yet we're here talking about doing the same to millions of other people. Democrats are not going to stand for that. They're not going to support that type of approach
Men alt går.
our budget the way that the Republicans are right now.
Well, Congressman, considering the fact that Democrats do not have a seat at the table for this debate in the reconciliation process by design, Are you quietly hoping the Freedom Caucus derails this whole thing?
I think whether I do or not, I think that's what they're doing right now. And you see the infighting. I think particularly it's because constituents are kind of raising the alarm. Democrats are kind of shining a light on the harm that's being done by these proposed cuts. I'm getting calls constantly, Joe, from people who are basically fearful that not only is Medicaid going to be cut, but their Social Security and Medicare are also going to be affected. And so I got to believe that lawmakers on the other side are getting the same types of calls. And so they're left with a choice. Do they choose their constituents or do they choose Donald Trump? And if they choose the latter, they're going to be held accountable.
Well, Congressman, you, of course, right now are in the middle of an active run for a Senate seat being vacated by Dick Durbin. And I do wonder what you expect from the United States Senate, the chamber you hope to join here, as there are senators who have made similar suggestions to you, even on the Republican side, about concerns over Medicaid, over the kind of spending cuts we are looking at here. Are you counting on the Senate to send the House back a very different bill, assuming, of course, that the House can pass one in the first place?
I think they will. I think that they're not going to, based on what I've heard, it's very possible that they're not going to go along with these types of cuts. And I think at the end of the day, basically, Donald Trump is trying to fund these tax cuts on the back of working families and the poor. And that's just something that doesn't go over well. And not only is Moody's, by the way, this is the first time that all three ratings agencies have downgraded America's debt at the same time. But not only is this bill horrible from a fiscal standpoint, but it's morally wrong. And I think that's something that a lot of people is weighing on a lot of people as well.
When you hear about a budget committee hearing at 10 p.m. on a Sunday, Congressman, does that tell you that the chairman thinks he has the votes or not?
It signals to me that perhaps he's hoping that some members don't show up. I think that it's a desperate attempt to try to rescue.
Du var vaken igjen på det pina.
Regardless of what happens on Sunday night, I guarantee you that constituents are going to be paying attention, not only Sunday night, but the next week as well.
Of course, this weekend in Washington is going to be a very busy one for that reason, and that's what President Trump is returning to as he makes his journey back to Washington from his trip in the Middle East. I do want to ask you, given you're the ranking member on the China Select Committee in the House, about the deals President Trump struck while there, specifically the moves the U.S. is making when it comes to chips and technology that Saudi Arabia and the UAE are going to have access to. Are you worried about the end market for those ultimately ending up being China, not these countries?
Yes, I think it's a horrible deal. I think that, first of all, rescission of or ending of the what's called the AI diffusion rule. Essentially, basically, this rule prevents us from selling to individuals or entities in countries that might end up sharing that technology with the Chinese Communist Party. And that's what's going to happen here. Okay, let's be very clear. If we allow American chip companies to sell the highest end semiconductors to companies like G42 in the United Arab Emirates, that technology is going to end up in the hands of the Chinese government, and it's going to be used against us. It's going to be used in their military systems, and it's going to be used to perpetrate human rights abuses, such as in the Uyghur genocide.
Something tells me that the China Select Committee, however, will not be holding a hearing on that, Congressman. Is it something, as ranking member, that you'll push for?
I'm going to be pushing to shine a light on this as much as I possibly can, because it's one of those issues where I think that these export controls really have made a difference, a critical difference. We have to keep the CCP away from these highest end semiconductor chips. They will use those chips against us militarily, whether it's in hypersonic missiles or in other weapon systems, and they will use it to perfect their surveillance state, their techno-authoritarian surveillance state against Uyghurs, Tibetans, and others.
Let's keep this conversation going, Congressman. It's good to have you back. Roger Krishnamurthy of Illinois, we thank you, as always, for the insights here on Bloomberg TV and radio. If you can believe it, we actually have more breaking news to talk about this evening, and this time it's coming from the Supreme Court, handing down a defeat to the president a short time ago, temporarily blocking his use of a wartime law to justify the quick deportation of hundreds of Venezuelan migrants, saying the administration did not provide sufficient notice for doing so. For more, we're glad to be joined by Bloomberg's Sarah Forden. Sarah, it's great to have you with us. Can you put in perspective how much impact this ruling would have?
Well, this ruling is all about due process. So the Supreme Court is saying that the government cannot just deport these people who are in detention facilities across the country without giving them due notice, which means more than 24 hours, and also the ability to notify their lawyers and file an appeal. So they're saying these people need to be able to file habeas petitions to protest their deportation, to seek their release. And this is really an extension of the earlier order that we saw come in April 19th, in 1 o'clock in the morning, when they were acting under extreme urgency because they had reports that these men were being put on buses and taken to airports.
We have gotten reaction from President Trump to this ruling, perhaps no surprise. All caps on Truth Social. The Supreme Court won't allow us to get criminals out of our country. But Sarah, my understanding of what you just said is not that the Supreme Court is saying you can't get them out. You just have to go through due process in order to do so. This isn't necessarily, for example, saying the administration firmly cannot use the Aliens Enemies Act under any circumstances. You just need due process along with that.
This is exactly right. They have not weighed in at all on the use of the Alien Enemies Act. This is about due process. But they're also pointing to another case, which is the Abrego Garcia case, in which we had a hearing again today. And the other issue is that the government has not provided any evidence about any of these detainees to show that they are criminals. So we just have the government's word, but there's a lot of back and forth between judges and the administration over whether or not these people can be detained and deported and why. So, for example, in the Abrego Garcia case, the judge today was very frustrated because the government has not answered any questions about this man and why he was deported. And the government has already admitted that he was mistakenly deported. And they're invoking the State Secrets Act. But the judge said, in that case, said she doesn't even have enough information to evaluate whether that is correctly applied.
We're talking about Venezuelan migrants in this case. What precedent might this ruling have for others who the president wants to send to El Salvador?
Well, clearly the rule of law and the precedents around rule of law are going to be extended to other cases. In this Venezuelan deportees case, there are actually 2 that are filing the case, but there are nearly 200 in detention centers around the country that would be affected by this order, and potentially others.
All right, Bloomberg, Sarah Forden, thank you so much for joining us as we deal with one piece of breaking news tonight, but we have to deal with another as well that we want to get back to. U.S. ratings downgrade from Moody's. For more, we turn back to the co-anchor of The Close, Romaine Bostick, who is joining us with an update on the market reaction. Romaine, obviously this dropped after hours on a Friday, so we have to consider the timing here, but what are you tracking?
And I just want to point out, I mean, I heard you had Joseph Livornia on a little bit earlier here. We should point out the first big downgrade that we got of that AAA rating. Of course, that was the S&P downgrade back in August of 2011. That was also on a Friday. It was also after the market had closed, so we had to wait a couple of days before we really saw exactly how investors would take it, and they did not take it well. When we came back in on that Monday morning, you had a Dow Jones Industrial Average plunge 6%, an S&P and NASDAQ that plunged about 7%, and the Russell 2000, which is small cap stocks and very economically sensitive, that plunged about 9%. You're looking at Treasury futures there on your screen, and this is kind of interesting because back in 2011, Treasury yields actually fell after that, and it was kind of counterintuitive, Kaylee, because effectively what happened was people took a sign when they saw that downgrade by S&P. They took that as a sign that there were broader economic issues, not just in the U.S., but globally, and that created a flight to safety. And where else do you run in times of trouble but, of course, to the world's largest and most liquid bond market? So that actually had kind of an opposite effect in the Treasury market, and that's what we're going to have to contend with when we come back to work on Monday morning, is exactly how investors are going to parse this. I also want to put it in context for you here, Kaylee. In 2023, when Fitch downgraded the U.S. from its AAA rating, it was kind of a shoulder shrug. Markets really didn't react to it. You had about a 1% drop the day after that happened, but all those losses were recouped in pretty short order. So it'll be interesting to see what happens here within the next 48 to 72 hours.
Of course, we're in a bit of a different period of time here, Romaine. Of course, over the past couple of weeks, we've watched this remarkable round trip back to where we were before the inauguration, before certainly Liberation Day. And as we look at a market that's trying to right itself here for the year, you've already had some concern that we've run up too far too fast without a great
Nå tror jeg vi bare tar helgen.
for the most part here. Is this a period of time in which the market is at even more risk now when we reopen on Monday morning?
That seems to be what we're hearing from a lot of folks. The CIO over at Morgan Stanley Wealth, Lisa Shallot, was on Bloomberg Surveillance this morning and was saying just that. Basically, she was advising her clients to actually take profits specifically from the run-up that we saw in tech shares and actually move into things that were a little bit more defensive and things that might actually benefit from, say, deregulation and the like. A lot of people looked at this rally and they're saying to themselves right now that this other sort of leg of the stool, if you will, this holistic approach that the Trump administration has been trying to make with regards to trade policy, budget policies, and other fiscal policies, right now, this other leg of the stool certainly looks like it might actually give investors a little bit more trouble to wrap their heads around, particularly in light that Moody's has decided to basically weigh in before we even got an actual vote on this bill.
Another remarkable moment here with the help of Bloomberg's Romaine Bostick. We thank you for the analysis, Romaine. Up next, we'll have more reaction to the ratings downgrade as we are live with Congressman Tim Burchett of Tennessee. Much more ahead here on Balance of Power on Bloomberg TV and radio. Welcome back to Balance of Power on Bloomberg TV and radio alongside Kaylee Lyons. I'm Joe Matthew in Washington, where tonight we're coming to you with breaking news after Moody's downgraded the U.S. credit rating, the agency delivering this hard line for U.S. legislators. Quote, while we recognize the U.S.'s significant economic and financial strengths, we believe these no longer fully counterbalance the decline in fiscal metrics, unquote, as it downgraded again, the U.S. to a AA1 rating from a AAA. For reaction to the downgrade and, of course, the backdrop of the budget battle taking place right now on Capitol Hill, Republican Congressman Tim Burchett of Tennessee joins us. Congressman, it's good to see you, as always, on Bloomberg TV and radio. Thanks for joining us here on this Friday evening. Moody's obviously sees these as directly connected, the downgrade today with the debate that's taking place on Capitol Hill, the tax and spend bill that's supposed to lend itself to a reconciliation project here. There are great concerns about adding to the debt and deficit. Do you share those worries?
I do 100%. I come from Tennessee. We have zero debt. We're A triple plus. All the rating agencies give us that because we don't We don't borrow money. We pay down everything, and we don't have a state income tax. And the federal government just prints more money. There's a lack of maturity in both parties, frankly, and people are just looking to get through the next election.
Well, so if you do agree, Congressman, do your colleagues Chip Roy, Ralph Norman, those who shot this big package down in the Budget Committee today have a point that this bill, as written, as it stands right now, the various parts of it, should not pass?
Well, that's what Moody's has said, and everyone agrees with it. The problem is folks back home aren't grasping the seriousness of $36 trillion in debt and runaway inflation. In 7 years, the largest single item we'll pay will just be interest on our loan. And the Chinese are going to stop playing ball with us, and we're going to collapse if we're not careful. I tweeted today, I said, I'm worried about losing our majority, but I'm worried more about losing our dadgum country, because what we know today, the economic freedoms we enjoy, will not be enjoyed much longer if we continue down this path.
Well, of course, President Trump would say that then if we don't pass this bill, it'll result in the biggest tax hike in recent history, 65% higher for some folks. What's worse for the fiscal health of our country, a tax hike or more deficit spending?
I think we can actually get by positive on both. We can reduce spending and keep reducing taxes. All we're doing is continuing the tax credits that President Trump had put in his first term. And it's not going to increase on anyone. And so if we would just do some fiscal responsible programs and stop playing around and stop worrying about elections, I think we could all get there. But we're not. Everyone will be more people in Washington, rather. They're worried about being in leadership or worried about being in majority. They're not worried about putting America first. And Trump actually is. I believe he's going to get engaged. I believe that there is going to be some things resolved. I believe Chip Roy and my dear friend Congressman Norman understand that as much as anybody does, and they're worried more about our country's fiscal responsibility, as I am, than our own political futures. And I believe President Trump believes that as well. And I think that's why they'll come together. I tell folks, look, this is like an NBA basketball game. Don't watch the whole game. Just watch the last 2 minutes, and we'll get it worked out.
Well, so does this mean, as we consider President Trump, who you think shares some of these beliefs, that he is asking for too much that would add to this burden, Congressman? Should he not be getting everything he wants when it comes to no tax on tips or overtime, for example?
And do you honestly think people are paying the full tax on tips now, ma'am? No, I believe that President Trump wants fiscal responsibility. He's a businessman. He understands just because he has money doesn't mean he should spend it. And if he doesn't have it, he knows dadgum good and well he can't spend it. And I believe our side of the aisle, the conservatives, is myself, because I haven't checked off on this plan yet either myself, and they know it. But they're the ones that'll be voting on it in the committee. So, yeah, I think there's room for both. I think we can reduce taxes. Why don't we just reduce the size of government? If we could just go back to under pre-COVID spending levels, ma'am, we could work this out. You can't name me one program that's been, and I'm not pointing you out, but I'm saying America can't name one dadgum program that's been added since COVID that you can't live without. But yet, if we went back under that, we could balance and work this thing out. But we don't have the maturity to do that. We are addicted to our grandchildren's money, and that has got to change, both parties.
Huh. Well, with that said, what's your message to Republicans, many of them from the Northeast, who are looking for a higher SALT cap, Congressman? Can you afford it?
No, I don't think it's fiscally responsible. I think we can probably afford something. It's state and local taxes. All they're asking, New York, New Jersey, California, these Democrat-controlled states, all they're asking the Republican-controlled states that are acting responsible is to supplant their lack of tax dollars. They're going to put another radical program in that costs them money. They're going to tax businesses, drive businesses off, and they're going to ask the responsible Republican-controlled states to bail them out. And that's all the SALT tax does. They should be forced to fix their own dadgum problem within their states and keep their hands off of Tennessee's money. But I suspect there'll be a compromise. We used to say in the Tennessee legislature, everybody's going to be a little unhappy, but at the end, it's going to be okay. And look, we get 95% of what you want. I'd call that a victory, and I think we're on that right path. I think President Trump is engaged with this, and as he usually does, he waits to the end. He sees what everybody wants, and then he tries to figure something out. That is the art of the deal, and that's why he's successful.
It does raise the question, though, Congressman, finally, of timing, knowing that the Treasury has warned Congress needs to pass a debt ceiling increase by mid-July, or we risk running up against the X date, which could create a whole host of potential problems with the rating agencies beyond what they're already warning about. Does that potentially, at this ratings downgrade, though, add fuel to those who don't want to see the debt limit increase by much in the name of fiscal responsibility? What does that do to this entire argument?
It makes it an argument that we need to be more fiscally responsible, which I doubt we, in the long run, we won't. See, a lot of these plans, these tax plans that we had in place were 5, 6 years, some were even almost 10 years down the road before they would be implemented, and that's how they were balancing the budget. And you know good and well that Donald Trump is not going to be the president in 5 or 10 years, and possibly, unfortunately, we might have a Democrat in there, and they're going to do away with everything that we've tried to put in. That's why it's important to make these things permanent and quit with all the double talk. Ma'am, we just cannot spend more money than we take in. That's the bottom line. If we could just get back to some fiscal responsibility, we could do that. And the bonding agencies and all the rating agencies would love that. America would sure love it, because their dollars would go farther and they could be able to save up for that American dream.
Congressman, bring us behind the scenes for a moment. What are you hearing from your colleagues about this budget committee hearing that's set for Sunday night? Will this actually pass? Can we get to rules next week?
I think if we get some agreement, like I said, hold your nose on the SALT thing and get the Medicaid stuff worked out, the waste, abuse, and fraud, and quit listening to I'm glad you all haven't joined in this, but when you're cutting waste, abuse, and fraud and things like Medicaid, that just provides more money for the least amongst us. They ought to be for that, but in fact, they're not, because it pays for all their bogus programs on the left, and they know it, and it pays all those people to come to the polls that aren't going to work, and America's sick of it. Look, if you've got kids or if you're disabled, and you can't work, the program's for you. But if you're not, if you're able-bodied and sitting on the couch and watching watching The View all day, dadgum, you ought to be out getting a job, and you at least ought to qualify for some job training. That's all we're trying to do with this. We're taking the illegals off of this stuff. We can do that, and then agree to hold our nose on something on SALT. I think we can get to that table.
We'll see what The View has to say about that. Congressman, thank you. We'll keep talking about this, I hope. Tim Burchett of Tennessee with us live on Bloomberg. Thank you for the insights. We'll have a lot more coming up as we play all this to our political panel next on Balance of Power on Bloomberg TV and radio.
Well, the noes have it. The committee stands in recess, subject to the call of the chair. I want to thank everybody for their time and patience, and Godspeed and safe travels.
That was Congressman Jody Arrington, chair of the House Budget Committee, seemingly defeated earlier today after his committee failed to move the Republican tax bill forward. Fast forward to this evening and a downgrade from Moody's, and this bill might be in even more trouble than it already was. And joining us now for more reaction to this here on Bloomberg TV and radio is this evening's political panel, Republican strategist Maura Gillespie, founder of BlueStack Strategies, alongside Democratic strategist Jim Kessler, executive vice president for policy at Third Way. Welcome to you both. Maura, of course, you've spent plenty of time in the House, including working for a speaker. I can't imagine that Mike Johnson is feeling very good about what Moody's is saying here, as it specifically talks about fiscal policy proposals under consideration. Did he just lose any chance of being able to negotiate his way to this bill passing this weekend?
It certainly made things a lot harder for Speaker Johnson. You know, I'll remember when Speaker Boehner was working with then former President Obama, trying to hash out some of these budget conversations that are certainly going to keep coming up over the course of these next few days, next weeks, next months. But to think about where the debt is now to where it was even during the Boehner days, it's more than doubled. And Moody's putting this out there certainly does not help Speaker Johnson or the Budget Committee on Sunday as they try to move this bill forward. And I do think that it just adds fuel to the fire for those strongholds who felt very, passionately about not enough cuts being made. And so this is only going to bolster their position, I think, in keeping them from fully supporting it as it currently is written.
Wow. Jim, did the earth just shift under Speaker Mike Johnson's feet?
Yeah, it just did. I mean, this bill was in trouble. Now it's in really serious trouble. The Moody's downgrade, the credit downgrade, it just gives huge impetus to the hardliners, the Freedom Caucus, that really want a dramatically more brutal, harsh bill. It hurts the SALT caucus folks that want bigger deductions for salt. Will they get to something in the end? Like, of course you have to, but this bill is going to have to radically change. The radicals on the right just got a big win.
Wow.
Well, those radicals on the right, though, at least some of them, have a history of changing their votes when the president calls. Do you think that will be the case this time, Jim?
I also think that since April 2nd, Liberation Day, and April 9th, the withdrawal of Liberation Day, we've seen a very diminished president where people are much more willing, both abroad and at home in his GOP caucus, to stand up to the president. And I just don't think he has the power that he did 6 weeks ago.
Wow. Maura, what are the speaker's options right now? As a veteran of another Republican speaker's office, what are the menu of options for Mike Johnson? There are still 11 spending bills out there, right? They could be combined in many different forms over the course of the next couple of weeks.
Absolutely. And one of the things that has not really been explored, at least to my knowledge, in this speakership, is the fact that we know that the bill is going to change no matter what happens, right? It goes to the Senate side, and the Senate has already, many of the members there have talked about that this bill, as it was currently drafted, is dead on arrival when it comes to the Senate. So perhaps then Mike Johnson wants to go ahead and reach out to John Thune and say, what are some of those changes that are going to be made? Because if you're going to ask the president to come in and strong-arm those members to pass his agenda, because that's what this bill is. This one big, beautiful bill is Trump's agenda. This is what the president wants. It's in there. And so Speaker Johnson may want to go and talk to Thune and say, how do we get this across the finish line for the president? What are some things that we need to be doing? And I think until this point, maybe those conversations haven't happened because the House really felt strongly about taking this on their own. But now I do think it's time that they make those outreach efforts. I also think, with the president's talking about different things that are going to be so costly, again, with the Alcatraz, maybe that's not the best idea, spending millions to create Alcatraz. Maybe you don't accept a foreign gift of a plane that's going to have to be taken apart piece by piece and then reconstructed, costing another millions and millions of dollars. So there are some conversations that need to be had in the Republican flank to streamline the messaging on cost savings, not cost adds.
Well, I have been checking Twitter since this downgrade hit, waiting for those Republicans who shot down this bill in the Budget Committee today to chime in to make the point that Moody's is helping them make their argument. And the first one just hit from Congressman Ralph Norman, saying on X, Moody's just stripped America of its last AAA credit rating. This is Exhibit A for why we need budget hawks in Congress, runaway deficits, reckless spending, and no serious plan to fix it. Stay tuned to see if Chip Roy and others follow this one. But to the point that Maura was just making about how this could change in the Senate, where you have obviously vast experience, Jim, does this actually, though, make it less likely that the Senate is going to try to roll back dramatically cuts to Medicaid or the rollback of subsidies in the Inflation Reduction Act because they need to make sure the price tag is not too high? Does Moody's also make this harder for the Senate?
Well, here's the question. Do you want to give an $80,000 tax break to blue state families through SALT deduction so that you can hurt red state working class people by taking away their Medicaid? So this just makes the situation that much harder. And look, I've seen this happen before. This happened in 1993 with Bill Clinton when he radically changed the reconciliation bill because the bond traders out there were saying, we've got a problem here. You need a very, very different bill.
So what change do you make? Can we be specific? Is there anything that Speaker Johnson could change that would be palatable to this conference?
Well,
you're going to upset one end or the other.
I'm going to take one of Donald Trump's ideas and say they should do it. People with incomes over $400,000, $500,000 should not continue to get the tax break that they
millionaire's
got.
Tax.
The millionaire's tax, and probably down to $400,000. Like, it is ridiculous that we're doing this right now. And look, I disagree with a lot of the Republicans on how you need to get this budget closer to order, but like, we have a massive mismatch between revenue and spending here. And frankly, I think more of the problem's on the revenue side, but some of it is on the spending side, and we've got to raise more revenue, and yeah, we've got to do something on spending.
Well, does raising more revenue, Maura, perhaps put shine a more positive light on the president's current tariff policy that he's arguing is bringing more money into U.S. coffers? I just wonder how you view the other kind of pursuits of this administration factoring into this whole equation, in addition to what they want on tax policy.
If I were in the Trump White House, I would certainly tout that and point out how they are trying to bring in more revenue for the United States and for American companies and for our GDP, and looking at those tariff policies and talking about how they try to make things more fair and making sure that America is not at a disadvantage when it comes to our trading partners. Again, I have said several times about how to go about that from the get-go. I do think that there was a diplomacy element that was severely lacking, but at this current stage, it's an opportunity to leverage those that have already been secured, but it could also call into jeopardy some of the ones that are outstanding because of America, this decision, and also the budget deal kind of faltering here. They may be at a less strong position to negotiate with our allies and trading partners. So again, from a messaging perspective, I would certainly bring this up if I were the Trump team, but also as those economic advisors, they need to be thinking through, okay, what is plan B, C, and D?
Jim, we just heard from your former boss, a statement from Chuck Schumer. Moody's downgrade of the U.S. credit rating should be a wake-up call, he says, to Trump and congressional Republicans to end their reckless pursuit of their deficit-busting tax giveaway. Now, all of a sudden, Chuck Schumer has Moody's behind him. Does he engage right now with Speaker Johnson or pop the corn and watch?
I think they're going to pop the corn and watch. I mean, a reconciliation bill is there for a reason. It's there so that you don't need Democrats in this situation. But, look, you're watching the president. He has retreated on tariffs. He's retreated with Ukraine. We're seeing you could see some retreating right here, too. Like, this is the place where he is scaling back. And I think that's a good thing, frankly. But this is a wake-up call, and you're not going to get it on time. You're not going to get it by taxing people going to Walmart. Like, that's not how we're going to make up this deficit.
Great conversation with Jim Kessler and Maura Gillespie. Thank you both so much for a great panel on a breaking news evening here in Washington.
And of course, it's going to be a working weekend in Washington as well as the Republicans try to get their heads together on the budget reconciliation package. This Moody's downgrade making that all the more complicated. And we'll have fresh coverage for you on Monday here on Balance of Power on Bloomberg TV and radio.
This has not been a great time for genius. The people who claim to have it do not seem to qualify for it. The people who diagnose it others seem to have a very, very narrow definition in mind. And the people we can all agree are stone-cold geniuses always seem to have a dark side. I read in Bloomberg Businessweek about the biggest crypto genius of them all, Sam Bankman-Fried. At his peak, he was worth like $26 billion. And that was before he was accused of running one of the biggest frauds in American history. His defense is that he is not a criminal, essentially, just inept. What does it mean to have genius in work, in the marketplace, in life? And who is even to say? To make anything simple takes actual genius, and we're going to try to live up to that name together tonight. It's the Business Week Show. Hello, I am Max Abelson, and I'm not a genius, just a regular, like slightly above average journalist who has spent about the last decade and a half here at Bloomberg News, and sometimes our magazine, Bloomberg Businessweek, writing about Wall Street's money and power. And what that means is I write about ambition and ownership and imagination and survival and risk and second acts and, of course, genius. Tonight, and in the weeks to come, we are going to be talking about those things at this table with people whose lives and careers and ideas are big or interesting or just really fun. So, welcome. This is the Business Week Show, and it's starting right now. If you consider yourself a master of Wall Street, a connoisseur of investing, a soothsaying financial genius, a brilliant portfolio manager, our guest has very bad news for you. Burt Malkiel's book, A Random Walk Down Wall Street, 50 years ago, had a clear and vivid message, which was that Wall Street genius is really just an illusion, and that professionals in pinstripe suits at the end of the day are no better than naked animals. It was a genius and radical idea, because what he had to say is that you should forget them and just buy and hold clear, boring, basic, low-cost index funds. He is here to tell us about it. Burt Malkiel, welcome to the show.
Thank you very much. Glad to be here.
Your book is actually, it's pretty funny. It's a little saucy sometimes, your book. I mean, you say no one in finance can really forecast the future, or at least they can't do it successfully, consistently. You know, I think you use the word genius in quotation marks, and you give it to Ponzi schemers and whatnot. Right now, are there any actual individual geniuses on Wall Street? You know, real human geniuses, maybe AI is a genius we've been all waiting for. Can you identify any current geniuses on Wall Street right now?
Well, as you know, I put genius in quotes because I'm not sure there are geniuses in the market. And I've always said I would much rather be lucky than smart. Are there some hedge fund people who have, in fact, made a lot of money? George Soros bet against the British pound and made a lot of money. There were people who sold short in 2000 and made a lot of money. But I am not willing to say that they were geniuses. I want to say that they were lucky, because for every one of them, there was a hedge fund that in fact lost money. No, I don't think there are geniuses. I think there are a lot of very smart people in Wall Street, but it is not possible to predict the future. And, you know, it's kind of very interesting how you talk about AI. I recently had to give a presentation on the economic outlook. And I thought, you know, just for kicks, I will go to ChatGPT and I will ask, can you give me an outline of what I should say? And actually, ChatGPT gave me a wonderful answer. It was a one-sentence answer. I cannot predict the future.
It might not necessarily qualify as genius, but you're able to write about Wall Street with clarity, which is really unusual because Wall Street, and I suffer from this myself, you speak to Wall Street executives and they absolutely fetishize complexity. Why does Wall Street like to make things sound so complicated? Is there something sinister or something that has to do with the ego?
Whether it's sinister, but this is a very highly paid profession. And someone like me who says, listen, don't listen to anybody. Just buy a simple index fund and keep on investing period after period. If I'm charging you 2% a year to manage your money, I want you to think you can't do it yourself. So sure, you've got a vested interest. This is a very highly paid profession. And these guys do very, very well. Is that sinister? I don't know. You call it sinister, anything you want, but is there an incentive to make it seem like it's very complicated, that ordinary people can't do it themselves? I think that's absolutely right.
The honest truth is, it's not necessarily that I think that the aura of complexity on Wall Street is coming from a sinister place. More like it makes me feel bad or makes me feel dumb, and that I appreciate that your book is sort of written so that I can understand it. But it does make me think about exclusion in a small way, because so many stocks are owned by so few people in this country, because the very wealthiest people in America have such giant portfolios, that when the stock market goes up, inequality goes up too. Is there anything that can be done to change that in the future?
One of the things that's impressed me throughout my life is really how capable so many people are. And I think to the extent that we can eliminate discrimination, I mean, for example, opening up our jobs, our economic opportunities to women has been a very good thing, and I think has been generally helpful for women. I think it's the same sort of thing in terms of racial discrimination. I am absolutely convinced that rather than there being just a small coterie of geniuses, that intelligence is very widely distributed in our population. And so my own sense would be the more we can do with education, the better.
Why is it that we need geniuses, or really just the concept of genius? Is it like the way we need heroes and heroism, to help just explain the world and justify?
I think we need innovators, and I'm not saying that innovation isn't good. We absolutely do, but I'm not going to call them geniuses. And Jack Bogle would certainly have never have called himself a genius. But I think we do need innovators. There will undoubtedly be financial products that are actually good for one. I'm not a fan of Bitcoin. I don't think, I don't recommend that any investor buy it. But will there be improvements in the payment system in the future? And will there be digital currencies in the future that are stable and that are useful, as opposed to something that goes up $1,000 or down $1,000 in a day? Absolutely. And there's room for much more innovation in finance. So I think there will be innovation. There should be innovation. I just wouldn't call it genius.
That was great. Burt Malkiel, thank you so much.
Thank you so much. I really enjoyed our conversation.
Stay tuned, because next we have a very far-out genius. There is no one way to be a genius. You could be dreamy and far out. You could be scrupulous and scientific. You could work within the institutional establishment, or you could honor indigenous wisdom. All of those descriptions apply to this guest. Moraba Jah is a space environmentalist, an astrodynamicist, a spacecraft navigator, and the first African-American professor of aerospace engineering at the University of Texas. Last year, the MacArthur Foundation gave him a fellowship that is informally known as a Genius Grant. So, if you want, you could call him a genius, you could call him Professor Jah, but you'd rather you call him Moraba. So, Moraba, welcome.
Great to be here, my brother. Thank you so much.
Really glad to have you. I really love the phrase, a stroke of genius. You were in Alaska with your family in a hotel one morning. I think you were taking a shower.
Yeah.
And you had this feeling and this vision that kind of struck you. And you know, whether or not it has anything at all to do with genius. Tell us about that moment.
You know, I'm in the shower, and I felt a presence. And in my mind's eye, I saw flashes of scenes from like history and how in the beginning, whatever that means, it seems like there was this intergenerational contract of stewardship with the planet, but that humanity over time has mostly abandoned that intergenerational contract of stewardship and has forgotten about how interconnected things are.
Did that moment change the life you led and the work that you do?
Absolutely. So one of the people that I really look up to is Jane Goodall. I watched something about Jane where she said that she went to a meeting as a scientist and she left that meeting an activist. In very similar ways, I went to Anchorage kind of just this scientist, and I came back both a scientist and now this space environmentalist activist to really try to, I guess, really showcase how we need to protect orbital space.
If there's a kind of genius that means something to you, something that you would want to live up to, or something you'd want to recognize in yourself, what would that kind of genius like actually look like?
To me, the best kind of genius is simply allowing myself to let the universe go through me and, I guess, use me as some sort of vehicle for the work that I'm trying to do. And if I can keep myself kind of in the moment and in a place of compassion and empathy, then I think genius is just what comes through when you allow that to happen.
There's more garbage orbiting the Earth than there are working satellites. You now work not just to make sure that all that stuff is properly tracked, but to be an evangelist for expanding the way we think about environmental protection so that it includes all that stuff. What can those of us who are not scientists, what can we do to help you?
Every day, the technologies that we have are more and more reliant on these robots in the space that we call satellites. And we're tracking about 50,000 things ranging in size from a cell phone to the space station. 5,000 are working and everything else is garbage. So that's like 90% of the stuff is trash. The thing that most people just don't realize is that these satellites that are providing these critical services and capabilities, position, navigation, timing, communications, internet with the Starlink satellites, right? Any of these things can get schwacked, that's the technical term, get schwacked by a piece of junk, and that's game over, and then you lose that capability. So I think more and more people just need to be aware that, oh, well, that space, that's somebody else's problem. No, it's our problem because our way of life, our technology is now going through this infrastructure.
There's a real stereotypical idea of genius that I'm thinking of a kind of solitary genius working by herself or himself off in a fun cabin, you know? What does it mean? What would it mean to be a genius collaborator?
Back in the times of like the Renaissance, people looked at folks like, Da Vinci, Michelangelo, and they said, okay, these are geniuses in their own right, right? And people say, well, how can anybody be like another one of those? Science has developed so much beyond those days that there's no way for somebody to be able to be, quote unquote, this Renaissance person that knows very deeply things in all these different fields. Like, those days are gone, okay? But to me, the real genius is recognizing where you bring in smart people from other fields that complement and augment your own to solve wicked problems.
Yeah, connectedness, connections with one another. But my understanding, though, from reading a little bit of your writing, is that you were, I think in your childhood, you felt really isolated.
I did, yeah. My mom was born in Haiti, and she was naturalized citizen. My father, Sierra Leone, naturalized citizen. They got divorced when I was very young, and my father was just very abusive. So at the age of 7, he kidnapped me, and 9 days later, they found me in some apartment in the Bay Area, put me back on a plane to my mom, and my mom had, we had a cousin that lived in Caracas, and so we fled the country because my mom's like, I don't want your father to ever find you again. He never did physically again. But growing up in Venezuela, I felt very isolated. I felt very alone. I came into contact in this void with what seemed to feel like an ocean of infinite love and compassion. And then I realized, I have a choice here. I can choose to meet my experiences with equal anger, or I can choose to act from a place of love and compassion and heal from my pain and make my healing be of service to others. And that's what I've chosen to do.
When the MacArthur Foundation, when they named you a fellow, they said it was because, they used a beautiful phrase, it's because you envision transparent and collaborative solutions for the Earth's orbital spheres. What are those solutions? And maybe when are they coming?
My inspiration for this comes from indigenous people, from traditional ecological knowledge, TEK, I call it ancient tech. And so for me, the vision of my future is seeing Western science and traditional ecological knowledge come together, not annihilate each other, but actually harmonize with each other, so that then that could be the way of the future, so that humanity does recognize interconnectedness, empathy, and stewardship.
Thank you so much for being here and sharing your story and sharing yourself.
Thank you, brother.
Truly enjoyed it.
Thank you.
Coming up next, a genius I would like to be when I grow up. Getting older is not easy, but the good news is time brings opportunities to become a more practiced, a more seasoned, a more you version of you. The guest who's sitting with me at this table is one of the most accomplished people I've ever met, and she is 17 years old. In 2021, Zaila Avantgarde won the Scripps National Spelling Bee. But She considers herself not so much a speller as a basketball player, and she has multiple Guinness World Records in juggling. A few weeks ago, this young genius started the 11th grade. Zaila, so glad you're here.
Thanks for having me.
Truth is, we're all super different. We all have our own gifts. We all have our own limitations. When and how did you come to realize how special you are?
So that's a complicated question, I would say, because I didn't so much realize, I realized I was special, but I became special through a process of like training and stuff. If you look back on it, like I wouldn't say I popped out the womb like a genius or something like that. It's like when people would start to stop and look at me while I was dribbling or practicing at a court, people like stop and look because, hey, look at this cute little girl. I was very small when I was that age. So this cute little girl dribbling 2 balls and doing all this between the legs, step backs into shots and stuff. So pretty early on, I realized that, yeah, I might be a little bit different than the average kid.
You won this like completely beloved national competition, but it's something that I think you no longer consider your main passion, or maybe you didn't even consider it your main passion then. What does basketball make you feel that spelling doesn't?
I would say basketball gives me even more of like the competitive rush. Like I just really love to compete and stuff. So like, and like spelling is more like, yes, it's not really like person-to-person competition. It's more like person versus dictionary, which is something you hear a lot from spelling bee people. It's like it's me versus the dictionary, because that's where the words are coming from. Whereas with basketball, it's more like physical competition. Like, oh, I made it between the legs, and there's this girl on me, and I have to shield her off. And it's like more tangible competition, as opposed to the more philosophical competition of spelling.
I want to ask you about a very different kind of genius. There's this billionaire named Sam Bankman-Fried. Think you've heard of him?
Of course.
Widely considered to be the world's, great crypto genius before he was then charged with fraud, which he has denied. How should the rest of us look at people who get called geniuses, but maybe they still have shortcomings, just like everybody else?
Sometimes I feel like the term genius is like nowadays it's so loaded. Like maybe it's like, oh, it doesn't just mean, oh, look at her, she's a genius, like she's so smart or whatever. But like then like if you're labeled with that like your whole life, that kind of like puts a pressure on you. Like maybe once upon a time, like I listened to a podcast about Sam Bankman-Fried, but I don't know him personally, so I can't speak for him. But hypothetically, like he's like his parents are like, oh my God, you're so smart. He goes to accelerated programs in school, and that's just putting pressure from a very early age. Like I'm a genius. I have to be a genius. I have to always be a genius. So I always feel like people like some of the scammers and stuff should get maybe just a little bit of sympathy, just a little bit, because they are like causing all sorts of trouble because like they've been considered geniuses their whole life and they had a nice business plan or something, but then it didn't work out. And so what are they supposed to do? Go to all these people who say, oh, you're a genius. That just puts a little pressure on you to like give you that extra push you needed to try to maybe go into the murky waters of life.
The murky waters of life. I want to ask you one final question about pressure. I think that there is sometimes pressure in the United States, maybe everywhere, pressure on really smart people, genius or otherwise, to use their intelligence to like make a lot of money, to be successful. And like, I guess I'm thinking specifically about the finance industry and mathematicians, but it's true of the business world. You're smart, you go make money in business. Do you have a favorite company or an industry or like a job that appeals to you?
I mean, I'm not like super like make millions of dollars. I mean, if anybody who's watching or listening wants to give me millions of dollars, please hit me up. How